confidence that Blackstone have in this new administration, this new government. So we're working with them to make sure the environment is right for that investment. It will require us to fast track what we need to do on planning, on skills, etc. But that's something that we're very happy to fast track, because I think across the board we need to do that. But it's a big signal of confidence, if you like, in this new government, a big signal of confidence in the UK as the place to invest now. It's a big investment. It's also in the northeast of England, which is matters to us, because I want economic growth.
Outside of London.
I want it across the whole of the United Kingdom. I don't want to put London and South East down. London is it's a powerhouse for our economy, and I don't want to do anything that takes away from that. But I want to see the growth elsewhere in the country.
If there were three big industries that you'd want to attract to the UK, they would be what?
Well, renewables, I think, is hugely important.
And they're going to play a role in the data center as well.
They're going to play a role. Data and AI in its own right and underpinning. And then other sectors, life sciences, for example, is something we're very strong in. I don't want to pick winners, but certainly we are.
Jew Le Parfum, the new fragrance by Jimmy Jew.
Jimmy Jew. Dooley, be back someday. Dooley, 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 pay back someday, back someday, yeah. The Dillards, Dooley.
Endorsement that tells you a lot about things, but that's kind of been let go. People were calling this offensive for Starmer meeting with everybody.
We will show you a little bit of that and more of this conversation in just a little bit. Squawk Box returning in just a moment.
Endorsement that tells you a lot about things, but that's kind of been let go. People were calling this offensive for Starmer meeting with everybody.
We will show you a little bit of that and more of this conversation in just a little bit. Squawk Box returning in just a moment.
Dooley, clip dollar, Dooley, trying to give a holla. Oh, I see an inverse head and shoulders. Come on, dick. Why does it do that to me? I'm gonna brighten it sucker up.
Shares of Costco are lower. Earnings came in at $5.29 a share. That beat estimates of $5.08, but revenue of $79.7 million expectations, and comp sales were up by 5.4%. That was short of the 5.7% the street was looking for. That stock right now down by about 1.25%. When we come back, we're going to get a first-hand look at housing demand from Robert Refkin. He's
Yellow's
the
not
founder
going to
and
cut the cake
CEO
either, so it's going to
of
have
real
to be
estate
blue.
firm Compass. Squawk Box will be right back.
Yeah. Make it look thicker, baby. Oh, I should have put the save on that. Okay, it's time for me to boogie. I wish everybody a good day today. Make sure you get your hormones checked. Dooley, trying to pick a dollar, Dooley. Pay back someday, yeah. Okay.
China.
China.
It is just about 7 a.m. right now on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Sorkin along with Joe Kernan and Becky Quick this morning. There's a lot going on this Friday morning. Among the top stories to tell you about: Wall Street counting down the release of the latest consumer inflation data, the first since the 50 basis point cut by the Fed last week. August PCE prices expected to ease from a year ago, with core prices expected to hold steady near 2.6% year over year. And DirecTV and Dish, they're in merger talks once again to create one of the nation's largest pay TV providers. The Wall Street Journal reporting a deal could be announced as soon as Monday. It would also include Dish's streaming brand Sling TV. And Dell is telling its global sales teams that those who are able to work from home should do so 5 days a week, according to a memo seen by Reuters. The company saying, quote, working remotely should be the exception rather than the routine. Sales teams were previously required to work from the office or in the field with clients 3 days a week. Meantime, mortgage rates dipping now to a 2-year low this week, and that is giving potential home buyers more spending power. What's it doing to prices? We're going to talk about it. Join us right now with more on the demand of the real estate market. Robert Refkin, founder and CEO of Compass. Good morning to you, Robert. It's been a tough year or two in terms of, or maybe more than that now, 3. But how much is this really impacting things, and how do you see it going over the next 12 months?
Yeah, and Andrew, we have a very unique perspective. We're the largest brokerage firm by sold volume in the country. We now have 35,000 agents. And at Compass, our in-contract listings are up 20% year over year. And so we definitely see that the lower mortgage rates are bringing the buyers back.
And in terms of, as you go around the country, is there certain cities where this is making a material difference? And how much of a difference have you seen even in the last month?
Well, it started about, I'd say, 2.5 weeks ago, right after Labor Day. We didn't see much activity over the summer when mortgage rates were coming down. But at this level, I think that buyers are definitely much more active than they were before. We particularly see the activity in the tech hubs. A little less activity in the South, a little less activity in Florida. But overall, there are more open houses. We have open house traffic up 18% year over year.
Yeah, I will say, just anecdotally speaking, I was surprised driving through a bunch of towns in North Jersey yesterday that actually had for sale signs where there was no inventory before. But the weird thing is, if you look at what's happening to the 10-year, the 10-year yield has been rising since the Fed cut rates. The 2-year they've got under control. The 10-year's been rising, and mortgage rates are based off of that. So what's the rate that is really important, and do you anticipate that rates will continue to come down?
I mean, the dream rate is 5.999. If we get at 5.99, that headline for a few months would
Where's
bring
it right now? 6 point what?
6.21.
Okay.
Yeah, but it's the lowest that it's been in over 18 months. And consumers react more to the change in the mortgage rate than the absolute rate itself. And remember, last year was 8.2, so buyers now know not to take 6.2 for granted.
Hey, Robert, is your sense, well, actually, let me ask you this. Are more of your buyers taking 30-year fixed mortgages, 15-year fixed? Are they doing 10 years? Are they doing 7 years? Are they doing ARMs, 5-year? What's going on?
30-year is still the most prevalent, but what the biggest trend has been over the last year is the percentage of all cash buyers. We have more all cash buyers in the luxury market than any point in the last 10 years.
And how much of that, though, do you think is it? So these are not first-time buyers, and how many people are selling their property to buy the next?
So the issue that we've had over the last 2 years is the lock-in effect. 75% of homeowners were locked into 4% mortgage rates or below about 2.5 years ago. Now it's approaching 50%. So the issue should be gone in the next 2 years for all intents and purposes. But that has prevented people from selling because they value that low rate so much. And that's why if you get to 5.99, 4 to 5.99, that's not as much of a big deal compared to 4 to 8.2, which was last fall.
And sellers, I was going to say, never want to take a loss. But given this interesting sort of mortgage dynamic, when people are trying to move, maybe they're trying to move for a new job, and there's, by the way, I think that's also, this lock-in effect you're talking about has prevented some of that. Is that easing up a little bit, and has the psychology changed around that?
Well, the context of the market right now is the lowest level of transactions since 1995 for now 2 years in a row. So 4 million homes sold last year. It'll be 4 million again this year. Again, lowest level since 1995, and the population is 26% bigger today than it was back then. We are seeing more inventory. Inventory is up 23% year over year. I expect it to continue to grow as mortgage rates come down and the lock-in effect winds down. But we still have 25% less inventory than we did this time in 2019, in the pre-pandemic period.
Robert Refkin, the founder and CEO of Compass, and I always love talking to you because I always remember when you first came on the broadcast a long, long time ago, far before this company was ever public. I think he used to be the chief of staff to Gary Cohn at Goldman Sachs many, many, many moons ago. So it's great to see your success. Thanks.
Great to see you.
All right, let's take a look at the futures this morning. Right now, things are relatively flat. You've got the Dow up by a few points, the S&P down by a few points. You've got the NASDAQ off by about 30, but it has been a heck of a week. Let's get over to Dom Chu. He's got a look at this morning's pre-market movers and what's happening beneath the surface. Yesterday, another high for the S&P 500, Dom.
Yeah, I mean, it's been an interesting market dynamic right now, even with all of the earnings reports that we've seen and everything else developing with the market and, of course, the economic data coming out later on this morning. But let's start things off on our morning movers with one key analyst note that's getting some attention this morning, and that's HP. Those shares are lower just by down maybe a couple percent. After Bank of America downgraded that stock to from a buy to a neutral, the firm estimates that any EPS growth will come solely from share buybacks, and potential upside from those PC sales will be offset by lower printer margins. So HP Inc. down about a couple percent on that particular note. Meanwhile, Bristol Myers Squibb is climbing this morning. The shares are up at just about maybe 6% or so, 5.5% after the Food and Drug Administration approved the company's highly anticipated schizophrenia drug. This is the first new type of treatment for the chronic mental disorder in more than 7 decades. The twice-daily pill will be sold under the name Cobenfy and is expected to be available in late October, so those shares gaining on that particular bit of news. And we'll end with a check on Trump Media and Technology. That stock is down just about 0.5% right now. One of the company's major shareholders cut nearly its entire stake in the company. That was in a regulatory filing, showed that United Atlantic Ventures sold around 11 million shares weeks after a federal judge cleared the way for that particular transaction. That move left UAV with just under 100 shares in Trump Media and Technology. UAV was run by one of the co-founders of DJT, so it's something to kind of keep an eye on. Becky, I'll send things back over to you guys.
Okay, Dom, thank you. We'll be checking in with you in just a little bit.
And coming up, a closer look at this week's decline of nearly 6% in crude prices. S&P Global's Dan Yergin is going to join us. Straight ahead then later, Senator Cynthia Lummis talks crypto regulation, taxes, and much more. Squawk Box going right back. S&P posting a record high yesterday. Joining us now for a closer look. The 42nd?
It's the 42nd. I was thinking it was the 30th. It's a 42nd all-time closing high for the S&P this year.
If it went up,
How many
if
trading
it went
days
up
do we have
every
this year?
day, it would be like the 200th.
Well, trading days?
Yeah.
Yeah.
If it did. How many?
How many trading days have we had since then? I'm not figuring that out.
Alicia's here. Alicia Levine. I'm going to give her a chance to adjust her S&P target. She's head of investment strategy and equities at BNY. And you're at 5,700,
We are.
but you expect the market to move higher.
Yes.
If liquidity, you know it's at 57.45.
Oh, I do know that. I do know that. Look,
Okay, this is where you can do it.
This
How about 50? Do I hear 58?
so I would expect the market to move higher into the end of the year. I'm not going to
Really?
put a price target on it.
Why not?
We moved our price target 3 times this year already, and we were actually pretty high coming into the year. So we've been bullish for about 2 years now. We got rid of our recession call about 18 months ago, raised our earnings target for the S&P, and with that we raised our year-end targets pretty high. We came in bullish. I'll say the resiliency of the market this year, we're up 20% year to date.
Right.
As you said, 42 new highs of the year. I think the resiliency has been the most surprising thing in the market. If you think about this year so far, we've had 2 hot wars that are kind of being fought to stalemate. We've got Houthis lobbing missiles in the Red Sea. We had
oil's down.
oil's down, and we had a resurgence of inflation in the first quarter that caused a little bit of a bond market issue, but it did not cause an issue in the equity market. And so here we are, up 20% year to date, and we're kind of tracking last year's up 25%. If you look at it, it's kind of it's a two-peat, it's a twin peat. Like it's looking pretty similar.
I thought you were saying I wear a toupee. Didn't you think she was saying
I would
that?
never say-
that's
I'm
not
really
what I
sensitive
wear.
when people say that.
I would never say
It makes
that.
me think that my actual hair is so bad that it looks like a toupee.
It's
I mean,
like
that's
when
not
people
good
tell
for
you,
them.
you look much better in person than
Yeah,
you
they do. They go,
Which
wow,
one is
you're much fatter. No, they don't say that. I don't know if you saw David Tepper, but
I
one of
did.
your reason for being so bullish, with the Fed cutting into a soft landing, which is a little weird, I think in itself. It's like the Fed cutting into a strong economy. I'm not sure why, but that's not here or there. You do think 240 basis points is not going to happen, even though that's baked
Right.
in. But Tepper, in talking about the China stimulus, you say it's bullish for equities here. He almost said it's bullish for equities there because here we're already at 21 or 22 times earnings. He has a valuation problem, not a terrible problem, but doesn't think the U.S. is as attractive as some other places. Do you go around the world, or are you mostly here?
So we go around the world, and that was a great interview, by the way. So he's right that it's very bullish for Asia, but we're allocated, overweight to U.S. large cap. And if you think about the fact that the S&P is 40% revenues from overseas, this is bullish for the global economy, right? Because it puts a floor on some of the consumer stocks. It puts a floor on kind of the areas of the world that were looking kind of stagflationary. So we think it's bullish. We don't trade. And so ultimately the emerging markets trade or the China trade is exactly that. We have taxable clients, so we take a really strategic view of where growth is, and it's in the U.S. The China investment thesis also has to rely on confidence on their capital markets and shareholder protections,
and that they don't
exist.
invade Taiwan.
And that they don't invade Taiwan, and I'm not willing to make that bet.
Right.
I'm willing to say it's better for developed economies globally. It's great for Europe, and it's great for Asia.
And you're not afraid of tech either, because it's outperformed. What you say? How many out of the last 15 years it only has underperformed twice?
And one of those years it underperformed the S&P by 1%. The real year that it underperformed was 2022, which is exactly when you would expect, because you have we had 9% inflation. We had the Fed about to come in and raise rates really high to get rid of that 9% inflation. So that makes sense. If you look at the cash flow and the margins, it's impossible to dethrone tech, even with the CapEx spend that we're seeing right now. So it had a hiccup this summer because of the second quarter earnings and the CapEx spend, but it hasn't actually made a dent in the comparison between where the margins and cash flow are in the market for the large cap tech versus everything else.
Even though it's richer than most sectors, but you still think, with that in mind, Short term, you still think that's where the place to be.
We're still there. We're still U.S. large cap.
But it is rich. in value.
It's definitely rich. Not all of the companies are rich, but it's rich for a reason. And I think there's a new regime here. I hate saying it's different this time, but if you just look progressively each decade of where the cash flow is coming from, it's really located in these companies. So that's what we like. But also, look, the stimulus, the Fed cutting, the China stimulus, and oil, having reached $65 a barrel 2 weeks ago, is also bullish for cyclicals. So we're seeing, financials look great, cyclicals look great, industrials are holding in there. So we just think it's going to be something of a melt-up situation here.
One more chance. You'll raise your S&P. You're at 5,700. We're at 5,745. You're already behind. You're bullish. Do I hear 58? 57.7. Nothing? No. You're not doing it.
I'll talk to my clients first, and then I'll come back.
Oh, well, that's nice.
You're not going to find out.
That's nice. All right.
And can I just say, I did the math on this. So 185 and a half trading days. So it's a good guess. There's 252 total, but so far we've done 185. There's been 42 new highs now for the S&P 500. That means 22.6% of the trading days.
Right.
Well, too high.
So you need to figure, if you're up 20% in September, is that more or less than normal? That sounds about right for how many highs you.
Well, September's been unusually strong after that first week, which
especially with October.
Right. So we have October. It'll be interesting. It's an election year. It's a time to get some volatility, kind of reset a little bit. But we think we rally right into the end of the year here.
Thanks, Alicia.
Thank you.
Coming up next right here on Squawk Box, oil prices sliding this week on expectations of higher supplies. Dan Jurgen's going to join us next when Squawk Box returns after this.
Time now for today's Aflac Trivia question. What U.S.-based company employs the most people globally? The answer when Squawk Box returns. The answer to today's Aflac trivia question. What U.S.-based company employs the most people globally? The answer? Walmart, with more than 2.1 million people.
Crude prices sliding this week, dipping below that $68 level as the market focuses on expectation of higher supplies coming from Saudi Arabia and other OPEC nations. Joining us right now is Dan Yergin. He's S&P Global Vice Chairman. And Dan, I have to say, it's kind of stunning to see WTI below $70 a barrel when you've got all of these hot spots in the Middle East, and when you have China trying to do its best to stimulate demand this week. I'm shocked at the direction of oil prices.
Well, they certainly have come down, and it has been dominated by, in fact, the weakness in the Chinese economy, and this the interest rate cuts and the liquidity are just beginning. But it is amazing to see that you have this kind of geopolitical turmoil. War doesn't affect the price, and that's because there's been no disruption. There's still over 5 million barrels a day of shut-in capacity in the Middle East.
Do you not worry about disruption yourself?
Oh, I do. I mean, as we see this war progress on the northern front in Israel and Lebanon, if it somehow involved Iran, involved the Gulf, and there was a disruption, we'd see it change quickly. But I think the difference now is that the oil market doesn't preemptively price in risk. It looks to see if actually there is a disruption.
Does that make sense to you?
I think it does, because that's the experience really since 2019. And I think the other big change is that you have this huge cushion called U.S. production that wasn't there in the past.
That adds up to a lot of pressure for the Saudis, probably in particular. How do they feel about oil falling below $70?
Well, of course, Brent hasn't fallen below 70 yet, but I think
Yeah.
you know, we've seen that they were defending 100. I think that was the price that the IMF came up with. But I think the Saudis are very focused, as the other producers, on not having that Brent price go below $70, and that's why I think some of the statements that the Saudis put out this weekend, telling other people who belong to OPEC Plus, you better comply, because otherwise we can put more oil into the market too.
Would they do that? It's amazing to think of OPEC turning against itself. It always used to be OPEC would put pressure on U.S. and other producers. Now OPEC's going to put pressure on itself?
Well, on OPEC Plus, on these countries that are overproducing, the Saudis say, we've made these voluntary cuts, you're overproducing. And they're still saying that that OPEC Plus is going to start putting oil back in the market actually in December, but I think that will be very much governed by what's happening with market conditions.
I mean, not that you are a geopolitical expert, but when you look at the region, I mean, it's something you know well, it's something you've studied, because it does have major impacts on prices for fossil fuels. What do you think? What do you think is held off at this point? How do you figure it out? Because we're asking everybody this, from
Right.
the UN guests who have been here all this week too. What is this different this time with the Israeli conflict?
Well, I think it is different. Obviously, Gaza was a thing that they were not prepared for. They've been very prepared for conflict with Hezbollah, which after all is the crown jewel for Iran. And I think that one message that's come through is that Iran itself is not ready for a war because it doesn't have the air defense systems to protect itself. And so I think that's something that's kind of holding back. There's no question, though, that this is a highly dangerous situation, and it could change in a day.
Let's talk about what we've seen, not just with China, but with other central banks also cutting rates to try and stimulate demand. How quickly do you think that will pick up? What kind of an impact will that have?
Well, I think that obviously what happened in China, I mean, the thing that's dominated the market is the weakness in China, because China, half the growth in world oil demand over a number of years has simply been in China, and it hasn't been happening. So I think the big question is stimulus, will you see a recovery in China, or is it the shape of demand in China changed? And I think that's what the market is struggling with.
So where do you put oil prices in the next 6 months?
Well, I think that's probably, I mean, I would say, first of all, going back to your question, it really depends what happens geopolitically, because, you know, we're on the edge, and if we fall over, otherwise I think kind of oil prices stay in a kind of above a $70, $80 range, not the $100 that was out there when all those bullish estimates.
Dan, it's really great having you in the studio.
Thank you. Thank you.
Bye-bye.
Thanks.
Coming up the East Coast, in Gulf ports, move more than $2 billion of goods a day. But a looming strike, it could drop an anchor on the supply chain. And we're counting down to August PCE. Released in just over an hour, an important number for the Fed. Don't know if it's going to be interesting today. We'll see. We're hoping it will be. We'll be right back.
50% off.
Welcome back to Squawk Box this morning. The contract between Union Longshoremen and East Gulf Coast port operators expiring October 1st, opening the door for a strike that would impact over $2 billion in daily trade, could have an inflationary effect. And Frank Holland joins us now with more from Bayonne, New Jersey. Good morning.
Hey, good morning to you, Andrew. Let's start with the investor angle. Logistics and air freight stocks are far outperforming this week as we approach the deadline. At midnight on Monday, the International Longshoremen Association says they'll strike if the port operators known as USMX do not offer what they want when it comes to compensation and restrictions on port automation. So right here behind me, we have the Port of New York and New Jersey. It's one of those East and Gulf ports where you see more than $2 billion in goods move every single day. We also spoke with C.H. Robinson, a major freight forwarder on the Asia to U.S. lane. They told me that companies can still realistically get imports and exports out of this port and those other Gulf ports maybe for another day, but then after that, they say it's going to be a race to find alternative routes.
If you've got goods from Europe you need for the holiday season, you're going to want to look at alternatives. Maybe come through Canada, the Canadian Gateway, maybe come through a non-ILA port on the East Coast. There are a couple of small niche ports that fall into that category. You have air freight as an option.
And I spoke to a number of companies. They say creating those alternative routes can be very expensive, sometimes almost twice as expensive. There's also expected to be a big cost to the U.S. economy. Today I spoke with the president of the National Association of Manufacturers on Worldwide Exchange. Their data shows about 2/3 of exports and more than half of import containers, they come through those East and Gulf ports. Jay Timmons says companies, workers, and consumers would be deeply impacted by a strike.
Pharmaceuticals, one of the biggest exports, as well as the products that are needed to be a part of that pharmaceutical supply chain. Autos, if we, if this happens and our ability to export our our products, our auto products, that harms workers in the auto industry as well.
So overall, really broad impacts. Three of the areas expected to be most impacted: auto, pharmaceutical, and aerospace. So there's one kind of looming question in all this. What would a strike mean for the holiday season? Well, it's estimated that more than 80% of holiday goods have already been brought into the U.S. compared to only about 70% that you would see in a normal year. So really the question comes down to how much do we all buy this holiday season, and if retailers and other companies will have to bring in more. So again, a looming question there.
Hey, Frank, so what are retailers, major retailers, doing to prepare for all of this? How much is it costing them to get ahead of it, if you will? And by the way, I should also ask, I'm surprised that 80% of the merchandise is already here, and why that's different than before.
You know, some of it, Andrew, was pulled forward because companies were aware that the negotiations between the ILA and USMX were breaking down a bit. There were some reports about that going all the way back to June. You also have to remember, we've had a number of supply chain shocks in recent years. We've had the pandemic, we've had trade war, we had some labor disruptions on the West Coast ports. So companies in general have shifted a lot of their inventory strategy, maybe not holding as much inventory, but trying to bring it in a little bit sooner.
Okay. Frank Collin, thank you for that report. Appreciate it. Mark your calendar for next week. Meantime, coming up, the rise in chip stocks, plus more of my interview with UK Prime Minister Keir Starmer, who's pursuing investments from America's biggest banks. We'll talk to him about wealth taxes, the Middle East, his meeting with former President Trump, and so much more right after this.
Global chip stocks moving higher this week. Micron sparked a big rally after it said first quarter revenue would top expectations. You saw it play out yesterday across the markets. And joining us right now to talk about this is Ben Reitzes. He is head of technology research at Melius Research. And Ben, let's go through this. I know Micron is not in your world of coverage, but obviously what Micron said had huge implications for a lot of other stocks. What does this tell us about the rest of the tech sector?
Well, the data center is really strong, and they make a very important component of memory called HBM, high bandwidth memory, that is very important for AI, and that's gangbusters, and that's great. And there was some concerns that they maybe were seeing increased competition, more folks getting into that market, and whether they could absorb it, and it looks like it's all systems go. And PCs, though, and smartphones are a little choppy, but they also said some good things about that inventory clearing up next year. So, that was bullish, but, we think that the data center and the stuff that NVIDIA is doing is really the one that keeps shining.
If there's not increased competition, that's great news for Micron. You could say the same thing about NVIDIA, where they don't have increased competition. It's not necessarily good for a lot of the customers of those companies, because it means they're going to be paying a lot for those chips, the ones that they can't get a hold of. How do you game that out? Or is it all of this is fine because AI is so important and there's going to be so much investment in it?
Well, it depends on the component and the workload and whatnot. There's many things people use these chips for, but in the AI world, NVIDIA, it just has the technology, the cadence that people can rely on. They have the software. The time to revenue with NVIDIA is the best in the business. 19 days to revenue, basically. That you know what you're getting and you can set it up and go. So for AI, NVIDIA is the best game in town, really, for enterprises in most of the clouds. But some of the companies are doing their own chips, and so we watch that really carefully. And then on the DRAM and high bandwidth memory side, there's a different cast of characters. So, but it's good to see the data center demand, really ripping, and we're starting to see green shoots in servers too, just regular servers and storage. So those markets could really pick up now.
You have a lot of buy ratings, but you do have a few hold ratings.
Yes.
in your coverage world at this point. Intel, maybe self-explanatory. Cisco and Google. Why Google, maybe in particular?
Well, a lot of people feel compelled to put a buy on Google. We didn't, because we couldn't figure out search. We couldn't figure out what the government's going to do, and we couldn't figure out how AI was going to impact it. And some of the things that we're seeing in Google is that AI-infused search demotes some of the things they previously got paid for. Baidu recently said that AI-infused search was actually hurting their revenue, but they thought it was good for the long term. I don't love that comment. So I think a lot of folks are looking at Google as a black box, not really sure. It's cheap for a reason. We've said we'd like to see a management that cares a little bit more about their stock price.
Meaning what? Cut back on spending in other areas?
Cut back on spending, be serious. One quarter seems like they're cutting, they crush operating margins. Then the next quarter they say they're not so serious, they're going to do some hiring. They really just, you hear from them once a quarter, and it's not consistent, and you're not really sure what's going on there. Plus, with regard to AI, we're not sure if they're a winner or challenged, and there's going to be, search could change. A lot of folks think it won't, but it could change, and so it's cheap, and we don't really. It's a bit of a black box. When Microsoft cares about shareholders, they've got a consistent share buyback plan. They got a consistent message. They're accelerating in the cloud, and you know what you're going to get. Much more recurring revenue. There's a lot of competition out there for companies that are putting up numbers.
Okay, so let me run through your buys. IBM, Apple, Microsoft, Oracle, AMD, NVIDIA. Of all of these, Arista Networks, Broadcom is on there too. Oh, Dell. Of all of those, what's your favorite?
Well, a lot of them have run. A lot of them have crushed, and we pick our spots a little bit. But I'll tell you, NVIDIA is. I know it's a consensus long. I mean, we've been on it for a long time, but the signs we're getting out of Asia and the signs we're getting, into next year and the year after are still really good. So, occasionally you guys have folks on the show who go, this is a bubble, and but when you do the bottoms-up research, you're just like, oh my God, like it's coming.
The numbers are there. It makes
the
sense.
numbers are there, and it's only P to growth is 1. I mean. It's pretty amazing, and then people go, their margins, they can't stay, and then you do the work, and you're like, oh my God, it's going to be in the mid-70s, and like, it's pretty compelling. So yeah, I think you got to buy that one right now.
Ben, thank you. Ben writes us.
Right, coming up, UK Prime Minister Keir Starmer on his pursuit for America's banks to do business overseas. We're coming right back.
Welcome back to Squawk Box this morning. UK Prime Minister Keir Starmer pursuing investments from America's biggest banks and tech giants. While here in New York for the United Nations General Assembly, he met with top executives from Bank of America, Citi, JP Morgan, Carlyle, and Blackstone. I sat down with the Prime Minister and asked him to explain the pitch to the business community.
We now have a Labour government whose number one priority is wealth creation. Now I said that to the Business Roundtable this morning. It's counterintuitive. They don't expect a Labour government to say wealth creation is the number one priority, but it is. Of course we want good public services. Of course we want the NHS, our National Health Service, to work well. But the only way that will happen is if we grow the economy and have wealth creation. So we're a Labour Party that is proud to say that we are pro-business just as much as we're pro-worker.
Prime Minister Starmer expected to lay out his budget plan next month. He's pledged to not increase income or corporate taxes. I asked him, though, about how he thinks about a wealth tax.
Tax has to be fair, and as a broad proposition, those that have got broader shoulders, do understandably and rightly bear a bigger burden of the tax share. But we've got to make sure that we don't inhibit economic growth in the taxes that we put in place. And so that is important in the balance. And what the businesses and investors here were saying to me this morning is this opportunity? Obviously, tax is important in relation to that, but they want to see the other issues up alongside it.
And the other issues are the regulatory environment. You
Yeah.
have an alphabet soup of regulatory agencies, and a lot of people look at that and say it's too much of a burden. Is there something that you're going to do?
Yes, and it's very important because I have, with my discussions with businesses, tell me the inhibitors of investment over and above the instability that we've touched on. And they say to me, planning. It takes too long to build things in the United Kingdom, so we're reforming the planning rules. We've already started on that. They say that the national grid, the way we move energy around the country, is too slow, so we're going to fix that. But they also say, in relation to regulation, that there's too much inconsistency. There's too many agencies that are regulating, and they're not aligned. And we will get to grips with that.
This is from Oxford Economics. They say that almost 2/3 of wealthy investors said they plan to leave the UK within 2 years or shortly if the Labour government moves ahead with plans to get rid of the non-domiciled tax concessions. 67% said they would not have emigrated to Britain in the first place if this were to take place. How should we think about that?
Well, we quite often read these stories and then you dig under them and they're not quite as alarming as they first seem. We will get the balance right, but we are going to change the rules on non-doms because we have to make sure that we've got the tax yield available to take the steps that we need in relation to our public services. So we will take these steps, we will take them in a calculated, careful, balanced way, but I think some of these stories, there are always alarmist stories about what people will do. Sometimes a pinch of salt helps when looking at those stories.
And guys, the story of the growth versus labor and workers, if you will, came to a head in a way this week because earlier this week there was a symbolic vote in the UK. Starmer's Labour Party rejected his plan to cut payments that offset winter fuel costs for pensioners, and that has raised all sorts of new questions about what this policy and program will mean. I asked him about how the business community should think about the resistance from inside his own party.
We inherited an economy which was badly damaged in the UK because of the chopping and changing and the bad decisions of the last government. We then audited the books when we came in and found that £22 billion was unaccounted for in year, and therefore we took the decision to address that this year, not to ignore it, not to walk past it, but to address it. But the purpose in addressing it is to stabilise the economy. And so everything that we are doing, when I say wealth creation, economic growth is our number one priority, that means every decision is taken against that yardstick. Does it help economic growth? My strong view is that economic stability is the foundation for economic growth, and therefore we will stabilise the economy. That means tough decisions. No one wants to change the winter fuel allowance for pensioners, but by doing that we stabilise the economy. For pensioners it means that we can commit to what we call the triple lock, which means that they get more money year on year. But I think for investors, to point of your question, what they can see is a government that's prepared to do the tough decisions to stabilise the economy.
We're going to bring you more of our exclusive interview with the UK Prime Minister in the next hour, including his thoughts on our election here in the US and what's happening in the Middle East right now, Becky.
Andrew, that is not something you hear from either of the candidates we have running here, just in terms of saying, yes, we are going to cut back in some areas. It's not popular, but this is what has to be done. It's kind of been a void this go-around.
And we'll see whether he's able to pull it off. I have to say, I got a lot of calls actually just yesterday as I was talking to some of the CEOs before I did that interview who were in with him, and they were very impressed with his approach. Whether he can keep his party on side to continue to pursue this approach, that's probably the big £22 billion question, I guess, in the case of the UK.
Okay. All right, when we come back, Wyoming Republican Senator Cynthia Lummis will join us to talk crypto, taxes, and much more. Squawk Box will be right back.
Peacock.
This field will not long persist without investor protection or consumer protection. Number two, many of these projects, without prejudging anyone, are tapping into the public's interest to raise money. That's the classic securities sort of protections that you put in place. You can decide to go long or short these projects, but you need the disclosures.
That was SEC Chair Gary Gensler yesterday talking about the need for crypto regulation. Joining us now, Republican Senator from Wyoming, Cynthia Lummis, a proponent of digital asset legislation. I still think, good to see you, and it's great to have you in studio as well, Senator, but I still think that people that are proponents of crypto have to feel good about what's happened in the last 6 months or year, even though the legislation is still not here.
Yeah, we still continue to work for a digital framework here in the United States. The European Union's ahead of us.
Oh, you know what, Senator? We dropped your mic. Let's just pick that up so we can hear what you're saying.
The European Union's ahead of us. They began to regulate very effectively in January of 2023. So we're behind the 8 ball here, and the United States should never let other countries get ahead of us with regard to financial services.
Watching how it's played out has been odd, right? It involves the gentleman we just played a soundbite from, that's Chair Gensler, and almost dragged kicking and screaming after court decisions and then ETFs, et cetera, too, where I thought yesterday he seemed a little bit less hostile to Bitcoin and maybe some of the top tier.
The way he explained it yesterday is that this will not thrive unless it's heavily regulated. Or not heavily regulated, he didn't say, but it won't thrive unless the regulations are set up and the path is clear. I think you would probably agree with that. I think the disconnect has been on who gets to regulate it and what the rules are going to be.
Absolutely, and the Congress needs to regulate this and weigh in. You know, some of the problem has been that the SEC has said, well, we have all the tools we need to regulate it, but the way they've applied them has brought about court cases. Instead of regulating by making clear rules of the road for the industry, they're regulating by enforcement action. And so when they bring enforcement actions with penalties against the industry, and it doesn't have a clear understanding of what it's done
In
wrong.
the default position is that there are bad actors.
Yeah, exactly.
There are, and he does, I thought.
There were a lot of worse actors.
Well, when he's come on, he always seems to conflate some of the firms that are bad actors and maybe offshore, and they're dealing with the digital, but he conflates the digital assets themselves with the bad actors that are, kind of bucket shops that aren't even located here. But it's not the digital. That's like not liking, NASDAQ stocks because there used to be pink sheets all the time. So
you can commit fraud with yachts, with art, with coins, with minerals. It's not the asset itself that is fraudulent.
Do you think he's conflated the two? Don't you think he has?
In some instances, yes, I do. Yeah.
Andrew. No.
Oh, sorry.
Tell me. Okay.
I thought he was waving.
Maybe he was just waving. Hey, Andrew.
That's my bad.
Wave at him. Oh, yes. Look, that's nice.
Yeah.
He wants to stay on no matter what happens in the presidential election. I'm talking about Chair Gensler. You see that? What do you make of that? He loves the job.
No, I don't think that's going to happen. Especially, of course, if Donald Trump is.
But you don't think it would happen under Kamala Harris?
I don't know. Gary Gensler's view of trying to keep control of so much about digital assets, characterizing them as securities and all the companies that deal with them as securities, doesn't recognize adequately that Bitcoin's a commodity, Ethereum's a commodity, and perhaps other digital assets are. We need to have a clear definition. The Howey test is available to us. And as it has been updated, there may be other assets just besides Bitcoin and Ethereum that would qualify for the jurisdiction of the Commodity Futures Trading Commission.
The rub on that, and this will drive Russ Benham crazy to hear it, but the rub on that is that the CFTC would have a lighter touch because it doesn't have as many employees who can be doing the oversight on these things. What do you say back to that?
Well, one of the things that Senator Gillibrand and I proposed is that the wash sale rule be changed to provide adequate funding to have enough personnel at the CFTC to adequately regulate.
Do you, just shifting gears quickly, before, I guess we have about a minute left, it now, at least according to consensus, is that the Senate goes Republican, but the House perhaps goes Democrat, and a lot of people are hanging their entire investing future on that because of divided government. They don't want either presidential candidate, and they're hanging their hat on divided government, which is nice, isn't it? Where for investments, it's better if Congress and the White House doesn't do anything. That's always a better default position than when the government gets involved, which is odd. Do you think that's what's going to happen?
Well, it's certainly not true that it's going to be better for digital assets. I think what's going to be better for digital assets is if the Senate is Republican. That's definitely true because Tim Scott will chair the Banking Committee, and he's much more interested in seeing a statutory framework for digital assets than is the current chairman, Sherrod Brown. So it would be very important and it's important for artificial intelligence that Ted Cruz become chairman of Commerce. He's proven that he's a high-quality legislator and not just a high-quality communicator. He's the full meal deal.
Can you give me your wild card picks for what might surprise people in the Senate races? What would be a big? I guess Montana goes. Right?
Yeah, I think we're going to win Montana. I do think the Republicans are going to win the majority in the Senate.
Where else besides Montana? What about Ohio?
We're going to win Ohio, I believe.
You think so?
I do.
Where do you think you're going to lose?
Where do we think we're going to lose?
She will tell you. Don't say that.
I think we're going to hang on to all of our incumbents. It's still it's still 50-50 in Nevada and Arizona, but we've got a shot in Michigan. Where, as you know, Maryland is up for grabs, which would be Pennsylvania definitely up for grabs. These races are within the margin of error right now, all of them. The ones that are starting to break out a little bit are Montana and, of course, West Virginia.
Investors we talk to say that whatever happens, David Tepper said this yesterday, he doesn't care as long as it's split. He doesn't want control of Congress to also be in the same party that wins control of the White House because he thinks each party has extreme ideas that if they're...
Or you could, if you had, all you need is one, really.
But the margins are so thin.
The House was Democrat, you could have Trump in a Republican
right.
Senate.
He just doesn't want to see all three go in to the same party.
Well, I might agree with them if there were bigger margins in the House, but regardless of who wins the House, it's going to be a squeaker for either party.
So nothing's going to get done in the House again.
There will be very few centrists, and they're in both parties.
Let's see.
And they're going to be the controlling factor, regardless of whether it's Democrat or Republican.
Right. Senator, thank you very much. Give me your wallet. We don't pay gas, but I'll send you a little Bitcoin for coming on today.
Don't even joke about that.
No, I can't.
Don't even joke about that.
Campaign contribute. No, I can't.
You do not joke about that.
Because Bitcoin is so
certain. You're a
certain.
real Aquaman.
No, of course not.
I accept Bitcoin as campaign contributions.
We don't give them, but
we can't give contributions.
We don't.
Unfortunately.
Senator, thank you.
You might be
very
one
much.
for me, but you can't do it.
Thanks. It's fun to be with you.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Cut it out, cut it out, cut it out. So let's take a look at the futures this morning right now. In the green, looks like the Dow futures up by about 37 points. S&P futures up by 4. The NASDAQ up by 15. For more on the markets right now, we want to get to Mike Santoli. And Mike, what a week it's been. Continue to see these new highs that have been set.
Yeah, Becky, only 2 trading days left in the supposedly scary month of September. The S&P 500 is hanging on to a gain of a little bit less than 1% on a month-to-date basis, but has managed to push to a 42nd, I believe, record high for the year. And really since June 30th, done it without the principal help of things like the Magnificent Seven stocks and semiconductors. It's really been about most of the other names kind of getting us through these 2 pullbacks we've had so far this quarter. I would say we're pretty well priced for a soft landing type scenario, but the leadership within the market does suggest a decent economic message. I like to look at home builders and semiconductors over the last 2 years. By the way, almost 2 years since the bull market began in October of 2022. And they've maintained this leadership position, although you see SOX, the semiconductor ETF, has faltered a little bit. Yesterday we got a bounce. It's been a little bit choppy. It's been hit or miss within that sector. Yesterday, of course, Micron working. NVIDIA couldn't really ride the coattails. And here you see well outperforming the S&P. So it's still a decent story for these kind of long-term secular growth scarcity plays. Take a look at S&P versus gold over 5 years. Gold's been on an amazing run, hitting new records, but still trailing S&P on a 5-year basis. And by the way, this was the inflation shock. Gold didn't help you there. It's really not providing much diversification. It's another risky asset, I suppose, is how it's behaving right now, guys.
Okay, Mike Santoli at the New York Stock Exchange. Thank you. We got a lot more coming up right here on Squawk Box. August PCE inflation data. That's going to come. Mark your clock right now, 8:30 Eastern time. But next, is AI a better job interviewer than your own HR department? You do not want to miss this. After the break, we're going to speak with veteran venture capitalist Bill Gurley and the CEO of the AI hiring platform he's backing about the next generation of job candidate vetting. Squawk Box returns after this.
Welcome back to Squawk Box, everybody. The futures this morning are a little higher. Dow futures up by about 43 points. NASDAQ up by 18. The S&P futures up by 5. You've got shares of Supermicro actually tumbling 12% in yesterday's session after reports say the Justice Department opened a probe into the company. It comes after Hindenburg Research disclosed a short position in the company in late August, saying it had identified evidence of accounting manipulation. Following that report, Supermicro said it would not file its annual report on time, and that sent shares tumbling by nearly 20%. The Wall Street Journal now reports that a prosecutor in the U.S. Attorney's Office in San Francisco has asked for information about a former employee who previously accused Supermicro of accounting violations.
We got to watch the shares of Southwest are on track for gains of about 3% for the week. The company raised its current quarter revenue forecast, also authorized $2.5 billion worth of share buybacks, and also announced several changes to its business model as it attempts to fend off the activist Elliott Management. Andrew.
Meantime, we told you about this right before the break. AI hiring platform Procore is backed by investors including Jack Dorsey, Peter Thiel, Larry Summers, as well as VC firm General Catalyst and Benchmark, trying to fix some of the flaws in the hiring process, including reducing human bias. Joining us right now, first on CNBC, is the company's co-founder and CEO, Brendan Fudi, an investor, and I should say legendary investor. Can I do that? Benchmark general partner, Bill Gurley. It's great to see both of you. Good morning to you. Brendan, explain this, because right before the break, as I teased this, I said, is it possible that AI can hire people better than a human can?
Yeah, absolutely. Thanks so much for having us on. And I think it certainly is. We started Mercor with the premise that there's this legacy services industry where people will manually review resumes, manually conduct interviews, and manually match people with roles. But all of these processes can be automated not only far more skilledly, but also far more effectively with LLMs, where people can upload their resume, it'll read through all of their work experiences, their projects, even the papers that they've written, and then ask dynamic follow-up questions with a model that can predict what jobs that they'll perform well at and match them with opportunities.
So this is really more of a matching platform rather than, can an employer use this directly though?
Exactly. Yeah. So we also facilitate all of the hiring, compliance, payroll associated with this. So people come to us, they say that they want to hire a software engineer or a lawyer for a particular job that they need to do. And then they can press a button and hire that person immediately with confidence in how they'll perform on the job.
Hey, Bill, people don't love HR departments. They don't. I hate to say that. I love our HR department. What do you think happens to HR departments if this thing succeeds?
Well, I think you have this situation in every single functional area of a company right now where we're trying to figure out where AI and LLMs can add the most value and can do things, arguably better than a human. And so I don't know that anyone out there loves, extended interview processes. Those tend to touch multiple people in an organization well beyond HR. And if we have the ability to accelerate that, to lower the error rate where, you hire people that don't work out, those things are super powerful. And I think the big thing that all the venture capitalists are trying to figure out right now is where does AI have the ability to have the highest impact right out of the gate. And when we came upon Brendan and Mercor and what they were doing, we got super excited and believe they're one of those type companies.
Now, when you look at this investment, for example, and I think there's a big question for all investors right now, given just how AI is moving so fast, how do you think about the moat around Brendan's business and around other AI businesses? Because at some point, if, for example, OpenAI, which I believe is what's powering part of this, becomes so powerful and so successful, won't it be able to actually recreate all of these companies?
Well, I think that's a great question, and you probably know that I spent the majority of my career seeking out companies that were two-sided marketplaces and that had network effects where the the more time you have in market, the more customers you have, the better the product gets. And I might turn it over to Brendan to explain exactly how that happens inside of Mercor. But one of the reasons I'm here today, and one of the reasons Brendan and I hit it off so much, is precisely because of the question you're asking.
Yeah, of course. There's the obvious network. There's the obvious network effects associated with a marketplace where we have people that will join the platform as candidates, taking interviews and looking for jobs, and companies hiring on the other side. But perhaps even more interestingly is we're collecting data on every bonus that an employer will issue, every raise that they'll give to someone, the reasons that they'll dismiss someone from a job, and training models that predict how well people will perform on their next opportunity. And so, we know many of the people at Top Labs intimately well, and we're making a bet that these models will be incredibly capable, but they won't be able to solve this problem of effectively predicting human performance. And with enough data and this usage data flywheel, we'll be able to build the best model in the world to predict human ability.
And therefore, where do you get the data from?
It's from our all-on platform, where because we're the one that's processing all of the payouts and billing to customers and candidates, we're able to see who's getting raises for what reasons, who's getting dismissed for what reasons. And it's really useful to our customers even on an individual level, right? Where they want to make better predictions about who's going to perform well on the kinds of opportunities that they have so that we can set them up for success. And so that's one of the most powerful parts of the platform.
Dare I ask, do you worry about, or maybe it's an opportunity to sell to them eventually, a Workday or a company like a Ripple or somebody like that, who clearly has lots of employer and employment data?
Yeah, it's a great question. I'm constantly amazed at how slow those companies are moving, and I think it's clear that nonetheless we should still be thoughtful about it. I see it manifesting itself largely through partnerships and collaborations with them, but at the end of the day, I think whoever builds shipping great technology extremely quickly is going to win the market, and I really believe we can do that.
Bill, as you know, so many in the Valley, and you discussed it earlier, are trying to figure out where the opportunity lies in AI, specifically on the software end. I think we understand the hardware side of it, at least chips in that respect. But when you look at businesses, how much of it is the data piece? Do you say, here's a marketplace where there's the two-sided social effect, but how much of it is folks who have proprietary data that then they can marry to an open AI, for example?
Well, I think if you have a problem that is deterministic, and in some ways the full self-driving problem is that way, you can use traditional AI models and allow them to run competitions with each other and get to really amazing places. A lot of the business process problems aren't that way, and so I think the question then becomes, how can LLMs be most effective and things that involve language? I'm really excited by the new voice products out of OpenAI. I think that voice could become a new frontier, and you have to really get in market with these solutions and see where they're able to have an impact fast. And so customer service has been one of those. We believe strongly that interviewing and HR recruiting can be one of those. And I think that's what the whole world's starting to figure out. But we're seeing the green shoots because these companies have revenue already. We know which ones are working.
While I have you here, what do you think of this idea that OpenAI's valuation now $150 billion? There's talk of turning it from what is a not-for-profit into some kind of for-profit entity that has a not-for-profit unit, perhaps, and all sorts of speculation about what's going on inside that company. But what do you make of it all?
Well, look, one of the things that I thought was temporary related to ZIRP was the amount of money that was flowing around in the private markets. And now that interest rates are higher and that money continues to flow, I no longer believe that that was a catalyst. I think we may be in a permanent world of having lots and lots of money in the late stage private market. And the people that are making these decisions are relatively intelligent. And I think they've come to believe that once a company gets a breakout lead, that there's a high probability that's going to continue, and so you got a company that's grown from theoretically, $0 to $5 billion in record time, and they're willing to extrapolate that further into the future. I keep seeing investors come on CNBC and say this is the biggest wave of their lifetime. So it's not surprising to me that a bunch of people would back up the truck in that situation.
And if we had this conversation a decade from now, will they all be very happy about that decision?
Super hard to tell at this point in time. I've never seen, you have a situation where the Mag 7 is all in, like not in the interwave, not in the mobile wave, did 5 leading companies commit $50 billion in capex each year. That's never happened. We've got the Fortune 500 CIOs. I bet you 90% of them have AI projects, and all the VCs, I think 90% of their investments are in this area. So everyone's convinced it's the biggest wave they've ever seen. We're going to run massive amounts of experimentation because people are going to spend against it. All the problems that may arise, many of them are going to get solved because so many people are attacking it. I do think there will be waves. There always have been. The PC boom had that. The internet correction happened. I think there will be some of that, especially with heavy capex. But no one's slowing down right now.
Bill Gurley, as I said at the beginning, legendary Silicon Valley venture capitalist, and Brendan, congratulations on the business. It's fascinating. I may have to. We gotta hire some people. Maybe we'll try it. Brendan and Bill, thank you. Appreciate it.
Thank you, Aaron.
All right, coming up, we got the PCE inflation data. Right at 8:30, we're bringing the numbers, and then get reaction from former Fed Vice Chair Roger Ferguson. It's coming up. Stay tuned. Squawk Box. Be right back.
Welcome back to Squawk Box this morning. UK Prime Minister Keir Starmer is pursuing investments from America's biggest banks and tech giants while here in New York for the UN General Assembly. He met with top executives from Bank of America, Citigroup, JP Morgan, Carlyle, and Blackstone. And I sat down with him and asked him to talk about his big pitch to the business community.
We now have a Labour government whose number one priority is wealth creation. Now I said that to the Business Roundtable this morning. It's counterintuitive. They don't expect a Labour government to say wealth creation is the number one priority, but it is. Of course we want good public services. Of course we want the NHS, our National Health Service, to work well. But the only way that will happen is if we grow the economy and have wealth creation. So we're a Labour Party that is proud to say that we are pro-business just as much as we're pro-worker.
Meantime, geopolitics, as you might imagine, front and center. The UK blocked some of the arms exports to Israel, and Israel's Prime Minister Benjamin Netanyahu is coming to New York right now saying that sent a, quote, horrible message. I asked Starmer why he thinks that Netanyahu, he believes, is wrong.
Look, I support Israel's right to self-defense. What happened on the 7th of October was the most appalling terrorist attack, the worst loss of life since the Holocaust. And that went very deep, and we have been very clear in our support of Israel's right to self-defense. Within international law, our domestic legislation is very clear about the conditions in which we can allow arms licenses to go ahead. We reviewed that and came to a clear decision. Having got a decision that they ought to be suspended, I wasn't then going to put it on one side. I was going to implement it. So I think it is perfectly possible, perfectly reasonable and right to say we support Israel's right to self-defense, but as we would with any country in the world, within the context of international law.
Well, within the context of international law, do you then say that the U.S. is breaking international law by continuing to provide different arms to Israel?
No, we talked to our US colleagues about this. We talked before our decision. I was over with President Biden just 2 weeks ago. But it's a different regime. It's a different legal test in the US. So this isn't comparable. It's not a criticism. It's simply we have our own test in the UK. We've applied that test. And the result is we've suspended a small number of licenses. The US has a slightly different approach, and they've taken a different approach.
Do you think that's the right approach, or it's not your approach?
No. I mean, look, we passed our own legislation, and I think we're bound to follow our own legislation. But that shouldn't be taken as, nor is it, a criticism of the US. We work very closely with the US. We're very close allies. In a special relationship for a very long time politically, but at the moment, as we've got this volatility in the Middle East and in Ukraine, then the way in which we're working together with the US, I think, is as close as it's ever been, and that's why I had an extended session with President Biden just a couple of weeks ago in Washington to talk through these difficult issues and to test our approaches with each other.
As it relates to Ukraine, Zelensky is asking the U.S. for more arms, as you know. Do you think the U.S. should be giving them, and do you think they should have given them already?
Well, look, I'm not going to comment on what the US should or shouldn't be doing. They've been a key ally, key supporter of Ukraine. The NATO summit here that was hosted in the US was a very powerful statement of NATO allies in support of Ukraine. President Zelensky was happy with the outcome. Of course, we listened very carefully to any requests for further capability from the Ukrainians. We discussed that with our allies, as you would expect, because we have to be clear that Russian aggression cannot succeed, and that is why the resolve is there to support Ukraine for as long as is necessary, and we always listen to what they say about additional capability.
Last night, the Prime Minister met with former President Trump in New York City. The two had never met face-to-face, and I asked Starmer about his interest in meeting both Trump and Vice President Harris in this final stretch of the presidential race.
It's for the American people to decide who they want as their president. We, the UK, will of course work with whoever the president is. We've got a special relationship politically which sits above the particular office in either country, but it's for the American people to decide who they want as president. We will work with whoever
Let me
is
ask you this, though.
president.
The mayor of London, who you know very well, said, what I'd say in a respectful way to Americans is, and this is about our elections, is I don't think you realize that the rest of the world is watching because we've got skin in the game. What happens in America is the metronome that sets the beat of what happens across the globe. It sets the beat for how other politicians behave in an election campaign. What do you think of that?
Well, look, the Mayor of London is entitled to his views. He's a colleague, friend of mine. I've known him best part of 25 years. But I'm the Prime Minister of the United Kingdom. I understand the special relationship. And it is for the American people to decide who they want as their president. And we will work with whoever is the president
How
of
do
the
you think
US.
the rest of the world perceives this in particular election in the US and what's happening?
With huge interest. It's undoubtedly a hugely important election, a very close election. I think all of us are watching intensely.
That was UK Prime Minister Keir Starmer, and I know we got some data coming up, Becky, so I'm going to turn back to you.
Okay, thanks, Andrew. We are just seconds away from that August PCE inflation data. It's a very important number for the Fed. Watching the futures ahead of that, we have picked up ground through the course of the morning. Right now, Dow futures up by 60 points. The S&P futures up by about 6. The NASDAQ up by 24. Rick Santelli is standing by at the CME Group. And Rick, again, this is pretty important.
Yes, the Fed's favorite inflation numbers, of course, all embedded in the August personal income and spending report. On the income side, we're looking at a number that should be in the vicinity of 0.4. The actual number is coming in a bit less, up 0.2 on income. If you go back, June was up 0.2 to find a smaller month-over-month increase. You're going all the way back to October of last year when it was up 1/10. Now, if we look at the spending side, it's closer to expectations, but still on the light side, we're expecting up 0.3. We end up with up 0.2%. That equals where we were in April. You have to go all the way to January, the beginning of the year, to find a smaller number in the form of 1/10. Now, for adjusted for inflation, we'll call it real spending. That comes in smack dab right where expectations were, up 0.1%. The problem is up 0.1 is the lightest since April when it was unchanged. Now we get into the Moneyball numbers. The PCE price index, now this is a month over month, expected to be up 0.1. It is up 0.1. If we look at PCE year over year, expecting 2.3, it comes in light, 2.2. In the rearview mirror was 2.5. 2.2 or 2.5, they all comp to the same point in previous history, and that is, of course, when it was 1.9 in February of 21. So the last several months, that's the comp. We are making progress. It's still not at 2%, but it's certainly getting closer. But do remember, these are the lowest metrics for inflation. Maybe that's why they're the Fed favorite. Now, if we look at the core PCE, month over month, comes in 1/10 lighter than expectations, up 0.1%. That equals where we were in May. And if you want to find a lower number, it's all about rounding here, folks. You go to November last year, it was up 0.09. Technically, that rounds out. If you go to November of 20, it was 0.08. To find something that doesn't necessarily round up to that number, you're going back to April of 2020 when it was minus 0.33. These numbers, of course, do get rounded up or down, so it makes it a little more difficult to do the comps. Finally, on number 7, on the core PCE, year over year, expected up 2.7. This one is 1/10 hotter than the rearview mirror, which was 2.6. As a matter of fact, if you look at the last several months, this is going the wrong way. If you look at where we were in June, 2.57. I told you there's rounding issues here. 2.62 was our last look, and now, of course, it's 2.7. So these numbers, maybe core PCE to some might be the most important. Now, very quickly, we'll go through some other numbers. On the advanced trade balance for August, and I like to monitor this because it's been a whopper of a year. You know, in July, we were at minus 102.7. Now it's minus 102.8. That is the biggest negative number going all the way back to May of 22, but we have made progress. This dropped down to minus 94.3. That comes to March when we were at minus 92. Wholesale inventories up 0.2. Real inventories up 0.5%. Both those numbers were as expected. Wow. Becky, back to you.
All right, Rick, thank you very much. watching all of those things right now, 377 on the 10-year. Steve Leisman joins us right now with more reaction to this. Steve, what's your takeaway?
You know, there's going to be a time to declare victory on inflation, and this is darn close. Obviously, everybody wants to be a little wary, the idea that it could come back, but I'm calculating here, Becky, on the fly, so warning about that, some 3-month annualized rates, and we're now on the core 1.74. We've been below 2 for the last 2 months now. I didn't factor in a revision for July. I don't think there is one. 1.7 on the headline 3-month annualized, and the you're down at 2.3 on the core 6-month annualized. So these are good numbers. This is what the Fed wants to see. This goes along the lines of what the Fed expected, even a little bit better. With inflation under control, I have been a little bit more focused on the other side, and it's the consumer spending numbers that I think you want to sort of take a look at, maybe a wary look at. That 0.1 on consumption, just be a little careful with that, because we're going to have a good quarter. We're going to have a good quarter because the beginning of the quarter was good, the end of the last quarter was good, raises the level, that's the way the GDP math is. But the idea that we had this weakness or really lax growth in the month of August is something worth watching here, whether or not the consumer is giving it up. We did have a big revision yesterday, guys, in the savings rate. They raised it from 3.3% to 5.2%, which means the consumer is in somewhat better shape than we originally thought in terms of their savings. But you want to just watch the income numbers here, watch the consumption numbers, and see if we're going to have a weaker quarter in the fourth quarter, which is what many people expect. So it's been forecast time and again, it's been wrong. But the idea that you had a weak consumer in August is something worth watching, Becky.
Steve, just a couple of points on this. First of all, inflation, these numbers look great, but I think a lot of people are wondering what next. Oil prices have been really tame, despite everything that's going on globally. But the question is, with the Chinese kind of boosting up demand this week, potentially with the moves that they're trying to set up, and anything could potentially happen in the Middle East. I think those two issues could change that number very quickly. The second issue is just something Tepper laid out to us yesterday. He said, look, the Fed has signaled that this is the case, that it is a new paradigm that we're facing at this point. So they're going to have to cut at least 2 more times this year, he thinks, just to maintain credibility.
Well, I think that's right, and I think it's warranted, by the way. Cutting a couple more times, depending upon how much it cuts. I've been asking every Fed official I could, Becky, how much is the easy part? How much of it can they cut and not really start to worry about, are they close to the neutral rate? And I keep getting answers like around 100. Some of the more dovish folks say 150, that you could bring the rate down and you're not close to neutral enough to worry about necessarily, at least theoretically, reigniting inflation. On the first part of your question, there is no shortage of risks out there. One of the things that I know the Fed is watching, Governor Bowman mentioned it yesterday, are the strikes out there. And it's a very interesting time where, look, wages over the course of the full inflation that we're talking about beginning in 2020 have not kept pace with inflation, okay? So there needs to be catch-up, and how you get to that catch-up is going to be really interesting here. Unions have more power to do so, and they're going to use it. And it's a potential source of inflation. However, I would just point this out. Unions and ports are about goods, and there's not a lot of goods inflation in the economy right now. So I'm a little less worried about that than I would be if we were to see a surge in service wages right now.
Thank God those corporations stop gouging. It's weird the way they do that. They do, they don't, but thank you for that. Maybe they got called out on it. Thank you, Steve. Joining us now with his reaction to the inflation data, Roger Ferguson, former Fed vice chairman and now a CNBC contributor. Here's what I was thinking, Roger. So the inflation numbers look tame. Let's say that the labor market, there were no signs of it cracking, and you know, we call it what it is. It's 4%, 4.2, whatever it is. Just because inflation is tame, does that mandate Fed cuts? Or do you need to see that there really might be some cracks developing in the labor market? Because I could still make a case that you don't need to rush on this with where the economy is, the stock market, and even where the labor market is.
Well, first, good morning. I agree with the general sentiment. These numbers were good. To answer your question, Joe, I think the Fed should still be in a position where they are signaling cutting, because as inflation comes down, remember this thing we often talk about, the so-called real rate, they don't want to have that rise. So they don't want to be in a position where they're not reducing interest rates as they see inflation coming down, because that would, in terms of interest rates minus inflation, be a tightening cycle, which they're not interested in. So even if labor markets stay relatively tame, I would expect them to continue on the path that they've outlined, which is more cuts this year. Where they end up is anyone's guess, but certainly I'm in the camp of 2 more cuts this year, seem much more likely than not.
All right, then there's no question that we're in restrictive territory right now, and that for those that would like to keep some, we talk about it all the time, keep some dry powder, whatever it is, keep something in reserve. Doesn't seem like, it doesn't seem like we're that restrictive on a historical level, but we should still assume that there is a little bit too much. It's a little bit too tight at this point in terms of condition.
I think that's a fair statement. To give you your due on your side of the discussion, GDP has come in at roughly 3%. I think the GDP now from the Atlanta Fed is still roughly 3%. That clearly seems like it's above potential growth, for sure. On your side of the discussion, unemployment, while it's ticked up, is still, it's starting at the 4 handle. So that seems like it's more full employment than a labor market falling apart. And so, there are going to be some arguments on both sides. But at the end of the day, I think there'll be a strong consensus to keep moving. 1 or 2 more cuts this year, I think, should be baked in to market expansion.
It's a tough, it is, the dual mandate is very difficult to try to navigate. It does seem to imply that there's no concern that inflation might somehow come back at some point, and I don't know whether we need to worry about the Middle East or China.
A lot of things.
Think about China rebounding. Think about there are some concerns that we haven't driven the stake all the way into the heart of inflation, and it just seems if you got 42 record highs in the S&P this year, it just seems like a weird time to be flooding the system with more cheap money. It seems weird.
No, Joe, I hear you, and I agree to some extent that financial conditions are also not unduly tight, but inflation is coming down. I don't think it's hard to manage the dual mandate.
I don't know if we are tight. Yeah. I don't know. We have to. You have to assume that to go another 200 basis points.
Well, look, I think all the evidence is that we are tight. We don't know, to your point, we don't know how tight we are, which is why I think a series of 25-point moves seems like it's a reasonable thing to do. And to watch the incoming data. The Fed has shown an ability to move quickly if they have to, if they think they've gotten it wrong. So I would not dissuade them. I would not discourage them from exercising the strategies they're talking about. And I would certainly not support the notion of keeping a little in reserve, just in case. They can always move back up if need be, and I think the better thing right now is to attempt to engineer the soft landing by allowing rates to move down from restrictive territory to something that's clearly less restrictive, though we don't know quite how much exactly we are in restrictive territory. We certainly are not at easing territory or easy territory at these levels.
Very good. We'll leave it there. Happy Friday. Thanks, Roger.
Thank you.
Okay, coming up, more news on OpenAI as a busy week for the AI giant comes to a close. Plus, we're going to be speaking with former Deputy Secretary of State Wendy Sherman about the tensions in the Middle East. We're coming right back after this. right, Squawk, we got some news on OpenAI. I want to get straight over to Kate Rooney, who's got the latest. Kate.
Hey, Andrew, good morning. So OpenAI's chief financial officer sending a letter to its investors, really looking to reassure them that the AI startup is still in a strong position, and says it's now poised to close a major funding round next week, despite losing some of its top talent this week. This was all in an email to investors sent to me by a source. CFO Sarah Fryer addresses the departure of Chief Financial Officer Mira Murati, who said on Wednesday she was leaving the company, and then a little bit later that day, 2 top researchers also stepped down. Fryer, in this email, says that she wanted to personally reach out to following that news of the departure, and she wants to emphasize, quote, that we are in a strong position with a talented leadership bench to guide us forward. OpenAI, which is backed by Microsoft, one of the buzziest AI startups out there, is it really in the midst of closing a multi-billion-dollar round, which we've been reporting on. It would value the company at around $150 billion. That's according to sources familiar with the matter. Fryer says that's still on track to close next week, says the round was oversubscribed as well. She says, quote, collectively, we remain laser focused on bringing AI to everyone and building sustainable revenue models that fuel our operations and deliver value to our investors and employees. Guys, OpenAI did decline to comment on that email. Back over to you.
Kate, what is this? What's the story on the Sam Altman equity piece of this? Because I think there's been a lot of speculation about that, even just obviously in the past 24 hours, and it sounds like maybe no equity, or just less equity.
So what we heard yesterday, I have heard from sources that he is set to get equity as part of this funding round, which would align his incentives with the rest of the capital table, with the venture capital investors. So I don't think that's surprising based on what we've heard about them changing their corporate structure to become a benefit corporation. What Brett Taylor, who's the chair of the board, pushed back on yesterday was that he would get 7% of the equity. So he said that is categorically false, not true, but it is understood that he still will get some piece of equity. He'll get some compensation for this massive funding round.
Kate Rooney, great to see you. Thank you. We got a lot more coming up on Squawk Box this morning. The latest on the unrest in the Middle East as Israel Prime Minister Benjamin Netanyahu gets ready to address the UN General Assembly. We're coming right back after this.
30th.
Israeli Prime Minister Benjamin Netanyahu expected to address the UN General Assembly today. This comes as Israel and Iran-backed Hezbollah trade fire over the Israel-Lebanon border. The Lebanese Health Ministry says hundreds have been killed this week on its side, even as the conflict in Gaza still goes on. Former Deputy Secretary of State Wendy Sherman joins us right now. She's a professor at the Harvard Kennedy School of Business, and thank you for being with us today. Ambassador, what do you think the situation on the ground is at this point? Can you give us a realistic view on how dangerous you think things are right now?
I think we're at a very difficult point. When Hezbollah launched a ballistic missile towards Tel Aviv, it was a step further to escalate this situation. I think we know how close we are because there's been a very vigorous effort at the United Nations, ostensibly supported by Israel, to get a 21-day ceasefire on the northern border so that, in fact, we can get to peace. I think we'll hear from the Prime Minister today how he must defend Israel. He must make sure that he gets the hostages back out of Gaza. But I think we're going to hear very strong messages about his need to defeat terrorism, to defeat Hezbollah, defeat Hamas. None of us support a terrorist organization. Nonetheless, I think that it is time for diplomacy. It is time to get to peace. And it's time for the kind of steady leadership that we've all been talking about as we approach the presidential race, where we have somebody who believes he can fix it in a day, and another person who is clear-eyed, tough, and ready to do the job.
President Biden spoke at the UN General Assembly this week, too. He said, while an all-out war is possible, he's throwing everything he can, all the energy he can muster, into trying to get something done, some sort of settlement to be reached. Do you think that's likely to happen by the end of his tenure?
You know, the UN General Assembly is really a terrific opportunity to try to do something like this, because all the leaders are there, all the diplomats are there. You can really run around the rooms and try to move forward. So I'm going to remain hopeful that the administration, at the very least, is caught trying to do this, which they are doing. And I'm a little surprised because the administration's been quite clear that they would not have proceeded without the tacit support of the Prime Minister in Israel. He seems to be pulling back from that. He's playing, I think, to his own audience, which is to the far right, keeping his political coalition together. And I hope, however, that he understands there's a legacy issue here. Yes, absolutely, everything he needs to do to ensure Israel's security. But in my view, I think in the view of Kamala Harris, a two-state solution, a horizon for the Palestinians, is critical. Otherwise, we're going to have a whole new generation that hates Israel, that's going after Israel's security. It is really crucial to get to peace. And unfortunately, in the Middle East, that's hard to come by.
Ambassador Sherman, thank you for your time today.
Thank you.
All right, coming up with the watch in the markets on this final Friday. Is it the third quarter? It really is. Swap box will be right back.
Welcome back to Squawks Box. We are now a little more than half an hour till the opening bell. Joining us right now on the markets and what she's doing. Barbara Reinhardt is the CIO of Multi-Asset Strategies and Solutions at Voya Investment Management. Curious what you're doing in light of the numbers we just got and maybe Mr. Tepper's predictions about China.
Well, look, I think the PCE numbers this morning are right bang on line with what the Fed's been doing. It gave them the air cover that they were able to cut interest rates last week. And we think that the rally that's happened in front-end markets, in the bond market, is actually spot on for a very good sign on cooling inflation. As far as China goes, sorry?
Yeah. No, go ahead.
As far as China goes, China's following the same path that the Fed did last week in terms of cutting interest rates and a barrage of liquidity going into the markets. We think it's an important statement from the Chinese authorities simply because they're drawing a line under where they think their tolerance for slowing growth is, and it's likely to continue to propel the Chinese equity market further over the course of the next few weeks for sure.
And then, but let's just talk about the next few weeks. So is it going to propel the market? Is it already built in? I mean, that's the other question.
Well, they've said that they're doing this new barrage of liquidity with more to come. So we think this is likely going to be a pretty big firm statement, and you're likely to see a very big counter-trend rally in Chinese equities, probably at least over the next couple of weeks and maybe into the end of this year. Remember, China is one of the most unloved, under-owned, underappreciated markets. You're at single-digit multiples on earnings. No one has been invested there over the course of this entire year. So having this type of fundamental change at the margin is generally the spark of a big rally in equity, a big rally in Chinese equities.
Is there a stock or two in the U.S. that you think benefits?
I think that the U.S. certainly does benefit. I think that this liquidity pumping into the system that the Fed's been doing, as well as other central banks, is likely to continue to do two things. It means that you have front-end rates falling pretty much across the world, which is definitely a boon for equities. And the second piece you also have is that the Japanese yen has been relatively stable, which has been another good boost for equities globally.
Hey, Barbara, thank you.
Thank you.
I want to wish everybody a great weekend. Joe and Becky, we'll see you on Monday. Make sure you join us next week. Squawk on the Street begins right now.
Good Friday morning. Welcome to Squawk on the Street. I'm David Faber with Sarah Eisen and Mike Santoli. We are live and we're close line at the New York Stock Exchange. Carl and Jim both have the morning off. Let's give you a look at futures as we get ready to wrap up the trading week. You can see once again we're looking for a higher open. And our roadmap does begin with those markets, of course, looking to set new milestones this one day after the S&P 500 posted its 42nd record closing high.
As for the Fed's preferred inflation gauge, PCE, coming in a bit tamer than expected year over year. And also it had the stimulus effect on China. Stocks in that country posting their strongest week since 2008.
Yeah, big week for that. Let's get to the market reaction to that PCE number. Of course, great to have Sarah and Mike here with me. Sarah, I don't know how big a surprise was it, I guess we'd start with.
Well, it's now become the secondary data point to jobs because the Fed has told us such. So I'm more interested in next Friday's jobs report. But good news for the Fed, for the markets, inflation was pretty tame. 0.1% increase in the month of August was actually less than economists expected, 0.2. On the year-over-year pace goes up a little bit to 2.7%. It's 2.68% unrounded, which is important, which is a little higher than the 2.6.
Core unrounded is 0.13 instead of 0.15.
I know, we're doing the unrounded
rounds to
thing.
0.1 versus 0.2.
A little underwhelming on the spending and incomes data, but nonetheless, personal spending gained just 0.1% in August versus 0.4% prior. So consumer softness, I think it's part of that narrative. And the only other thing I wanted to mention is the savings rate ticked down by 0.1 to 4.8, which is the lowest since December 2023. So watching that savings rate comes down again speaks to a little softness. It's a good number though, I would think, Mike, for the markets, because look, if the Fed does 50, if the Fed does 25, we can debate it every single day like we did last time. The most important thing is that the bar's pretty high for them to stop easing right now. Nobody's talking about that. And as long as they're in easing mode, and we're not in recessionary mode, which these numbers don't necessarily speak to, and now we've got the China stimulus, it's all things go.
Right, and the PCE inflation piece definitely validates people's hope and assumption that we could start to set aside the inflationary trends. They've been very, very close to target and very mild. And I think all that sort of suggests we are basically on growth watch. I agree on the Fed. The Fed's on the case. They've told us with last week's action that they're going to vow not to be late. Certainly not intentionally. And I think the market, it kind of gets that. The tricky part is we're mostly, in terms of the equity market, we are priced for something like a soft landing. So it's not as if when we get further evidence that, hey, guess what, inflation's in check, growth is slow but still positive. That's not incremental surprise to the market, therefore not incremental reason to get excited. It just more kind of confirms what we've already thought, and I think the market's kind of trading more or less appropriately on that. The 2-year note yield did go down a couple of ticks after the PCE inflation number, which does, and the personal income and spending as well.
Because it buys them more space to go 50 if they want to get.
Right, you just do a tiny little turn of the dial that says, okay, maybe we can lean more toward 50 or more toward deeper cuts ultimately through next year.
Right. I think that the notable price action this week, so record high after record high, 42 record highs so far this year.
Yeah.
But small caps have lagged a little bit since the Fed. Treasury yields have been a little firmer since the Fed. We're going the other way this morning. But some interesting sort of cross currents. Gold has performed better than the S&P 500 this year, continues to make new highs. Bitcoin has had a really good, and that makes sense, post-Fed easing, right?
Although I think gold, I mean, you can't even persuade me what the narrative is on gold. I was just looking on a 5-year basis. It's looked a lot like the S&P with a little bit of a lag. It did nothing during the inflationary shock when real yields were negative, and now real yields are super positive, and everyone's excited about growth. The risk assets are back in play, and all of a sudden, people want to buy gold. So to me, it's not necessarily pure safety trade. It's a risk asset as well. But I agree that it's been a strong month. Almost up 1% in the S&P. The quarter is held in there without really the clear leadership of the mag.
Look at the gold price, 30% higher. In the Bank of America flow report that came out today, Michael Hartnett, it was the #1 high conviction trade. And they put in parentheses around the gold trade, inflation and populism hedge.
Right.
So maybe that's why it's going up every day.
Yeah, it is notable.
But if things in China are going to get better, then one of the storylines behind gold was, well, money wants to leave China, capital has to flee to something else, and gold's like
now it's like just
way
liquidity
station for it. Yeah, we'll see.
Right. Copper's been going up though, but that's actually on China because people think that perhaps the economy will start to perform at a higher rate. Let's talk about it a bit because stimulus measures sort of incrementally all week, different data points. They've sparked what has been the best week for stocks in China since 2008. And as you might imagine, a couple of names that our viewers certainly know, Alibaba, Tencent as well. They have been big participants, Pinduoduo. Chinese tech sector, by the way, is now at a 13-month high. That sounds good, but not sure it's saying that much, Mike, given the carnage that's taken place there over the last 5 years.
Yeah, and that's been the big debate is that, yeah, sure, we had the makings for some kind of a complete ripping rally just because of how washed out the markets were. We've had these in the past. This one seems like it's stronger. It's got more momentum. It's also maybe less connected to the kind of reflation trade. It's much more, maybe there's a chance domestically there'll be a little improvement. So I do think that might be a little bit of the difference. It's been easy to say, well, we kind of missed it. This trade went vertical. Volumes yesterday in the China-related ETFs were absolutely astronomical. And so it does show you there's this kind of rush to get in there. And also, I think there's a scarcity of places in the global markets that seem like they have not been played out to this point. As U.S.
Everyone is on the other side of this trade.
Exactly.
Important to know the context here, right? That if the high conviction trades were gold and tech and semiconductors, high conviction trade against China. And look at the biggest winners in the S&P this week. Besides Micron, which had good earnings, Estee Lauder, week to date, up 18.5%. Freeport-McMoRan on the copper mine thing. Yep. Las Vegas Sands on Macau, up 15%. Wynn Resorts, up 14%. So these stocks have really been held back, I think, on the China story. The question now is this a sustainable rally? Because they certainly were serious in terms of the rhetoric and the action on the monetary policy side, and even acknowledging the consumer fiscal policy side. China's got deep-seated problems, though, when it comes to deleveraging in the housing market. will this actually produce something lasting?
Yeah, there needs to be, right. The question has been whether or not they actually will deal with the property sector in a significant way in terms of the significant losses that have, of course, taken place. Some put as high as $18 trillion. It really does choke Sarah up a lot when she talks about some of the losses that have taken place there. It gets her very upset. So,
well, the other thing, the other way to look at it is, I mean, just the China total equity market cap. I don't know if it's 10 trillion or maybe it was the beginning of this year. Is, you know, less than 1/5 U.S. market cap for a total economy size that's not that dissimilar, you know. So it shows you that there just is a pretty small door people are trying to get through to play the idea of a China recovery here.
would you like me to bring in Eunice, or do you think you can talk? You want me to do it? Okay.
My kids are sick.
I'll do it.
Makes me sick.
Uh-oh. Well, it's good that you're here, so Mike and I can be sick next week. All right, let's get more on the China rally and bring in Eunice Yoon. She's in Beijing. And Eunice, you know, we got a lot of important language, it would seem, from the Politburo announcement, I guess, I'm not sure how many days ago, a day and a half, 2 days ago. Yeah. Have we seen anything more there? Because it's always difficult for us to know what actually was said and what really is being done.
Yeah, actually, we even had more commentary out of the stocks regulator today, who was addressing, again, this expansion with equity funds, saying that the increase, there's a need for the increase of the scale and proportion of equity funds to create stable and long-term returns. Also, there was a lot of other action from the central bank, which was flagged earlier in the week, and that is that they cut short-term rates, the 7-day reverse repo rate by 20 basis points. Also, they cut the reserve requirement ratio for banks, so that's the amount of money that banks needed to keep on hand, by 50 basis points. Again, flagged earlier this week as part of this overall stimulus package. But the sentiment here is really a whole lot of like FOMO mentality. People are saying, finally, we are getting some acknowledgement from the top that something needs to be done for the economy and to get that growth going again. But the question is, just like what you guys were talking about, is this fiscal stimulus or the fiscal spending portion going to really be sizable? And are they going to address some of the longer term structural issues as well as the confidence here, which has been lagging?
Yeah, you know, talk to us a bit more about that confidence and what you see or what you feel in some ways. I know it's hard to measure to a certain extent, but we talk so often about the Chinese consumer. What is the real situation on the ground when it comes to how much is actually being spent by that consumer?
Well, it's very gloomy. I mean, I know that overseas and in the markets here too, there is some excitement over some of these policy announcements, and a lot of times when investors here think of investing, they look at the direction of the Chinese government. So from a short-term perspective, there is a lot of excitement. But longer term, the conversations that I hear the most are about the job market, how difficult it is to find a job, to keep a job, the property sector, and the value of people's homes. And of course, as you guys were talking about, there aren't a whole lot of places where people can put their money. So a lot of it is wrapped up in their homes, and they're seeing the value of their homes decline with not a whole lot of bright outlook. So the fact that the government did this is a good acknowledgement. It's also interesting because next week is the National Day holiday, so it's the 75th birthday of the People's Republic of China, so they want to get people kind of excited and possibly consuming. So that might be one factor, but a lot of people, generally speaking, are not feeling very confident.
Eunice, thank you. We'll be checking in with you, of course, as we continue to sort of monitor not just the talk, but the action as well from the Chinese government. Eunice Yoon in Beijing. Let's talk weather here for a minute. Helene has weakened to a tropical storm, but not before making landfall in Florida as a Category 4 hurricane, creating widespread damage, leaving millions without power. NBC's Jay Gray is in Tallahassee and brings us the latest. Jay.
Yeah, David, and what a storm this was overnight, really rumbling through this area after making landfall and causing significant problems. Flooding, as always with these tropical systems, the water's the biggest issue in it. It's the same with Helene. So along the coastline, you had storm surge, which really has caused some significant flooding there. And then inland, in some areas, there was rain more than 12 inches and that's caused flash flooding and pushed water into areas it's never been. Let's talk about where we are right now, where this thing is going. More than 1 million people without power, but as you can see, it's turned into a beautiful morning here. So hopefully those crews are getting in at this point, and they'll be able to restore some of that, bring people back online. But as this system now moves through Georgia, it's got at least 800,000 without power there. That number's going to go up. South Carolina already reporting 500,000 without power. That number's going to go up as well. And so this is going to continue to build. It is just a tropical storm, it's still 70-mile-an-hour winds, but it's the rain and the water that's going to continue to be the primary problem with this system. And Helene's not done. Let's talk about the staying power of this storm. It was still a Category 1 when it moved into Georgia overnight. And now as it pushes to the southeast, we're going to see it lash out in the Carolinas. I think we'll see significant flooding there over the weekend. Kentucky, Tennessee. This thing's just going to keep moving and keep causing problems, even as they start to assess the situation in areas like this, Tallahassee, and start to clean up and try and repair, restore some of the power. It's still going to be wreaking havoc. So we're not done with this yet. And David, just to wrap up with an example of that, 60 million people, 12 states currently under watches or warnings that deal with Helene. So again, we're going to see for the next couple of days this storm cause some really serious problems.
Jay, thank you. Jay Gray in Tallahassee on the continued impact of Helene. When we come back right here, we'll have the latest on a potential deal that would tie together DirecTV and Dish, both of those satellite television services. Let's give you another look at futures as we get started with trading here. About 15 minutes from now, we are looking for a higher open for the broader averages. We got a lot more Squawk on the Street for you straight ahead. reports late yesterday that I can confirm about a potential deal in which Dish would be essentially sold by its owner EchoStar and merged with DirecTV. Again, both these satellite paid TV providers coming together to create a new company that would have as many as almost 20 million potential, or at least subscribers. Overall, of course, as our viewers well know, the businesses have been under pressure for quite some period of time. Dish's business, for example, lost, I think, 182,000 subscribers in the last quarter. And the satellite TV business there has been shrinking at about a 12% rate, which, of course, as you know, is not good. They also own Sling TV, which would go with the deal as well. Dish's pay TV revenue was down 10% year over year. That was as of the last quarter. And cash flow at the company, EchoStar, has been under significant pressure given the company has a significant debt load. Why? Well, remember all the money it paid to buy all that spectrum to become a potentially nationwide provider of wireless services. That is still a possibility, but of course many investors have been focused on the balance sheet and what will happen to it, and the potential for how they're going to deal with a debt load that is as much as 11 times EBITDA is a key concern. You can take a look at EchoStar shares, though. They have been moving higher, and those who try to understand the value of the company certainly look through and try and understand the value of that spectrum. What would this deal mean? And my understanding is it is highly likely to occur. In fact, most likely to be signed in the near term. So we would expect perhaps that we will see a deal as soon as this Monday. Now, how will it be structured, of course, is a key. The limited understanding that I have is it would be fairly complex, but that said, it would involve cash going from DirecTV to Dish, and perhaps, if not even more importantly, the assumption of a certain amount of debt as well, and that would create some debt capacity, perhaps, for EchoStar to continue to pursue its hopes and dreams when it comes to the wireless business. And of course, Mike, I think, you know, I like to turn to you because Sarah's still very young, but you've been around quite as long as me.
Almost.
You are.
Just compared to you.
Yes. That's true. Yeah.
I have 3 bags of cough drops, by the way. I'm
okay, good. Yeah, she's back and she's better than ever. But I'm looking back at a press release of a deal I remember well, announced almost 23 years ago exactly, October of 2001, in which GMUs and EchoStar were planning to merge. What happened, of course, antitrust regulators. At the time, they were amongst the more dominant providers of these kinds of services, certainly competing with the likes of cable, but they were viewed perhaps as their own market. The deal was stopped. It never went through. The Department of Justice did file a suit to block that acquisition of Hughes Electronics, which was essentially DirecTV at the time. Don't believe that would represent the same threat to a potential deal this time.
Right, exactly. I mean, obviously, there has always been this objective among the regulators and the government to say, well, there are some areas not served by cable, so therefore these providers have some kind of privileged position. But I mean, the overall market has obviously gotten so big and different than it was back then. And the obvious analog is XM Sirius, right? Where at one point they couldn't merge because it was like, no, satellite radio is its own thing, and then you make kind of audio content as the whole category, and it does make more sense on a regulatory
particularly
basis.
As they compete, of course, with broadband and the likes of Starlink, another satellite service that is providing obviously video throughout to its customers in many of those rural areas.
Exactly. So there's an alternative.
So you don't need satellite.
No.
For pay
That's
TV
why it
anymore.
keeps going down about 12% a year for Dish. Significant declines there. And they have yet to obviously make good on their significant ambitions to become a nationwide wireless player. If and when we get the deal, as I believe we will, we'll certainly look through it and try and explain what may be a complicated structure, but what it will ultimately mean for the one public company here. Remember, DirecTV is a private company owned by TPG, run by their management, but still 70% owned, as of now, by AT&T.
I'm not as old as you, but I do feel like I have deja vu on this merger story.
I know.
It's come up a
it
bit.
is 23 years ago. You were very.
It's been the most obvious deal that never happened.
All I do is do old stories. I mean, Paramount, I'm following that for months and months. Of course, 30 plus years ago, it was that fight, and now we got this one again. So
It's old as new.
Exactly.
Taking another look at futures here as we count you down to the opening bell. Another up day, it looks like, on Wall Street. Dow futures up 100, S&P futures up 11, looking to build on those record highs. More Squawk on the Street when we come right back.
Peacock.
All right, take a look at the NASDAQ 100 gainers. Of course, we get started with trading about 4 minutes from now. You can see once again, China is certainly an important part of the mix here with PDD, which has had a very strong week, potentially up yet again on semi, and Tesla rounding out the gainers as we await the opening bell just a few minutes away.
Good morning, retail traders.
Damn, I don't get to sit down yet. I guess the numbers were good this morning.
On WTI, you can see well below 70. Obviously, it was down.
Not great, but good. The market reacted well to it. Make sure I got everything on. Good morning, room. Good morning, Cole Mac. Julian, Luna, Liam. Liam's a new name. Take off my shoes. Market's not moving right now, so it's still digesting the numbers. They keep bringing up 42 times the S&P had a high this week. I mean this year. So that's what they're pumping. Let me get my platforms up. 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 This is the one that the feds really keep track of. August, oh, down there. Personal spending's down. That ain't too good. Not at all. I don't think. Well, they said they were good. Don't look good to me. Unless I'm reading them wrong. So the S&P is the 30th. The 575s again this week. The September 30th. So I look at the next day out when I'm trading it, the SPY. The SPX I look at the same day. I call it a lotto. I feel real good this morning for some reason. Full of energy. Mike's got the overhead resistance here. What do you got? I can barely see that. Are you on your phone or something? $57.80, huh? Well, we spiked up again today. Let me clean this up. We got a falling wedge, kind of a symmetrical flag. So I think we're going to come down and hit the 200. I'm going to put an alert right above the 200 on the SPY. Just see if we touch it and hold it. I'm getting ready to squeeze right now within a minute. Just wait. I'm going to be patient here this morning. We've got a big red candle first thing. I think I'll just give the market a little bit of time. Now we've got China to check out. Someone over there said
China.
More is what they said.
China.
They've been waiting for this for a long time. So I'd start creating me a watch list. I don't know if I still got one or not. I don't want to use that one. I might have to start building one of my own because I don't see it on here. There it is. China. We got all kinds of Chinas. Come on, you dick. Ugh. Nile was mentioned by this morning in the room. K-Web was one I used to follow. Let's get back on the SPY here. See if we touch this here support level down here and hold. I think we could probably drop below it. Where's my... So the 575s right now are at 104. We might be able to get to a buck on this thing. A little under a buck. Tape's small yet. There's not no. If I start seeing 500 and 1,000 in here, I know we're bullish. The video. Mike's got 57.51 for support on the SPX. I got 57 what? 51? I got 57.48. 47. We'll compromise right there in the middle. 57.48. I see. So I got my alert set. Now watch Mike's support here at 51. We could hit the 21, bounce off it. So that's pretty damn close. And we could definitely drop down here and hit the 200 or the 63. So here's Mike's. This is a bull flag, 1, 2, 3B. There's a little expansion to it, but not much. Switch this one out because I can't see the numbers on it. I'll move it over here. Move this over a little bit more. There we go. That's cool. And we could, by the end of the day, be back down here at 571.50. And we're below the VWAP right now, and we're at the 200 on SPY. We're at 99.98 for the 575s. So we're in decision-making mode right now. It's major support level for number 1 support. I've got the SPX on the left and the SPY on the right. I'm going to grab some here, I think. I hate to get stuck in this first thing this morning. Damn it, I should have grabbed him. Could have got in and out of that one for 10 cents. Maybe. We'll just give it some time. The market, I mean, the volume's really slow right now. There's no big lots coming in here. Blocks, they call them blocks, not lots, blocks. Trade sizes. I had thrown a cup in there. I could have got 96. I'm gonna give it a little bit more time. I'm not feeling very bullish right yet. This is the lowest support to hold right now. There's 1,200 for sale. Somebody got out. So we could drop more. There's 2,400 bought. We could drop down more. Oh, that's a bad. thing moved on me. Just do this here. It's more of an accurate reading. China, Baba, is that? Well, that ain't Baba. Baba broke out again. We're above 100. The American market could be less attractive. The small caps call that they called out ain't working too well. There's going to be a strike coming up on freight, and that could have a real big effect on the economy. Today's going to be the last day, and then we'll know Monday if they go in strike. So that might be luring on the market right now, too. Still not feeling it. We do have some higher lows here, so that's kind of looking a little better. Baba just broke out. New highs, Baba.
China.
China. So I've got 57, 47, 81, the 200 here. I mean the 50 SMA on the SPX. And I got 570, 279. So we're retesting now to find out if we're going to break out or not. I don't feel like jumping in. I'm getting a little fooled here with these three candles. Well, that's a higher high still, so we're still good. Okay, this is it. It's either going to hold here now and retest. I feel like grabbing 5. I'm just going to wait. I'm not. I'll wait. Should have grabbed just a little bit. And I don't want to keep trying to send mixed messages. China new high, Baba. Luxury items, they say, is a good thing when it comes to China.
China.
That means hotels and resorts and things like that. But I think they're way ahead of the market on them calls. This thing ain't going nowhere yet. I'd still be sitting in this stock wondering, oh, come on, hurry up. Double top on K-Web. Spy dropping here. Just got an alert on my phone. What? Spy mark hit below my mark. So it definitely triggered my alert. Let's see here. This is a major support right here. There, we didn't hold it. Good deal, good deal, good deal. Patience pays. Now it's going to do something real soon. You see the wicks are starting to pull up on the bottom instead of the top. So we have a switch of momentum. We have a lower low, not much, on the SPX. Come on, if you're going to sell it. If you're not, move. Do something here. Tempting to buy them. What time is it? We've been open 23 minutes. Baba's knifing a little bit. 107, put that down as your support level for your first support for Baba. We're getting ready to squeeze any second here. drop. If you're going to drop. Quit playing around with us. Damn it. I don't really want to buy into this yet. I mean, almost a complete stop. Nobody wants to buy it. Tempting, very tempting right here to get in this trade, but we now just went below the 200, so that's, and we're on the 50 on the SPX. Someone just bought 2,600 shares or something. So it's time for it to do something. MU was the big runner yesterday. 107.56 or 107.56. SMCI 419. What else? Nile. Nile's Nile popped a little bit. See how we're squeezing right here on the SPX? Let me get my other platform ready for the SPX on it. I'm still tickled about yesterday getting in that trade and getting that dollar bounce. That was an easy grand. So we just broke out. I could tell that thing was squeezing. What was that? That just knifed real fast. don't trust that. Whatever happened there. Look at that candles on. That's a big long leg hammer. That looks mean. That looks pretty mean right there. Damn it. Tesla had a pop this morning. Apple had a pop this morning. Let's see how much. We're retesting resistance. There's 6,000 bought right there. So the tape's looking a little bit better here. This could be a lead out to something. Nile, new high, 635. Yeah, these things are running now.
It remained at 3.1, which was an increase from the last, from every month this year. And if you consider 3.1 actually is the highest level, going all the way back to 3.2, which was November of last year, we want to pay really close attention to these. I'm a little surprised rates haven't come up a little bit more on the better confidence, even though, of course, inflation, we didn't make much progress. Monitor 3.74% for that 10-year, because that's where it closed last week. Right now, 2s and 10s, well, they're basically both very close to unchanged on the week, with the long-dated treasuries just a little bit higher. Sarah, back to you.
I think, this confidence data, Rick, I feel like we have to take it with a grain of salt. It's been all over the map.
Okay, I'm done with you, girl.
Other sector is higher right now, so it's pretty...
I disagree with her about 99% of the time.
through and digest this number. It's done nothing but rallied since the number came out. It was down.
She brushes off a lot of key information.
Question now. This
grain of salt, grain of salt. I probably heard that chick say that 1,000 times this year. Well, in the past, not this year. Everything's a grain of salt. That way, you emphasize we're bullish, and that could not be the case.
Go 50, and you are feeding into a new cycle, a new regime confirming that, we're in a down cycle for rates. It just seems like you're going to have real surprise in the data to disrupt any of that narrative. It feels like we're kind of locked in after that big move from the Fed.
Well, I'll give you another version of the same thought.
Yeah.
Jerome Powell's told us we don't have to focus on inflation. Therefore, it looks like the markets aren't. Now, he did say we're going to have to focus on the labor market.
They have been.
We'll get a pretty and next throughout
interest
the week,
rates
actually,
for
we'll
2
get a lot of
years.
looks at the labor market. So that's Jerome Powell. That's what he's telling us to focus on. Let's see if the market does, because he's clearly told us inflation not as important, and the reactions to the inflation data are showing that we believe him when he tells us that.
Yeah, it's going to be a solid week for the economy when you had the jobless claims beating expectations, coming in lighter. Our economic surprise index is getting more positive now, or rather less negative, because in July we were missing everything. Every data point was coming in worse in the early summer. The spring into the summer, we kind of deeply rolled over in the quality of our economic data. The economic surprise
Just
right
gonna
now,
start doing
going
something. I'm
back
gonna
up.
come
So
cut
it's
me
nice
up
to
a
get the
pickle,
50 bip
snack
cut.
on it
At
today.
the same time, you start beating some numbers. It's a pretty good situation.
Believe me, if we can believe and trust that strong economic data doesn't lead to some change in policy or skew.
Which is why it's great that crude oil's down.
Well, crude oil is, I'll tell you, Oliver, that story on Saudi Arabia, OPEC Plus, changing their overall strategy on crude oil is gonna wreak havoc in the crude oil markets, and I don't think it's uptick since then.
No, I'm with you. And because that's a really nice combination and a way to thread the needle. To have data not miss this week, to have jobless claims firm, and then the only downside of that being reflation risk, but then one of the biggest inputs into inflation.
We could have an expansion pattern here, and we could one more time down here would be, I think, would be the trick.
This is not a good week for you.
Right, if you're worried about inflation. Exactly right.
If you're trying to trade like reflation trade, this is not a good week for you.
Yeah.
So let me show you here what I'm seeing. We have a little expansion pattern going on. So I'm not sold yet. I'm gonna go get my pickle and cut it up. There's a big block under 1,000. New high for Nile. People could be really concentrating on China right now.
China.
Yep. Mike put a little watch list that he's watching some China stocks. I'll put mine up here in a little bit. One thing I do is I look at the volume highs. We got Nile, K-Web, Baba, Tesla, JD, Yin, YINN, CNET, XPEV. That one's way oversold. Tall, Billy, Baidu. So I look at the volume highs. Those are the ones that people are interested in. I'm going to set an alert down here at the bottom of this here 200 again. Go get my pickle. Don't have to be in a hurry to trade. I know I'm always am, but I don't feel like it right now. I'll wait until the time's right. Right now we're just going sideways. So I set another alert back there off the 200. CCL, what's it doing today? Hurricane. I'll be right back.
Benefited, Macau and the resorts and casinos. As we've got analysts beginning to weigh in.
Jimmy said that.
To adjust their price targets.
Morgan Stanley upgrades win.
From equal weight, price target at $104 up from $97. They said that near low valuation, the underappreciated growth opportunity in the United Arab Emirates, as well as the optionality around Macau, provide a very favorable risk reward and re-rating potential. They also see a lot of stability in Las Vegas. All around, these analysts are pretty positive on gambling here in the U.S., Macau, and then what we're seeing in terms of potential in United Arab Emirates.
Okay. I need to check out that Boston Encore. I haven't been there yet. That's been kind of a good story.
Okay, SPX. There's our knife.
Happens. This stock seems to be driven by China. It's been like that for a while. So, I mean...
I said we get back down there on that bottom support.
96 real quick. To me, that's still, the move in the China specific stocks looks even bigger. To me, it seems like the win... I mean, look, it's a big move for win for sure. But the high this year is at like 110. The high last year is at 117. So this thing is very much still in a downtrend.
Yeah, still in a downtrend to your point. China's chief Wynn Palace, about $1.89 billion in revenue, in 2023. Wynn Macau, $1.21 billion. It's very, very important, to win. But we've seen these numbers rebound. I mean, if you think about the past few years, the struggles with, of course, the pandemic travel restrictions, the regulatory issues, slowing economic growth. We've seen the rebound come back. We've seen some pent-up demand. First half of 2024, visitors increased by over 43%. Spending's also higher. The entire island reported casino revenue of about $14.1 billion. That was up almost 42%. At Wynn Macau, operating revenue was up 8.5% year over year in Q2, and their occupancy settled at around 98.5%. That's very, very strong. So we've been seeing this rebound. Now we're seeing this release, and these updates. And I think, the optimism here is that this could be for real. This has taken a long time for this to unwind and to see this pent-up demand come to fruition. Now that we've got this news, it's possible that we continue to see this stock rise.
Okay. Seems like you're going to also be subject possibly to more analyst revisions, like the one this morning here from Citi, from Macquarie. I mean, though I would think they're generally going to err more on the bullish side. It's kind of interesting that a few of them are kind of tapering off some of their expectations, maybe just recalibrating. But I mean, it trades, fairly cheap in terms of valuation. It's not super expensive. Trailing PE 9.5. Forward PE is more expensive. So that's kind of the catch, which is that the outlook for China's been so weak that the forward earnings expectations are pretty light. So they're going to need to basically lift their guidance. But if they do, then the stock should effectively get cheaper. So there could be some real kind of snowball effect, is my point, when you've got an analyst community that remains, somewhat kind of, mixed on it. Price target of $109 on average. So they're not really expecting any new highs. But judging by what the China stocks are doing, I mean, it's telling us this is a huge turning point economically. Seems like it should put Win, at a pretty decent chance to challenge some highs again.
Yeah, I mean, I would agree. I think investors and analysts alike are going to have reservations, right? There's a lot of concern about the economy, both in the U.S. and in China, that we could continue to see some worries there, and that we're going to see people not wanting to go to the casino, not wanting to spend money on travel. At the same time, the development of the UAE, the numbers we're now seeing out of China, coupled with the fact that we've got this stimulus coming out, does put an opportunity out there for this company to grow this year, potentially substantially if we start to see that demand really, really pick up. I don't necessarily know that that's built into the stock. I think some of the conservative approach we're seeing from analysts is, really based on the economy and what their concerns are there. So it'll be interesting to see this play out. But we've seen good revenue coming in the U.S. We've seen it in China as well. I think as long as these numbers continue, investors are going to be intrigued by whether or not, we're going to see more and more revenue driven from some of these new ventures like the UAE.
Okay. All right. Nice. Good analysis, Jeff. Thank you very much. Like the Win expansion story, too. Let's do some trading. Let's go to the options. Dan Deming's with us, managing partner at KKM Financial. Dan, best hotel in Vegas, only one answer. It's the Win. But it's actually technically the Win Encore is the correct answer.
That is correct, yes, and it is beautiful. There's no question about it. There's some other nice ones down there, but the Win is certainly very, very nice.
In fact, I guess I should be fair. There are great casinos in Vegas. I don't know. Maybe I don't want to be a stock endorser.
There you go.
Haven't checked out the Boston one, though. But it's pretty nice. UAE coming too, Jeff telling us. I mean, there's some decent little momentum here for Win. If China's no longer this massive drag.
Yeah. Explosive. Even as I set up this trade example this morning, Oliver, we've moved a couple bucks higher.
I ain't took a trade yet.
So, powerful move.
I missed the squeeze. I should have got this one right here. I seen it, called it out, but I didn't take it.
Given the fact that it seems like
that big hammer
is a big shift from potential price action standpoint for anything that has a relation to China or will be impacted by the possibility of them really trying to kickstart their economy here. So, yeah, I think that based on some of the upgrades that we have, you guys were discussing, and just the general trends, that I could see it challenging those April highs, around 117. So I do think that there's probably going to be further upside for this stock. And today's trade example is just a call spread, Oliver, to try to capture more of the upside. Define your, define the risk parameters for this type of move, but nonetheless still try to capture some of the upside.
Okay, nice. How do you figure out your strikes? How far do you think it can go?
Well, again, I think it could probably push up to the 110 area here over the next month or two. And the initial trade example was in October, short dated, because I thought the momentum was going to be consistent here, at least for the next week or two. But now that we've moved so much, even from the open this morning, that I could consider November for a trade example. Well, but I looked at October, 92.5, 100. So $7.5 call spread. Now that was at basically just in the money this morning. Now we're looking at the price around 95.5 to 96. So you could potentially even roll this up to the 95, 105 type of call spread and try to capture that move higher. The 92 half 90 or 92 half 100 was about $3. I'm sure it's higher now. So the other thing I think that could be considered here, Oliver, if to gain exposure and give a little more time in duration would be the November strikes. You can look at the 95 110 there. I think that's around $5.50 right now. So you need further upside momentum, but it gives you a little bit longer time frame and still able to capture the upside if we do see a move back towards those April highs.
Okay. So we get the upside and we get the breakout continuing. You get a little time on this, but it's a momentum trade. You need it to keep grinding.
Yeah.
I mean, look. I mean, I guess because you're also selling the 100, that you've got a good bit of buffer. But if
Right.
you want, but that's just kind of to break even to make a nice trade on this. You need it to keep going.
Yeah, you do. You need it to keep going because they're, I mean, the one thing about the October trade example, the 92 half 100, now that the 92 half's pretty much in the money, I mean, your intrinsic value relative to the premium you have to outlay is pretty much in line here. So you're pretty much going to own the stock pretty close to where it's trading. Now, November 1, you would definitely need the stock to continue higher because it would cost about $5.50, so you would need some upside momentum with a potential payout of $15 if it does go all the way to 110 if you did the 95 110. So yeah, I mean, the thing is that because of the nature of this move, Oliver, and just the sheer steepness of it, I think from a risk management standpoint, defining the risk is pretty much part of the thought process here today. So that's why looking at a call spread to define that risk. I mean, you could look at selling a put to finance some of the costs, or some other things to try to reduce the cost of exposure. But I think risk definition is important when you see a move like this.
All right. Yeah, makes sense because it's very likely that we'll have some give back.
I was looking for one more dip.
Extreme, polarized event like this, changing a downtrend, long-term downtrend into a vertical move. Sure, there's going to be some bearish pushback at some point, but at least maybe you get to $100. Maybe we got to test that big round number first. Not
Very
too far
possible.
away. All right, thanks, Dan. Appreciate the trade.
All right, Oliver.
Dan Deming, managing partner, KKM Financial. Looking at the China and the Tesla trade. When we come back, some connection there too.
Yep.
The economy
Big
picks
connection.
up. Is that going to help Tesla sell some more cars at better prices in China, or is there too much competition over there? Meanwhile, of course, we've got the Robo event coming up next month, and it's been quite a couple weeks here for Tesla. It's been a very good September.
Today, Tasty trades ahead of
run off of the early August low.
Toss.
Tesla's rallied $70 and close to the highs of the year now.
Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management,
Damn it.
advice,
I missed
invest on
it.
my own, and trade on Thinkorswim.
You know, Carl,
Just
it's the
missed
only
it.
front man you need.
Oh, I gotta take this, Carl. It's Schwab.
I missed it.
In how you invest
I'm so bad.
with Schwab.
I really wanted it to come down one more time.
From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
NASDAQ pulling back a little bit, watching NVIDIA this morning. Now about a 2% drop, limiting the market upside. Let's talk some growth themes with a focus on Tesla with Gary Black, managing partner of the Future Fund. A big Tesla bull, a long time one. Gary, welcome back to the Schwab Network.
Hey, Oliver, how are you?
Doing well, enjoying a Friday here with stocks, trying to hold on. Tesla's had a pretty good month and a half now. You think this is an expectation that they're going to do a big unveil, or maybe that some of the auto strain will find some relief now that we're cutting rates here and abroad? What's going on, Gary?
I think it's a few things. So one, you've had the Fed cut rates. Tesla's a long duration stock. It's got a very high PE, about 112 times. Long duration stocks do better when, you know, rates go down. So that's point one. Point two, I think there's growing anticipation they're going to beat in the third quarter on deliveries. That'll be next week. And, you know, the street's looking for about 460, but it'll be the first quarter in 3 quarters we're actually going to show growth again. We're looking for about 6% year-over-year growth. And Cybertruck is contributing to that. Cybertruck is
If I was doing puts, it'd be 572.
20 a quarter now, so let's call it 100 per year. So that's helping. The third point is people are getting excited about the $25,000 to $30,000 compact, which is coming out next year, which in discussions with management, they have confirmed that that is still on track. And then the fourth thing, which is what you talked about, which we're not as excited about, for lack of a better word, but we'll talk about that, is the robotaxi event. And the reason I'm not that excited about it is because I don't think that they're at unsupervised robotaxi yet, the way Google is with Waymo in the US and the way Baidu is in China, where you can just basically get a robotaxi deployment license, send the car out, pick up people, and charge a fee for. There's still too many.
There's 4,300 block right there.
Stuff out there that you can
$4,200, 42 block, 4,200 on Spy. Somebody bought into the Spy
you can
there.
See people upload their data, and you can see that there's still about 96, 97% what they call efficacy.
Unless they bought them to
about
go
3%
puts.
Interventions, and that's too high to have a robotax event. So I think what we're going to see at the robotax event, which I'll be there, will be an unveil, you know, a promise that at some point they're going to get to unsupervised. But at least today, you're still at supervised FSD, which is in the stock.
Well, that's a hell of a
Supervised
drop.
FSD
Oh,
just
never
means
mind.
Somebody has to continue to hold on to the steering wheel and pay attention. But robotaxi is unsupervised, and I don't think Tesla is there yet.
$300 on that
What
trade.
about competition? We were talking with Ross.
572s are right out of the money.
And he was talking about how Waymo's already taken over the West Coast and it's uphill battle for Tesla. My point was like, all right, well, at least we know like it works and that people are willing to go into robo-taxis. So there should be some, you know, pretty big market. What do you think they could do to really surprise and win over the doubters?
They have to get to, you know, they have to get to unsupervised robotaxi. They have to show that the car drives itself 99.99% of the time. You mentioned Google Waymo. Waymo is doing, this is last year's numbers, 17,000 miles without an intervention. If you go to that Tesla FSD tracker, they go about 360 miles without intervention. So they need to improve it by about 50 times to get up to where Waymo is. And I think they can. The nice thing about Tesla is they have a scalable business. You know, their cars cost, you know, let's call it $30,000 for those Waymo cars with the, you know, the LiDAR units and the radar units, and they've got like 16 cameras. They run about $100,000 each, and they're not. It's not a scalable business. They can't just go into every city. Where Tesla, once they set up the infrastructure, and the infrastructure is setting it up, it's monitoring, and it's recovery if needed. Once they go in, they can do that in multiple cities at once. Whereas Waymo can only do it where, you know, they've done the mapping and they have a geofence. And like, so Waymo is now going into Austin in Atlanta, 2 cities. But Tesla can move much faster, but they don't have the product yet that's at Waymo's capabilities, and that's the challenge. And so when I'm looking at Tesla valuation, we have a price target of 270, so we're getting pretty close because we don't put much incremental value in to unsupervised FSD because they're not there yet. Right? So that's the challenge for anybody who's like an Uber bull that has like, you know, $1,000 price target. You show me that they're at unsupervised, and I would add a robotaxi. The way I value FSD is I assume a take rate on the fleet, I assume a take rate on the deliveries. It's $99 a month. I feed that through my P&L, and on my 2030 earnings, it's worth about $1 a share of my $15 in earnings, but it's not worth, you know, $15 a share in earnings, which is what some people are coming up with.
Yeah, I love that math. Very helpful. So then, if that's your kind of assumption, your baseline for the role of the self-driving and the robo stuff, that kind of as a whole category where that goes, what's a price, what's a valuation that maybe is a little bit more tied to the auto sales and the reality of what's driving the stock right now?
Yeah, so
we've hit the 50 twice here.
It just includes a take rate.
3 times.
So I include
4.
nothing for robotaxi. I have a big energy ramp up over the next 10 years, and a big, we'll call it, you know, services ramp up. But the auto business is the big chunk of that, $270. And so, look, you can be excited owning Tesla. Why? Because the deliveries are going to be, and the most important thing to me is the $25,000 to $30,000 car. And I've written extensively about this. If you go on Twitter under @GaryBlack00, you'll see it. But this is very reminiscent of 2020 when they introduced the Model Y. And Model Y was a new category, allowed them to go into the CUV category. The bears said, oh, this is just a big Model 3, it's just going to cannibalize Model 3. That is not true because you get a whole new TAM by going into the compact category, which is about 12-13% globally. The number 2 car in the world right now is Toyota Corolla. Number 1 is Model Y by Tesla. And once you have a Tesla compact, you're bringing the Tesla brand and its performance and its safety record and, you know, all the things that people love about Teslas. You can, you know, charge them anywhere. And you're putting it into that compact category, and they're going to take a lot of market share by doing it. So that's what I get excited about it. And I think at the end of the day,
one day I'll have a Tesla
for the EV business, and
but I can't where I'm living right now.
Energy business. And if you get a robo-taxi car at some point, that's an option. It's a free option you're getting because you're only paying $270 for an X robo-taxi, the way I look at it.
Okay, great argument. So
I haven't took a trade yet.
Generally, lower priced cars, getting something to really even ingrain them deeper.
Probably will after I eat.
Car culture, society in general. The cheaper and more affordable you can get, essentially, is the way you're gonna have the much more kind of sustainable growth too. Because then also, by nature of pushing a cheaper car, they're gonna have to be forced to shore up. All
I'm still looking at the 575s on this dip. Randy, did you get your puts?
You know, the margin out of that. It seems like that's a pretty big part of Tesla's bull case too, relative to GM and Ford and others. Still, is that
the 572s that I called out are
compared to the legacy companies
up 10 cents.
Well, and that's true, but you also have to think about what you just said. They acquire a customer by bringing them into the compact category, so $25,000 to $30,000.
The SPX here of the 5570s is what I'm looking at.
They need new cars as long as they're happy, and Tesla has very high customer satisfaction.
For the calls on these babies.
It might be a Model Y. They'll stay with Tesla, and you know, once they're used to charging it up in their garage, they install a charger for $500, or they get used to going to the, you know, the charging stations. They will stay with the Tesla, so it's actually a good from an acquisition of a customer standpoint. Once they're in the Tesla family, they don't tend to leave. So I think that's important. Your point about margins, you know, Tesla's margins are already in the gross margins, already in the 16, 17.
I'm gonna go in there and cook my egg for my lunch.
Once they go into compact, the margins are gonna suffer. That is not true because this is a very scalable product. We're anticipating that within about 2 to 3 years, compact becomes, this is the $25,000 to $30,000, but they didn't name it yet, so I'm calling it compact. But compact becomes their best-selling car, and it's going to be produced at scale, probably in both Austin and probably in Beijing, and it's going to become a very high-margin company, a product for them, because it's going to be such a scaled product. So I don't expect margins to deteriorate. The only thing that could screw this up, and let's you know, let's talk about the risk, is if they decide they're going to cut prices again. So right now in China, they're going to have a record quarter for China. They've been tracking at record numbers all year. And, next week will be another big week. The fact that the China economy is being, basically, stimulated very, very aggressively is going to help Tesla, right? And so the China numbers should continue to be strong, but it's going to be a record quarter for China. Europe has been weak, and I don't know if it's just because, Europe's in worse economic shape than the rest of the world, or, there's just...
No, that's it, basically. I think so.
I mean, that's probably the answer. I was going to say maybe there's some brand issues with Tesla in Europe. I'm not sure. But in the U.S., it's been okay. I mean, but a lot of it's been bolstered by Cybertruck this year. But I do think that as long as China can start growing more rapidly than it's been, China's going to continue to be the engine that's going to drive Tesla.
Yeah.
And I think you're going to see that into 2025. And again, that $25,000 to $30,000 car, you remember, you were here back in 2020 when Model Y came out. The bear said it's just a big Model 3, it's just going to cannibalize Model 3. It did not. It cannibalized Model X, which is the big SUV. And the stock went up 7 times in 2020 because earnings estimates kept leapfrogging each other. And while compact is not as big a category as CUVs, it's maybe 12 to 15 versus CUVs are let's call it 30 to 35, so it might be a third to a half. It's still going to be a big incremental category for Tesla again, and that's the goal of marketers, to keep extending your product to get more TAM.
Got it. Love the numbers, love the logic. And important reminder too that the cheaper car probably going to be a bigger, immediate kind of accretive thing to the bottom line than the robo-taxi stuff. But still fun to think about where that could go. Appreciate it, Gary. Thanks for the walkthrough of the analysis.
Okay, thanks, Oliver. Talk to you later.
Bringing it back full circle to the China conversation too. I do think that's really important. Jim Black, managing partner of the Future of Fun. China recovering should limit some of the deep downside risk of Tesla. All right, when we come back, charts for next week.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks.
Kevin
Catch me
Hickey.
on Fast Market, weekdays at noon on the Schwab Network.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does
Came back and hit the 50 like I said it would.
and robotics.
The SPX.
I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab.
investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any
I'd be looking at puts here again.
Schwab Network.
The 572s are now at 102. Do 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 do. Still think we can get back down here sometime today.
Okay, let's get ready for next week. We got some fun earnings coming out. Kevin Green getting us ready for the numbers. Rick Ducat on the charts. KG, let's talk some cruise lines first. It seems like Carnival's trying to follow Royal's strength, but hasn't quite broken out yet. What are we expecting for the numbers?
Yeah, we're actually expecting some pretty decent numbers here, Oliver, for the quarter. The revenue estimate right now is sitting at around $7.81 billion. That would be around up around 14% on a year-over-year basis. And the adjusted earnings per share estimate right now is at around $1.17, which would indicate around a 34.9% increase on a year-over-year basis. Now, what's really going to be the focus is going to be obviously the occupancy rate. Now, we are continuing to see estimates move to the upside here for that. Right now, analysts
They're going to install a front
occupancy percentage to come
camera,
in
outside camera for security.
Higher than 109% a year ago. So that just shows you outright demand when it comes to the cruise line itself. And then also looking at the onboard and other revenues. So how much are consumers actually spending on these ships? And we're actually expecting that to be up around 9.8%, or the analysts are expecting that to be up around 9.8% on a year-over-year basis. And if that can continue and that trend continues, it shows discretionary spending, but it also is a higher margin product offering for the cruise line itself. So that's really what's going to drive revenues. I think the biggest question mark is going to be fuel costs. We have seen fuel prices go down when you're looking at futures contracts, but when you're looking at fuel oil for ships, they have been still at elevated levels because of the rerouting of new shipping routes for logistics as a whole. So that could actually be a pressure for them when it comes to margins. But overall, it has had a really nice story from the lows over the last couple of years.
Okay. I mean, Royal's been like incredible, so it seems like there should be some decent overlap. But this chart seems close, Rick, to making a big move.
Yeah, you know, we've...
I'm going to have to clean this chart up pretty soon. It's getting kind of blurry.
And albeit a pretty wide range here between like 14 at the bottom and roughly 19 at the top or so. We did have some intraday movement beyond those points here, but that's the general lay of the land here, or lay of the sea, I guess, so to speak. But so more recently, though, we're seeing acceleration of trend. Check out this blue line. We had this this trend line here that began near that low point, near 14 here, but then we've steepened into this white trend line here, and now we have two competing trend lines. We have a very shallow, very modestly sloping downward trend line going across the highs, and a much steeper, shorter term trend line going upward here. So now we've got some conflict. So we have to kind of wait and see which one wins out right here. But RSI, our measure of momentum, is favoring the bullish side here. We're above the 50 midline. We're trending upward here. We are, you know, we've backed off a little bit from that overbought area. That would be a more positive sign if we were to re-enter that area along with a breakout above resistance. So obviously, you know, when we talk about support and resistance, we've got this red line here, this repeated high point. We've got our trend line very close to each other. So this is kind of a confluence here, 19 to like 1920 or so. The next spot to the upside, 1974. To the downside, we've got our recent lows and our 21-day EMA at about 18 and 1768 respectively.
Okay. So a good little pickup here of the momentum. RSI looking the best it has in a while, but did try this before and failed on the run-up in July. You also had the RSI kind of trending, but it wasn't quite as strong as this is. It was kind of a little bit of a plateau where you kind of had spurts that kept stopping.
Actually, bearish divergence too, you can see, because price made new highs, RSI was trending down. Be on the lookout for a situation like that to develop. Caveat, it's not uncommon for momentum to slow down as we head into earnings. So you got to think about this.
As we head into earnings.
Earnings are good. Got a nice little potential for a rip there if we can break out. All right. Seems pretty good. So it could be definitely worse. Close to the highs, not bad. All right, let's talk Nike here. Obviously, we've got this big move. We've got some major shift in strategy and leadership, KG. So what drives the narrative around the earnings then this time around?
Yeah, I'd say the stars are aligning here when it comes to Nike. Leadership change, as well as the optimism when it comes to China, which is also fueling this rally to the upside here. We are actually still expecting a year-over-year decline when it comes to top line and bottom line numbers here. We are expecting revenue to come in at around $11.64 billion. That would be about a 10% decrease on a year-over-year basis. And the adjusted
exit idea for the
sitting at around 51 cents. We're looking at around roughly 40 to 45% decline on a year-over-year basis. But you are highlighting the leadership change with Elliott Hill taking the new
for the puts
and John Donahue actually stepping down here.
I'm gonna see if we get back down here to the 200.
Usually when we have have leadership changes of this
EMA and SMA.
That's being reported usually is attempted to be a little bit of a kitchen sink quarter when it comes to expectations moving forward, just to try to reset investors' expectations, to say the least. But we might not.
We're at support right now.
Maybe the best guidance, but I think it's going to be the vision moving forward here. We also are going to be looking at the Greater China numbers. They have been weak. Obviously, Europe has actually been able to offset some of that weakness. But if we continue to see
coin new highs
in Greater China and a deceleration on a quarter-over-quarter basis, that could be negative for the stock. The opposite of that could actually fuel the stock even higher here. So all eyes are going to be on.
The SPX is at 330.
Of focus out of the three that we have on the radar here today.
It's at support too.
Call two pretty big, right? To hear the language and the vibe and the tone from the new CEO who came from within. So to see if that sounds very familiar or if it sounds very new, who knows? We'll find out. How fresh is the voice going to be? And I wonder which the market would prefer. I think probably wants something a little bit new,
Come on,
a little
drop
bit
a little bit more.
perhaps some ideas. So we'll see how that goes. Chart-wise, Rick, we got the pop, and then, we're kind of closing the gap, or how do you think about it?
Kind of in no man's land right now here, and I'll explain that here because we've been trending down for a long time, and when we started at these yearly highs near 123.39. Since then we connected to these highs and these highs here that gave us this longer term downward slope to consider here. But more
go get my
recently,
egg on.
jumped to the upside. I believe that was when they announced the new CEO. We crossed above two of our moving averages, yellow 21-day and orange 63-day, the faster, crossing above the slower. And we can also see that RSI has improved. We've accelerated in terms of the RSI with a more steep trend, and we are in the overbought area. So things are looking more geared toward the positive side. But as I said, kind of a no man's land right now. We had this large gap to the downside. We're in an area of relatively little trading according to our volume profile study here. So, the next area of interest to the upside would be right around here. We've got a lot going on.
We're at support, but I want it to drop.
2-day exponential moving average, the pre-gap downward low point at our red line, and our volume profile point of control, all coming together right around like 92.50, 94.30 or so, between that area. So there's a lot going on there that would be a significant area to break above here. To the downside, old highs and then subsequent post-gap up lows near 85.39 at our green line. That would be another area to watch out for potential support.
All right. So we kind of got the breakout in a long-term context, but it's almost like a breakout that doesn't count when we're in the middle of that gap still in a way. I'm just kind of like consumed by this because one of my caveman trading adages is, you fill gaps.
Yeah.
So it's like, that's what we've been doing. And so if that's kind of like the baseline assumption, you kind of go back to test that price you broke down from in such an extreme way, it's almost like that whole complex of closing the gap to me is like a separate thing from the trend in a way. Where like this breakout of the trend looks great, but if you look at it in terms of the gap closure, it's kind of almost an expected thing. Now, I'm being a little bit extreme in that view, but that's kind of the way I'm thinking about it here.
No, I see your filling gaps is very common in trading. That's such a old adage. It's anyone who's has any experience in trading has probably heard that we have to fill these gaps, or gaps are commonly filled rather. So that would not be surprising at all for that to happen. But then the question is, do we break upward or do we fail at that resistance point? That would be really what you have to assess when we get closer there.
Okay, nice. All right, really interesting chart for Nike. Hey, KG, real fast. Constellation Brands. We're gonna booze it up into the fall, or is the summer trade over?
It does actually look like it wants to continue this rally to the upside here. I'll let Rick hit that, but we are actually expecting maybe a mixed result when it comes to earnings. The adjusted earnings per share right now, estimate sitting at around $4.11. The estimated revenue, $2.95 billion. But the beer segment is really going to be the highlight and focus. We have seen an increase, a healthy increase on a year-over-year basis. Last quarter, they reported sales up around 8%, and that's really being driven by Modelo. Now, they also saw depletion volumes rise by 11% for Modelo as well, just once again reaffirming the demand story that is there. But wine and spirits has been declining. It has been losing its...
IWM had a good day.
The Eastern Western European market, and so if we continue to see that type of decline and beer is not able to offset some of that weakness, we could actually have, maybe a little bit of a negative report. But I'll let Rick hit the technicals. We have seen a pretty decent bounce to the upside here because this is considered a consumer staple, and consumer staples have seen positive inflows from a sector standpoint.
Yeah, very true. Rick, breakout potential?
Come on, drop.
Yeah, when we look at
Drop
this one, we
to
can
the
see
VWAP.
we've been in a downward channel, but we're breaking out. We've broken above our moving averages and our volume profile point of control, trending upward, breaking out of this channel. Next resistance spot is this set of highs here near 265.70. RSI geared toward the upside, trending upward above the 50 midline, breaking out of this downward trend line here. So looking pretty good. Potential support at the old trend line here, this blue line, then our moving average cluster and our point of control. So like the major area would be like 250 or so. That would be the real line in the sand.
All right, so another potential breakout from the channel here. All right, nice. Like the RSI too, kind of getting squeezed in, looking like there's some energy building up down there. All right, Constellation Brands next week, long side Nike. That should be fun. Thanks, guys. Appreciate it. KG, Rick Ducat, market meetup. When we come back, NASDAQ down a little bit, but the Russell's ramping, Bitcoin's moving. Seems like we could get a little push here.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Come on, VWAP. I'm eating a burrito. Egg and hamburger and collagen.
Welcome back to Morning Trade Live. We've got NVIDIA under some pressure, NASDAQ down a little bit, but stocks overall solid. Mr. Michael McCurd joins the panel this morning, Director of Schwab Advisor Services, always bringing us a chart or two. And Diane King Hall comes back to us from New York. We're missing NVIDIA, Diane. Otherwise, it's a pretty good session here. Small caps are really having a great day.
Yeah, they are, and we've been watching that for a little while now just to see if there will
A little
be a
while.
trend of continued inflows into the small caps. So
More like
we're
2 years.
Certainly seeing some of that pick up and some
Good
demand
year.
there, especially when you think about throughout this year we've talked about the scope and depth of the gains that we've seen in the market, wanting to see some more growth in the Russell to see if there was something there, in other words. So it looks like in terms of that PC print, that just continued to add more fuel to the fire, the expectations of the Fed achieving the soft landing that it's been seeking to achieve, and especially if you take that in the context of the one dissenter, which was Michelle Bowman, who only wanted to see that quarter point hike. It shows that overall the general consensus proved out by these latest inflation numbers, and so we're seeing that continuation of the trend that we've seen throughout this week, and looking like we'll finish with gains for the week.
Okay. Yeah, it should be pretty solid, it seems here. We've got most everything this week going our way. Just consumer confidence missed. I mean, that was basically it. But then, of course, Mike, you could look at it, this morning's inflation. You could say, well, personal incomes are going down. The economy is definitely cooling off. But inflation, the core at 2.2.
Credit card delinquencies are up.
Pretty close to the target. So maybe there is some.
So I'm not really all that gun ho.
Well,
Now,
I think the direction of
I did hear
travel
one
for
thing.
inflation for well over a year has been to the downside, and the balance of risks.
I did hear that inventory was looking ahead of this strike, maybe, and this has been the first year in a long time that they have 80% of their inventory in for Christmas already. It's usually about 70, but this year it's 80.
And households being a little bit weaker. I think the revisions might have dispelled that just a little bit. Today, I think continues to be a narrative around the Chinese stimulus that we've seen.
China.
Lower Chinese tail risk means lower global growth tail risk. And that in turn means deeper cyclicals, let's say X energy, because of what's going on with the Saudis, are going to continue to potentially outperform in the near term relative to some of the other factors, like the mega caps and sort of the big technology. So right now, I think, end of the quarter, you could get some wonky price action. Plenty of risks still out there, like the election. Next week's data, hotter data, I don't think will be beneficial to investors' risk appetite.
Yeah, the hotness right now seems to be in the right spot. We got some revisions higher for GDP, and numbers have been not disappointing. Economic surprise almost back positive, so we got a little bit of warmth, but to your point, not hot enough to worry.
Bitcoin's up today, the ETFs.
Just yet. Especially with crude oil. Kind of another big story of the week, Diane, especially when so many people were explaining crude oil's weakness through China demand and weakness. To see all of the China complex surge back, this huge sign of economic optimism in China, and then crude drops anyway because it looks like there's going to be a ton more supply.
Waiting for the flush.
Exactly. That's like a perfect combo.
Yeah, it is. What was interesting to observe about that is it was kind of like the old paradigm was thrown out the window in terms of what Saudi Arabia wanted to see for crude oil prices, and to kind of flood the market with more barrels. That certainly took prices down. Obviously, that bodes well for consumers as those price inputs, will ultimately end up with lower gas prices. So, that would be beneficial to consumers, especially when you think about the direction of inflation. But I think, obviously, we heard this most recently from the Fed, the economic data that seems to be what they'll be paying more attention to is what the job market looks like. So I think that is the big data point that we'll pay attention to next week, the jobs report. We know the last one was mixed. We saw job growth that was higher in August compared to July, but you also saw some revisions to the downside of prior months. So that will be, I think, key to what the road ahead looks like for the economy.
Oh, yeah. Hey, Mike, real fast, give me a technical look at the market. We've got like 40 seconds.
Okay, we're going to take a look at the NASDAQ 100. We looked at it, I think, briefly yesterday. This is the chart that I continue to watch to be sort of a leader in the index space. It has not yet reached a new all-time high. However, it did vault itself above that downtrend resistance that we saw as a result of that August risk scare, so to speak, that was accelerated by the Japanese yen carry trade unwinding. Interestingly enough, the yen is surging this morning up 1.26%, and the Nikkei is down 3%. So, could get a little bit of a stall up here. We have plenty of support that could be outlined. This is the chart to watch.
We got a pennant flag,
going into next week.
so I'm expecting to pull back here. We got a pennant.
Higher high going to hold, extend. We're going to really get the NASDAQ to start trending again. Thanks, Mike. Thanks, Diane. Thank you for joining Morning Trade Live. Trading 360 with Nicole Petalides is up next. I will see you this afternoon at 2 p.m. This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns.
I haven't taken a trade yet, Brawling. That's unusual.
The best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills.
Right now, it's fat cats are at lunch.
Competition or by technology.
When we look at your whole brain,
There's some buys going in there.
activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales. Turns out, I am very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this
Well,
is
you're so good.
a human superpower?
Drop, baby, drop. Give me an opportunity.
Welcome to Market Overtime on the Schwab Network.
Quality focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy. So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
There it is. One more drop, baby. One more drop. One more drop.
Good Friday morning, friends. Glad you're with me. 90 minutes left in into the trading day. All right, I'm rushing us to the bell. This is Trading 360, and I'm Nicole Petalides. Glad you're with us. We're live on the floor of the New York Stock Exchange. It's a winning week on Wall Street. We're seeing records here this morning for the Dow and the S&P. But as you look across the board, tech is the only sector to the downside. Energy, utilities, financials, industrials, all with up arrows. The S&P up 1% this week. The NASDAQ up 1.5%. The Dow's at 42,519, gaining 344 points. The Russell is up about 0.5% this week and gaining 1.5% today. Oil and gold are mixed. Gold today pulling back $21, $26.73 a troy ounce after hitting some record highs throughout this week. Oil is down for the week, but right now it's $67.96, just up fractionally. Oil down over 4% this week. The VIX is behaving 15.44. The dollar watching that 100 level, sitting at 100.08. Still talk about the yen carry trade. That's something that sort of threatens folks. We still think about that. Bitcoin 66,785, up 2.5%. But the key is really about this inflation print that we got today, cooling inflation that gives the green light to the Fed to continue with its rate cuts that everybody's counting on, coupled with the China stimulus throughout this week that really gave a boost to markets. In the meantime, we're joined by Kevin Hanks, Senior Equities Contributor here on Schwab Network, taking a look at a name that's someone related to this China story, and that's Wynn Resorts. Let's hear a little bit about that. Good morning, Kevin.
Good morning, Nicole. Yeah, China stimulus going throughout the market. Remember, Wynn has large capabilities or exposure to Macau and the gambling sector there. Getting a boost today from Morgan Stanley analyst Stephen Gramling. Upgraded Wynn Resorts to overweight from equal weight. Price target $104, up from $97, representing a 25% upside. Wynn's near low valuation, underappreciated growth opportunity in the United Arab Emirates, and the optionality around Macau provide a favorable risk reward. So, Nicole, if you can imagine, all these stocks, everything that can connect the dots to the China trade and all the stimulus that China is throwing at this market. Analysts starting to follow suit now with upgrades across the board in a lot of these China stocks. You still have to determine if stocks related to China and can fall under the power of the communist government are worth investing in. Tradable? Yeah, they're tradable. They're great movers, but are they investable, Nicole? That's the question that investors really have to ask themselves.
Yes.
Yeah, it was interesting because we saw yesterday, I was talking about Alibaba, JD.com, all of these names that have run up this week, 10, 20, 30%, some of these names on the heels of the China stimulus. And we heard more about David Tepper, the hedge fund billionaire, who said, I'm buying everything China. He's buying ETFs, futures, he's all in on this. But as you noted, so many of these things are already up. And how much further can they go? So that's the question. Thank you so much. Kevin Hanks, good to see you, senior equities contributor. Good to see you, Kevin Hanks. Let's get some insights on the news shaping the markets. Right now, Brian Zeitel is with us, Senior Managing Director, Partner, Co-Chief Investment Officer at the Bahnsen Group. Thank you so much for being with us this morning. Some of your thoughts on the market as we're hitting some records today and foresee some more rate cuts coming.
Yeah, well, that's it. We had PCE data out today, just slightly weaker than expected, and that gives the Fed more room to continue on their rate cutting cycle. And then, just like your previous guest mentioned, there's some follow through on what's going on in the Chinese markets, which has really been quite phenomenal the last couple of days. Shenzhen's up 13%, so I think some of that is flowing to ours as well. But PCE was 0.1 on headline and core. That was a little lower than expected, and so we're looking at a 3-handle yield on Fed funds somewhere middle of next year, and then a low 3-handle, towards the end of next year.
So that being said, is this market investable? Do you find opportunities in a market like this? Some of your thoughts there.
If you're talking about China, and forgive me, I cut out for a second, but there's opportunity there. It's we're dividend growth equity investors, so it's not a pond that we typically swim in. That said, look, the market started out at earnings before the stimulus, came to fruition, and so it was cheap already.
There we go.
And you've got this big run up at this point. As far as does it have further to go, I'd still point to the fact that it isn't, from a multiple perspective, overvalued at this point, even just because it's had a great week. So I think there's still opportunity there. Yes.
Okay. And then here at home, how do you navigate and manage a portfolio knowing that rate cuts are coming? I guess there's always wild cards from geopolitical events or the election. How are you setting up portfolios these days?
I'd be reticent of going index investing at this point. It's been a great trade the last couple of years, but at this point, I really think it's important to be very selective in what you're owning in this market. There's great dividend payers, which is where we tend to focus, that are trading at 15, 16 times earnings, where the rest of the market is at 22x, maybe 20 next year's earnings. And so you can find better value looking at some of those names, particularly some of the industrial, some of the energy names, some things that'll pay you cash flow now, and not just be tethered just to falling interest rates. Because at the end,
575s.
Environment with where the economy is, where rates are just going to go simply back to zero. We're talking about still a Fed funds that'll be a point above inflation by the time they likely get to terminal.
And so with that, you mentioned energy, and I think about where we are now. In fact, oil has pulled back about 4% or so this week. Tell me about that trade a little more. I mean, do you think energy could move higher or lower, or just sort of playing it as energy being something that you can count on?
Well, just from a demand standpoint, if you think that the Chinese economy is going to rev back up here a little bit, then there's a pretty big consumer coming back online for energy prices. That said, the area that we tend to focus is more in that midstream energy space. It's the pipelines. It's companies that are transporting natural gas and energy across the country to get to refineries and ultimately be shipped around the world. And I think there's a very investable thesis there, not only to capture cash flows today, but again, that growth play over time as that paradigm shifts and plays out.
What do you think about the Fed, how it cut 50 basis points, and some of that was to basically make sure that the market stays the way it is, particularly the labor market? There were some concerns there, and you even had Jay Powell alluding to another
here we
report
go.
that he looked at besides the Bureau of Labor Statistics that showed some weakness, and he expected some revisions in the jobs numbers. It sort of spooked people a little bit.
Got my first
There were some
order in.
worries about the labor market. In the meantime, yesterday we had jobless claims at 4-month lows. Do we have a problem in the labor market or not, right?
We do. Yeah, no, there isn't a problem in the labor market, and you're right. A 219,000 initial jobless claim number yesterday which was lower than expected, and again at 4 or 5 month lows. It doesn't speak to something falling out of bed. It definitely speaks to the labor market cooling. We've had unemployment, call it 3.5, go to 4.2. That's a significant increase historically. An 80 basis point increase on unemployment isn't anything to sneeze at. And so I think the Fed is trying to tether taking some of the restrictive policy offline, try to have that soft landing play out, and the only way to do that is to start cutting rates here a little bit. But no, employment isn't falling out of bed yet. We're not seeing that. You can see weak job openings numbers coming down, but you're not seeing unemployment really dramatically rising as of yet.
You
Got my
mentioned
first
some
order in right
sectors
here.
like industrials and energy. You noted that maybe staples and healthcare are good defensive plays during a rate cutting environment. Tell me about that.
Well, historically, the period of a pause when they increase rates to where they're
575 strikes
is generally a pretty good market period. Technically, this run during our pause was one of the most robust we've ever had. Okay, so there's part of the market that has really run up here. And so some of those defensive historically, when we start to cut rates, and most often when they're cutting rates is because the economy's slowing down. We're seeing that a little less this cycle. I think some of this has to do with just the post-pandemic, strangeness or uniqueness in this particular cycle.
Ooh.
But some of those defensives, staples particularly, that you get a nice dividend income stream now, that income is going to grow every quarter, you get stability, and whether they hit a soft landing on the Fed or whether they don't, you've got great businesses trading at reasonable multiples in the portfolio. And I prefer to do that versus some of the overvalued sectors, particularly large cap technology.
All right, great to see you. Thank you so much for being with us, Brian Seitel. Thank you.
Thank you.
Plenty
Thank
more
you.
to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat goes through the technicals. Joel Hawthorne will take us through the trades. He's looking at some Chinese stocks and he's seeing some bullish opportunities. Alibaba, JD.com. He also has Expedia on there. He'll explain here on Trading 360. Schwab Network. We'll be right back.
Dude. Doo-doo. waiting to add on.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock
My
Exchange.
5770s are
It's time for
3 notches
trade.
down.
3 stocks, 3 charts, 3 trades. And Rick Ducat will take us through the charts here to take us through the trades. Joel Hawthorne, head trader, and he's with Retail Trader Magazine. Thank you so much for being with us. So, wanted to hear
Snake
Joel, some
breakout.
of your thoughts, please, on the market.
I am very optimistic right now, Nicole. Thanks for having me.
Very
Always a pleasure to see
optimistic.
you guys. I think the market right now, we know just last week or so, we were talking about the 50 basis point cut from the Fed. This week, it's been all about China and them injecting stimulus in their economy. That's the bigger narrative. I think that narrative, quite frankly, is even bigger than the 50-point basis cut from the Fed that we saw. So I think there's definitely a risk on sentiment for China, and that hasn't been for a while for their economy, for their stocks. So because of that, I'm very optimistic and I'm very bullish.
Understood. Okay, so feeling optimistic, feeling bullish. People like the moves they've seen.
I'm going to
You
move
think
these
there's
up to the
potentially more upside. Baba has
5765s
certainly been a winner this week. Through late yesterday, I did a double check, and it
on
was
the
up
SPX.
18.5%. I didn't check it lately, but it's having a great week. And so, where do you think it's headed?
Yes, it has. It has a great week. I think so. 18-20% or so this week. So you definitely can see that there's been just a lot of action in the options market in a name like Baba and some of the other names, but definitely bullish there. 3-year high in Baba is 182.09. It's currently trading 108 and change. It's up over 3% today, up about $3.50 at the moment. I still think there's room to the upside there. However, I do want to wait for a bit of a pullback, if you would, a slight pullback. Maybe there's some profit taken at these levels as we broke above 100. So if we see maybe pulling back to 103 or so anywhere in the near future, that's where I would maybe add to my position. But I think we could easily see maybe 125-ish or so more to the upside here in the very near future here, as I think people are going to be piling up. The China trade has been, and a name like Baba too, one of the most popular names traded in the U.S. This is a name that I think a lot of people are probably going to look to put risk on for some China stocks.
Yeah, adding gains today. I just checked. So now we're week to date up 23.2% on Alibaba. And by the way, JD, which we're going to talk about next, that's up 39% this week. Staying on Baba here, let's get to Rick Ducat to take a look at the charts, please.
The move up has been extreme in this stock here, and when we look at the chart here, we can see
Extreme.
that there's a lot going on. The first thing that we would note is that Alibaba kind of hit a wall around 90 repeatedly. Like, we just really struggled to get above that point. We kind of drifted sideways for a long time, bouncing back and forth between like 66 or so to 90 here. But recently, we broke above that level with a vengeance here. We have really taken off from that 90 point. We're up like 20% from that point here. Actually, even a little bit more now because price has strengthened, recently here. But we can see even before that, the trend was accelerating to the upside. Our purple line, we had kind of a shallow slope. Our blue line got steeper. Our white line, very steep here. Just a reminder, the steeper a trend is, the less sustainable it is. I'm not saying it's going to reverse, today or anything like that. I'm just saying that, kind of statistically speaking, the more extreme a move is, the more difficult it is to kind of hang on to the gain. And when we look at this move here, we can see a couple things. First, RSI overbought, sign of strength, continuing to make new highs with price. Second, Nicole, you kind of posed the question earlier, how much higher can things go? That's what I want to try to look at here. Standard deviation channels can help. Our blue line, our linear regression line, was our line of best fit. Then we go 1, 2, 3, 4, 5 standard deviations to the upside from that point. That tells us this is a very extreme, very strong move to the upside. It also gives us some boundaries to watch. Plus 5 channel now becomes support. 108.50 would be an area to watch. And then the +6 channel, we don't really say that very often on this show. We don't really get to a point where we're talking about this, 114.28. And real quick, I'm gonna cheat here. Normally we just do 3 stocks. I want to quickly show a 5-year chart here because there's a couple other levels to watch. It also speaks to how much this stock has suffered recently here. So we can see a repeated high point, our red line, 120, another high point on the way up, 138.70, a couple of additional potential areas to watch for resistance, Nicole.
Yeah, and I like that longer term chart. It reminds us, what it was, but it's certainly been an exciting week. Joel, final thoughts on that one?
Love the charts from Rick. I agree. I think definitely there's a lot of optimism. And looking at just a normal distribution, when we start to look at those standard deviation extremes, we know that's really where the money
57.65s are getting tasty.
In a shorter period of time.
Getting very tasty right here.
Will be very exciting. And then obviously we know that we're coming into an election. So it'll be very exciting to see what happens with a lot of these names from out of China.
Okay. Staying on China for a moment, I mentioned JD.
You got
which
one.
is up almost 40% this week, JD.com. Tell us about this one.
Similar narrative, definitely. We're looking at it right now, trading about 39 and change, up over 4.5%. 3-year highs about 91.43. So definitely having room to go, a lot of room to the upside. And this is one that was kind of really trading around that 20-ish, $25, $24-ish range for a bit when we think about the past several weeks. So this breakout is definitely one that is needed. And I think, again, more optimism in some of these names. This one may be a little bit more attractive just because of its share price under $40 right now. But I'm a bull here and looking to use options to do so.
Okay. Tell us what you think, Rick, about this chart. Probably looking similar with the big move higher.
For sure. In the near term, it is pretty similar here. Both have had this explosive surge to the upside here. When we look at our chart, we can see that the shape was a little different leading into things, but kind of the general read was similar here because we had a shallow trend line going up. We started to accelerate. Then we really took off here. We took out these old highs right here near about 36 or so. And then we can see, once again, the RSI overbought, making new relative highs along with price here. Everything behaving the way the bulls would want it to so far. Now we can also see our standard deviation channels once again here. Blue line, linear regression line. 1, 2, 3, 4. 4 standard deviations to the upside is where we are now. Not quite as extreme as our last chart, but still, this is a very strong, unusual move. It's not
I'm
very
up 60 on
common
it.
Standard deviations in this case being a +2 or -2.
I got the SPY.
Usually, stocks tend to stay within that type of range. So when it starts getting beyond that in either direction, I sit up and take notice here. If we were to keep moving to the upside here, +5 channel comes in at 42.25. Our +4 channel, 39.45, could be supportive. And then further to the downside, this old high point right here near 36. Once again, real quick, just looking at a 5-minute chart, kind of 5-year chart. Similar situation here. We crossed above those old highs, and then some relevant high points to keep on your radar, as if we continue to go to the upside, would be 41.95, this high point, and then our pink line here, 48.96. So roughly 42 and 50 would be potential speed bumps to the upside.
Okay. Thank you for that. Noted. Any final thoughts, Joel?
Sure. Definitely want to be a bull here in JD, but I'm going to use options to do so. So I'm going to sell the 38 put, simultaneously buying the 37 put. Both expire October 18th. Collecting a credit of about 36 cents. Break even is 37.64. Just looking to collect some premium over here roughly for the next 3 weeks or so and see what happens.
Okay. Last but not least, Expedia, which BTIG maintains a buy on Expedia, put a 175 target. Today it's at 149 and change. Where do you think it's headed?
I believe that we could possibly see 160s maybe by first quarter or so of the 2025. So I'm a bull here, is where I just think that right now it's very difficult with all the positive information that we've got over the past couple of weeks to look for reasons to be so pessimistic. So I'm a bull here, Nicole. Plus it's Friday, right? Let's be a bull, right?
mean, I like a trip and be a bull and get on an Expedia trip, but I'll tell you, there were a couple of calls just recently from TD Cowen and also another here. TD Cowen downgraded Expedia to a hold with a 150 target. It wasn't long ago that Cantor Fitzgerald put a 130 target. That's well below where it's trading right now at this 150 level, and has reiterated their neutral. So while BTIG and yourself, Joel, feeling positive, it's not certainly unanimous. Let's see what Rick Ducat says about the charts.
Another reason to be a bull in general, it's more fun. You know, not speaking specifically to this chart here, just, you know, the bearish side is a lot tougher, I think, in many ways here. But nevertheless, looking at this chart, similar situation in some ways to our first chart in that we had a repeatedly tested ceiling here at our green line. We really struggled to get above that point near about 140 or so. 140 was the ceiling there. From there, though, we had once again acceleration of trend, gradually steepening, sharper slope to the upside, then another pretty strongly upward biased trend line here. Rising wedge kind of shape between our two blue dashed lines looked like the way things were playing out, but we are pushing above that level today here, pushing above some smaller volume nodes as well. The next one to be on the lookout is rather small here, but that would be the next point to watch to the upside for this stock. Now, RSI also had a triangular shape in the shorter term here. You know, that's kind of a sign of shrinking volatility. You look for a breakout when that starts to happen here. Now we are very close to the overbought area. A push into that area would be regarded as more bullish. As it stands right now, a tiny bit of bearish divergence here because price is making new closing highs. RSI is on pace at this time for a lower high here. So something to consider. If we did keep moving upward, this candle is really important here because that's where we hit those 52-week highs, and that also was right before we had a large gap down here. So the gap is important, and those highs, 154.82, 160.05, those are the areas to watch to the upside. And then our old ceiling now becomes a supportive point near 140, lines up with our 21-day EMA as well.
Okay. Joel, you get the final word. Thank you for that.
You know, I think that right now with, you know, the S&P being at all-time highs, we're seeing that we're trading in that no man's land. I think the market, the bigger story here is this bull. I think definitely being a bull, but being a stock picker's market, looking at undervalued names. I think Expedia has a ways to go to the upside. That's why I love this name. I'm looking for a slight pullback, maybe potentially somewhere near that 141, 140-ish level. If we can get there, great. I would definitely add on to the position and add more shares. But in the event we don't, I definitely think that 160s could be a target for the very near future. So looking for that opportunity. Again, I think that the bigger narrative is just risk on is what the market is telling me, so I'm a bull overall.
Yeah.
All right. Thank you both. Good to see you. Joel Hawthorne, Rick Ducat, thank you both very much for the big three today. Coming up next, a spotlight on Super Micro actually getting a little relief today. We saw a big drop yesterday. It's been under extreme pressure throughout this week. The investigation by the DOJ, what it means for this stock going forward, and is it worse? Could it be deeper than what it appears, according to some of the legal woes that people are watching closely?
I gotta get some water.
There's love for this stock today. It's up 3%. Let's have a conversation next.
Do 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 do. We're squeezing on the SPX.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market
Damn it,
news.
320.
It's Market on Close.
Damn it.
Join me, Oliver Rennick, for the biggest
Should I
earnings
sell it?
coverage, insights from the
I'm
smartest
gonna wait.
minds on Wall Street.
Hit the VWAP.
Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
You gotta break the VWAP over here. If that breaks, this'll break.
Stock exchange here, a spotlight on Supermicro. The news continues. It's being investigated by the Department of Justice. Matthew Bryson is
Department of Justice.
equity research at Wedbush Security.
There's a head and shoulders.
Thoughts on the current situation for SMCI?
Yeah, so
573.90.
Bad news for them, right? You've had the delay in them reporting their financials, so we're still waiting for their 10K. And then more recently, you've got news out of the Wall Street Journal that there may be a DOJ investigation, which is also problematic.
At this point now, I mean, I would like people, just so we can set the stage here, looking at a 3-year chart. This stock was nothing for a long time, and then it took off this year. There wasn't anybody who wasn't talking about Supermicro earlier this year. I mean, this is the 3-year chart, right? When it was sitting around $34 and it crept higher to $300, but then it shot up to $1,229 in March, only to see it now back to $414 ahead of a stock split.
Jim.
Do you have a current price target on this stock, or are you holding off?
No, I have a price target. Having said that, I haven't adjusted it for the recent changes. And I mean, honestly, it doesn't. What's happened? It's really hard to get a handle on exactly what this means for Supermicro, right? So Supermicro's been in this situation before. They ended up getting delisted, but the actual impact to their financials when they went back and had to restate numbers was really, really minimal. Total revenues never changed. It was just adjusting revenues between quarters, and it was a relatively modest amount. Having said that, it's really hard to know exactly what's in the background till you know. So from my perspective, it's a bit hard to say what to do with the stock when there's a lot that we just don't know.
So there's a probe from the DOJ, to your point, from the Wall Street Journal, but until the DOJ actually announces something or says something, I mean, the other side of the coin is this could blow over. Is that a possibility? How likely is that?
I mean, that's the thing, Nicole, is you just don't know. So according to the Wall Street Journal, the DOJ probe is based on a whistleblower's account of Supermicro apparently engaging in some financial or not accurately portraying their financials in some way, but we don't know what that is. If you go back to what happened the last time they struggled with their financials, it was recognizing revenue before it should have been recognized. So, for instance, shipping not completed systems that would have shipped in the next quarter. I believe in a lot of cases it was the sales team trying to hit their numbers. And again, relatively minimal amounts of revenue that were moved, but because it took a prolonged period for Supermicro to restate, the stock ended up getting delisted. So I think we just don't know.
Okay, let me ask ask you this on the positive side of things. I mean, all this was started really in late August 27th, I think it was, that the Hindenburg short report came out, and it came on the heels of the executive who says they retaliated against him when he was reporting some issues, revenue recognition and allocation issues, and he felt that they retaliated against him, and so that sort of started this ball rolling. On the other side of the coin, why do you think everybody loved SMCI when it was $1,200?
I didn't.
What was the driver then? Because it's probably still there now. When you think about these type of tech names, what was SMCI doing right that people were jumping on board?
Yeah, so I mean, Supermicro has recreated its business model. So 3 years ago, it was a second-tier server maker trying to fit into niches that companies like Dell and HP didn't fill. Then ChatGPT shows up, AI takes over, and Supermicro has a leg up on everyone because they've been supplying AI servers to Meta for a couple of years. And so they were just the right company at the right time. And we've continued to see all this AI momentum. Obviously, NVIDIA has done wonderful, and they were the arms dealer for NVIDIA, if you will.
And how do you feel about the stock split? Where does that fit in? Is this, not great timing for a stock split, or it doesn't matter?
I don't think it matters, Nicole. I mean, I think Supermicro was trading at a price range where, arguably it was hard for the individual investor to invest. Typically, stock splits.
We're at a double bottom right now.
Some modest favorable move for the company, but I think at the end of the day, that doesn't really get an answer to the question of is
time to reverse
going on with Supermicro's financials going to be resolved relatively quickly. So we see a 10K get filed. Whatever happens with the DOJ happens, but it kind of slips past it. Or again, is this something more significant where it takes them a year to restate, in which case they've got more significant issues.
So what trends are you seeing, whether it's in tech or AI, and do you have buy ratings on some names that you're following closely?
Oh yeah, certainly. So still seeing strength in AI. I think that strength continues through Blackwell. We have a buy rating on NVIDIA in large part because of that. Same thing with Taiwan Semi, right? They are the company that's enabling NVIDIA. We think they're share gainers. With news out there, Samsung and Intel appear to be both struggling with their advanced manufacturing. That leaves really Taiwan Semi is the only supplier of advanced semiconductor manufacturing. And then a couple other names that we've been talking to recently, Seagate and Western Digital. Hard drive demand in calendar Q3 looks to have been well above what expectations had been. Expect both of those companies to report relatively strong numbers.
All right, so NVIDIA, Taiwan Semi, Western Dig, and Seagate, names to watch there. Thank you so much. It's great to see you, Matthew. Thank you so much. Matthew Bryson at Wedbush Securities. A good look there at SMCI and the rest. Coming up next, we'll dive into the EV space, find out if there's reasons to worry about future demand. Trading 360. We'll be right back.
Do. The SPX can drop a little bit more. SPY needs to hold. It's a triple bottom, more or less.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
QQQ's at a double bottom.
Welcome back to Trading 360. I'm Nicole Pedalides, live on the floor of the New York Stock Exchange. A look at developing stories this morning. We bring in Diane King Hall, senior markets correspondent here on Schwab Network, taking a look at Bristol Myers Squibb. Some big news there. It's being called groundbreaking.
It is.
We'll let Diane tell us more about it.
Yeah, it is. I mean, they got a green light from the FDA for a new drug to treat schizophrenia. This is the first development in decades, in fact. The new drug, the brand name that Bristol Myers Squibb going by Cobenfy, the drug has been found to treat the illness without the same side effects that many of the classes of drugs that are currently in use give to people who are on those drugs. In the past, the drugs that are typically used to treat schizophrenia cause side effects that are difficult for patients to deal with, such as severe weight gain, which in turn causes other health issues. They also, another effect of the old.
Got to give that to our politicians.
This kind of muted effect and this zombie-like effect for people who are on those, and they, kind of have that loss of just interest in life activities and traditional activities. So this is considered groundbreaking. In terms of the reaction in the share price, shares of Bristol Myers Squibb are moving higher off the back of this news. The stock is up more than 3% at the moment. Another stock that is up as a result of this is PureTech Health. That stock is up about 3% as well. And the reason for that was this drug was developed by PureTech Health. They're the ones who initially invented this new treatment for schizophrenia, and they stand to benefit financially from this because with this FDA approval, this triggers some milestone payments for PureTech Health. So it's helping to lift both of them. And what it does for Bristol Myers Squibb is it helps it to develop not just a new type of treatment in this space, but a new class of drugs, given we've seen some loss of steam from some of the growth that we see from the weight loss drugs, so they need development in other spaces as well. So it gives some more diversity to its lineup. But it is considered groundbreaking in this space.
Thank you. Good to see you. Thank you, Diane King. A good look there, Diane King Hall, at the schizophrenia drug from BMY. In the meantime, we're turning your attention straight over to the EV space. Carl Brower's with us, executive analyst at iCars.com. Thank you for being with us. So much to discuss here. I'll just start with the big picture. Demand on EVs. I know we started to talk a lot about hybrids. EV as we know it, is that still hot? Is that demand going to grow, and why?
No, EVs are facing challenges.
Except Tesla.
Sales are still growing. Well, they're growing far slower than they were a year or 2 years ago.
Except Tesla.
And normally the first thing you see before a drop in something is a slowing of growth. So I feel like we're kind of at the early stages here potentially. But there are just too many challenges right now for electric vehicles. They range from macroeconomic factors like that they cost more than non-EVs, and people are paying more for inflation and interest, so consumer buying power has been cut. That hurts their sales. And there's been a certain amount of reaction to people who've had them too. We've heard reports of people who have been in the EV space with a vehicle and now they're not as happy with it, and they may not go back for a second round. They might go back to gasoline afterwards. So a lot of pullback across the market in manufacturers in terms of capacity because they're seeing this.
I mean, I was hearing some big numbers, like 50% of the cars will be EVs. Were some of the numbers too aggressive on how many EVs would be here in the States? Where do we stand now, do you think?
Yeah, when we did a study at IC Cars over a year ago, and we looked at the growth between 2018 and 2023, and we saw that in areas, in cities or states that already were above 7 or 8%, their growth was much slower than in cities and states that were between, say, 3 and 5%. And it became very clear to me that there was a threshold around 8%, that it got much harder to grow market share. And guess what we hit in the last 6 months nationally? About 8% market share for new car sales for EVs, and it's really slowed down since then. So I think getting us to 20, 30, 50% is a long ways off.
It's interesting because EV owners, I mean, they have a lot of choices now. Tesla seemed to be the leader when this all first started. Now,
They still are.
I see Rivians, I see Lucids, I see all kinds of cars on the street. Ford and GM have also sort of stuck with their EV plans, though they've pulled back on the money spent, right, on the production levels and things like that. Tell me about some of the other players.
Yeah, I mean, you've got Volkswagen, who's reassessing production capacity. Ford recently canceled an upcoming SUV, and they delayed a truck that was going to be an EV. If you look really anywhere, you see a much more restrained effort and a restrained product plan around EVs than we had a year, 2, 3 years ago. And a lot of them are pivoting toward hybrids and specifically plug-in hybrids. And I always say, the best diet you can get on is the one you maintain, the best workout regimen, one you can maintain. The best environmentally friendly car you can build is the one you can sell. And if people are more willing to buy a hybrid or a plug-in hybrid and not have the concerns about charging that they have with EVs and still get much better fuel efficiency and much lower CO2 emissions, maybe that's the smarter way to go in the near term.
Yeah, I think also just education or knowing where to charge the EV, it just seems so foreign to folks at this point, at least here in New York, where, I had 400 people at my wedding many years ago.
You're married?
Two
No, I'm
people
very
that have
disappointed.
EVs right now, off the top of my head. So I'm just saying that I just don't see a lot of EVs.
400
I can't
people.
use my people
God.
as the sample, but I'm just saying, why don't 400 people have EVs, right? I mean, if they're going to be so popular, that's what I'm saying. So that being said, Tesla's still the leader. The latest deliveries numbers were looking good. They have the robo-taxi event on 10/10, followed by the earnings. Do you think Tesla's going to have a good event?
I think Tesla recognizes that they've got to get beyond just EVs, okay? As you said, they kind of owned the market for years. I mean, they really had like a 10-year run of essentially no competition in the premium EV world. And now there's competition all over the place. But if they can develop really advanced technology to go along with their EVs, such as robo-taxis and, the ability to have these cars serve a much wider role than just transportation, but start building business models around them because they can actually drive themselves. That's a game changer. And Elon knows that, and so he's pushing hard for that. And I think that's where you're seeing a lot of anticipation and maybe some of the recent stock growth is that people are hoping there's another big breakthrough for them that sets them apart.
So you're waiting for that on the 10th to hear more about that. Okay. Great to see you. Thank you so much. It's nice to see you, Carl Brower of iccars.com. Thanks. Coming up next, our 360 round, we're taking a look at Costco following the company's earnings. The stock is down about 1.5–2% today. We want to talk more about Costco. Consumers love it, but why isn't it up today? Let's find out more.
Down some more today.
Trading at Schwab
Raises price target
giving you
to
even more
1,000,
specialized trading
850, so they're pumping it up.
Connect with the Schwab Trade Desk. Our team of passionate
One has equal weight, two of them have two.
no matter how complex.
Raises price target 755.
Get 24/7 live help.
Well, that ain't good.
Access support by phone, email, and in-platform chat.
That means it's got to drop another $130.
With Schwab.
There's some big wide spreads on
Network app
it. Cost.
And join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network. It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
There's some damage.
Welcome back to Trading 360. I'm Nicole Petalides. It's time for our 360 round. It's Friday. We got you covered, and we're talking all about Costco. Our panel is ready. Matt Todd is with us, Retail Director, S&P Global Ratings. RJ Hanavi is with us, Head of Analytical Research at Placer AI. Thank you both for being with us. Some pressure here on Costco, though Goldman Sachs maintains its buy rating, puts a 995 target, neutral from Roth MKM, and a 755 target. Wells Fargo, a target of 850. Matt, I'll start with you. Some of your thoughts.
Yeah, overall, I think it was a solid quarter. I think we saw more continued disciplined execution. I think they continue to demonstrate a long-term focus. They met expectations.
So you liked what you saw for the most part. RJ?
Yeah, I thought it was an interesting quarter. I mean, we saw pretty positive top-line growth. I thought that the numbers, when they broke down the category level insights, were pretty interesting. Talking about non-food having a really strong result, low double-digit, high single-digit, showing that maybe some of the food inflation concerns that have held back consumers this year are starting to ease a bit. We've seen that in other retail categories.
Got 177 here on the 57.65s.
Even for a value-minded consumer, Costco continues to be the destination of choice. Like the member acquisitions, like the fact they're picking up a lot of under 40 members right now. A lot to like about the story.
And they've been, all of these companies have been trying to expand on e-commerce, their footprint, their shopper experience. Matt, are they doing a good enough job there with the competitors right there nipping at their heels too?
Yeah, on e-commerce, they've been a little bit slower to get there. I think, and this way they put it, they're doing it in a very Costco way. So I think what they're doing makes sense. They're not sacrificing on margin to increase e-commerce. I think what we saw in the most recent quarter, and something they talked about in their margins, is improving efficiency in e-commerce and doing it in the right way. So I think that's what we're seeing. They're going to be, just because of the Costco way, they're going to be slower than others to approach the e-commerce market.
Yeah, and RJ, when you think about where this one's headed, you talked about the consumer and food and things like that, the staples versus the discretionary. And there's no doubt so many of the companies have come out and noted the consumer being a little more cautious. What do we foresee in the next 6-12 months for Costco and the others?
Yeah, I don't think there's going to be any major changes in consumer mindset. Obviously, the election is the wild card here. But generally speaking, there's, even with the interest rate cut last week, I generally think that we're going to remain kind of the same consumer mindset, very value oriented, particularly in the essentials categories, looking for deals, looking for private label, looking to stretch household budgets. But we're starting to see just a little bit of thawing on the more discretionary side. Some of that's pent-up demand after taking a pause for it. We've seen in housewares, home furnishing, consumer electronics, seen a little bit of improvement in visitation trends for that. So I think that the kind of the mindset we're in, maybe the consumer's a little bit.
Vice President Harris visits border first time in 3 years.
That's going to prevail at least over the next 6 to 12 months. Obviously there are some wild cards that could change that mindset, but right now that's kind of what our data is showing us.
Yeah, and we talk about headwinds and tailwinds for a name like Costco. Matt, you noted a couple of things. I mean, the lower rate environment, but that might take a little time to kick in for folks. And one thing you did talk about was the growing Kirkland signature sales. Kirkland obviously being a really popular brand of late now. People are really getting to know it more than ever, right?
Yeah, absolutely. I mean, I think when I think about opportunities for Costco, first and foremost, they're just going to continue to execute on what they do best. They're going to expand their stores, both domestically and internationally. And then you said Kirkland Signature. That's a very strong brand, growing in popularity. They're looking to expand SKUs in that area where it makes sense, and it's a higher profitable product. So as they do that, they'll be able to either lower prices or see kind of earnings margins improve a little bit, but we don't really expect that, significant margin expansion, because that's just not how Costco operates. I think they like to pass on savings to consumers, and they like to pay their employees. Other opportunities, you mentioned digital, and then also this new ads business, I think will create some, again, margin opportunity, but remains to be seen whether that hits the bottom line, is returned to consumers or their employees.
Yeah. You guys might find this hard to believe, but for somebody who lives in New York City, Walmart and Costco are not really on our radar, right? Even though it takes over the entire country. But they've become on our radar somehow, and it starts with e-commerce and the ease of that. For example, my husband's been ordering more and more from Costco. He even noted, hey, there's gas I know there's gas at Costco because I do this job every day. But now he's like almost interested to find the Costco, of which he's been a member for some time now, so that he can try out the gas. So there are certain things or perks at Costco that people love. I would love to hear, RJ, you noted some of the things that are working there. You talked about different areas, housewares, toys, gasoline. What's working and what's not?
Yeah, I think you bring up a really good point there too, because the ancillary businesses here too, the pharmacy, the
multiple blasts heard in Beirut, according to Reuters witness. Massive, thick clouds of smoke
big driver
rising from city.
Obviously, that's probably the weight loss drugs. Some of the other services, and again, it's not just the products that people are embracing Costco for, it's the services, and that opens up a big opportunity as well. Advertising, I think retail media is a huge opportunity for a company like this.
Watch oil.
Which has very good reach both on its stores and its digital platform. Like a lot of other players, as they start to refine this and figure out good partnerships on that could be another opportunity. So wide reach like Costco, there is a lot of potential.
Yeah, it's good to see both. Matt Todd, S&P Global Ratings, RJ Hottovy at Placer AI. Thank you very much. Good to see you. Thanks. Glad you're with us here on Trading 360. Download our free Schwab Network app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. I'm Nicole Petalides. Thanks for being with me every day at 11 a.m. and 2 p.m. here on Schwab Network. So I'll see you at 2 o'clock for the watch list. Keep it right here. Fast Market is next.
This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial.
The old guard
Oh, the LLY puts?
way off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
I don't know if we're going to bounce like we did yesterday or not.
As long as people want to buy it, the price can go up.
Oh my goodness.
Not into the
They
weekend.
cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
We can dip a little bit more.
Good afternoon, traders. Welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today. We're going to discuss the markets and how September's going for equities, and then we'll have some option strategies. We'll lead off with Netflix, which is just below all-time highs, up about 45% so far in 2024. And then United Airlines, which has gone parabolic to the upside.
Back to that 125 area that I like.
And like Folio is going to break down consumer sentiment data in Expedia. The travel booking stock is under pressure so far this year. Got a downgrade earlier this week. Now let's take a look at the major indices, which are relatively flat. The S&P 500 is, and it's, Dow is up about 0.9%, up over 370 points. The Nasdaq 100 lagging, down 0.5%. We've got Nvidia, Meta Platforms, Netflix, and also Microsoft in the red. And then the small caps, Russell 2000, up 1.4%. So kind of a choppy market here as they're rolling back into small caps and blue chips. To help me break down the market action, let's bring in my co-host Kevin Hanks. Kevin, pretty quiet as far as economic data. The PCE data came out, didn't really negatively or positively affect markets at this point, but it's kind of odd seeing tech sell off, and I believe information technology is the only S&P 500 sector in the red today.
Well, this market, it lost Nvidia. Nvidia being down this morning, you know that bleeds into a lot of different names within that sector. So, listen, I think personal income outlays was a good number. Why? Because you can promote the headline number is 2.2%, right? Year over year, headline PCE. Dominated by energy. How do I know that? Because core was up 1/10 to 2.7%. So, all things considered, though, even the core PCE month over month, you love 0.1s and 0.2s, Tom, because those add up to modest numbers. Now, consumer sentiment, 70.1, 2.7 on the year-over-year inflation. Both those are numbers that didn't do anything really to the market. I think this is a market mostly concerned about, the NASDAQ has lost its bid. Now the S&Ps have lost their bid.
Right.
So the drift higher this morning, still some sectors higher, but this market may give us a disappointing end of the week, Tom. And so, the fact that we opened higher, traded higher, economic data kept us higher, and now we've lost the bid in the NASDAQ and the S&P. A bit concerning as we get to midday.
And there are reports right now. There was some news that targeted strikes in Beirut the Hezbollah leader there.
Not
I
surprising.
think that could that
Right.
kind of took the S&P 500
Yep.
down a little bit and deepened losses here for the Nasdaq.
Still got
100.
yields in dollar lower, though that's helping stocks.
Right. And to expand on this conversation, let's bring in our next guest. That's going to be Joe Mazzola. He's head trading.
I think that news in Beirut's a
at
big
Charles
deal.
Schwab. Joe, give me your take here on the markets. Good morning. Give me your take here on the markets, because September's setting up to be the first positive for the S&P 500 in 5 years. That 50 basis point cut that we saw out of the Fed last week, kind of reverberating and giving traders and investors that optimism, right?
Kevin, you're being a bit morose on a Friday morning. I mean, look at the month that we've had. I mean, it started off weak. It gained strength. We got the Chinese stimulus at the beginning of the week, and I mean, I don't know. When I've been looking at the rotation and kind of looking at utilities, real estate, financials leading, I said, well, are we going to get some type of boost in tech? And yeah, we got it. Yeah, we got it. We got it over the last couple of weeks. And if you look at, over the course of the month, and a lot of it has been kind of back end loaded, where we've seen some of the strength in the mega caps, they've really picked up. I saw something on Bloomberg where they calculated about 85% of September's gains were attributed to the Magnificent Seven. So yes, even though the rotation underneath the surface has been strong, you really saw that pick up in tech, and I think we need that. Today, notwithstanding, I get it. Nvidia's kind of giving it up a little bit today, but I mean, just think about this combination that we've had this week. We've had, AI really start to pick back up. The Micron earnings were really good, and they talked about the strength of AI. We've had falling U.S. interest rates, 50 basis point cut this month, and we got a nice fat Chinese stimulus package at the beginning of the week. Kind of woke up investors, and I mean, look, we continue to set new records.
We got to break the 9 here.
Today, notwithstanding, we'll see, kind of how the close
on the
goes.
SPX.
But, for the most part, I think even given the inflation data, or maybe lack thereof is a better way to put it, it's been a pretty good week, and it's a pretty good backdrop for stocks right now.
I'm not comfortable in this role of being negative, Joe. I just want you to know it doesn't make me happy. And you're right. If we close right here, Nvidia is still going to be up $5 or $5.50 for the week, so it's still having a good week. We know that China is off to the races, and that's permeating a lot of names. But boy, I'm just watching, because everyone's coming out this morning, Joe. As you see, analysts recommending China, recommending wind resorts. I'm like, really? Now?
Where were they last week? Right.
Yeah, I mean, 20% ago, maybe that would have helped me, but I don't want you to recommend China to me today.
Yeah, no, I hear you. So I write this blog on Fridays called the Options Market Update, and it's heavily Chinese centric today. And I'm looking at some of the names that I have on that list, whether it's Weibo or Tiger is another symbol that I have on there. These stocks are up 30% on the week.
Yeah.
So it's not on the month. It's basically from last Friday's close, and there's still heavy call interest in some of these names. So I don't know if it's the end, or if these stocks have been so compressed, or the Chinese market had been so compressed. Because I mean, look, it's been down on the year. That's a heavy stimulus package. I don't know if that's going to carry forward. But boy, there's been a lot of excitement.
Still got another hour and a half for I'd probably know.
Maybe a little bit late on that trade.
Yeah, some of these, like you look at BABA up over 20% this week. PDD, Pinduoduo, that's up 35% this week.
Say that 5 times fast.
Please,
Buy it 5
please
times
no.
fast.
On a Friday.
I can't even get out personal income and outlays on a regular basis. But that optimism, the bazooka, everybody expected China to come out, Kevin, with some type of stimulus package, because the previous stimulus package always gave a bid to Chinese stocks for about a week.
Yes.
Right? And then they fell again because it wasn't stimulating the economy. There's still slowing growth over there. But they laid out the big bazooka here.
I'm hearing wind. We're getting a little bit of that storm over here.
After day, they came like 3 straight days, with different forms.
But so it's not surprising to see that, and that's falling over into wind resorts. It's falling over into Las Vegas Sands also. That exposure to Macau. We'll have to wait and see. Because does it stimulate their economy, or is it in a bad declining growth rate that you can't stimulate it enough at this point? We'll have to wait and see on that. One of the areas, Joe, that I kind of wanted to hit on was that sentiment number. That was the highest since April, 70.1, and this is a final for the September print. So it's kind of bifurcated there because the consumer confidence number that we got from the conference board earlier this week was weaker than expected, but now we're seeing a nice pop here in sentiment. What's your take?
It's interesting because, you know, these sentiment measures, it kind of skew towards, you know, the weightings, right? Is it housing? Is it jobs? You know, what's going into kind of what is kind of fueling that sentiment? And, you know, right now it's the job market, while it has been curtailing, you're not seeing as many job openings available. We're still not seeing a lot of layoffs either, right? So we're kind of getting closer and closer to that equilibrium. I think the other thing to kind of keep an eye on too is, you know, how is the economy affecting multiple tranches of the population, right? I mean, if you're talking about people, you know, in the middle to the higher ends of the spectrum, they're still doing okay. You know, if they have the jobs and they're looking at their net wealth and income effect from kind of what's happening with the market, they're still feeling pretty good. Now, the hard part is, as you mentioned, that word bifurcation, that hasn't necessarily trickled down to a little bit of the bottom half, just because of the lower exposure that they have to the stock market, and then the inflation that they've kind of seen on food and gas prices on the non-disposable, or excuse me, the items. So when you look at something like that, you're going to get mixed
I got
readings.
concerns about
I
that
think
Beirut
makes sense.
thing.
I think what we need to kind of keep an eye on going forward is really just you know, where we're seeing the spending levels. If that's starting to pull in a little bit, which we haven't seen for the most part, that continues to kind of hold strong. And so that kind of suggests to me that, you know, yes, we continue to talk about the consumer getting a little bit stretched, but at the same time, consumers are continuing to spend.
Yeah, and we've got a lot of data next week that might confirm or deny that. But we, you know, kind of expanding that consumer conversation, Kev, Costco earnings, stocks down.
We got the day low down here at 571 on the SPY.
Revenue came in fractionally lighter than expected.
Head and shoulders right here.
Sales growth, but you got to remember those membership price hikes were not in this report, Kev. So is that what we can expect, that, hey, this is a blip, and if you look over the last year and a half, every dip in Costco has been bought up and it's worked out for traders?
Yeah, this was the theme of what we talked about on yesterday's show with Lightfolio, was all the data's good. This company's doing fine. The stock has just run too far. The valuations are too stretched. So it shouldn't surprise anyone that they came in with good earnings, not great. Yeah, a couple little hesitations in some of the data, and the stock is weaker. Not by a lot, but 2% is $20. And by the way, that was our theme yesterday. That the valuation was just too stretched.
The bar was high in here. We've been talking about that for months during the last earnings season. But Joe, is that the key moving forward, especially going into earnings season that kicks off in a couple weeks? You know, Dollar General got downgraded today, right? Stock's actually up on that news, probably due to the fact stock's down 35% already this year. So this analyst may be a little bit late to the game. But, you know, I saw some Adobe metrics that are supposed to come out for e-commerce sales, supposed to be up over 8% during the holiday shopping season that kicks off in another month. I mean, the consumer's probably, to me, with the S&P 500 at these valuations, and a lot of these stocks maybe, you know, valuation-wise elevated, that the consumer's still going to be key, right?
Yeah, and I wouldn't be as concerned, or I'm not personally as concerned about maybe the next earnings cycle that comes out. It's 2025 that I'm a little bit more concerned about, just because of the fact that expectations are still fairly high for double-digit growth. But, you know, we're starting to see some of those expectations come down a little bit. We have seen some revisions, you know, pushing that maybe towards the single-digit, high single digits, you know, coming back maybe from 11, 12 to 13% that was initially expected. So I think that'll be something to kind of keep an eye on, the 2025 earnings. And I think it's also important to keep an eye on. We talk about inflation or, you know, disinflation being good for the consumer, but disinflation is not always good.
Yeah, I'm not feeling too good about this.
That means at some point they can't continue to raise prices, or as we've seen with some of the discounters, they have been cutting prices a little bit. So that could be squeezing the margins. Like I said, probably not something I'm as concerned about for the upcoming earnings season in the next couple of weeks, but going forward, really something to kind of keep an eye on.
Here's why next week is so important, Tom, because Jerome Powell told us he wasn't as worried about inflation as he is about the labor market.
It's going exactly where they want it to. Yeah.
So when inflation data come out this week, there was muted responses to it. That means next week is what the market's going to focus on. Why? Because Jerome Powell told us that's what he's focusing on.
Yeah, and then we have the bazooka of data next week is that's all jobs, right, Joe? We've got those JOLTS numbers trending lower now that people looking for jobs versus job openings down to 1.1. So that's at the lowest level since pre-pandemic. So is that going to be the key next week that everybody should be focused on? Because that'll give us maybe that telltale whether they go maybe a quarter basis point cut in November at that meeting, at the Fed meeting, or do they do 50 basis point? Because it seems like that expectation's starting to ramp up for rate cuts.
Job openings is important. It's a little bit of a lagging indicator. I keep an eye on claims a little bit more. Jobless claims, the new claims, the continuing claims, those come out every Thursday. So we get, fresh data every week, which is helpful. You mentioned, at one point that job openings were 2 to 1, relative to people looking for it. Now we're back down to kind of a 1.1 or closer to 1. We'll see, what the next week's data provides. But at the end of the week is when we get the non-farm payroll, and that's traditionally a market mover, even though, once again, lagging data in terms of the unemployment rate. It's something I would be keeping an eye on, and it's something that, as long as Fed Chair Powell continues to kind of speak from that side of the mouth that, hey, we're really looking at employment over inflation. I don't know if you say inflation's in the rearview mirror, but at least I think from the Fed's mind, it is, and that data today kind of proved that point to a certain extent.
Yeah, here's my thought. Non-farm payrolls next Friday. Expectations about 125, 130,000 job ads. What if it's above 150,000, or what if it's below 100 grand?
And wonder if unemployment's 4.1.
Yeah, I mean,
right. Then what? Then what? How do you adjust the narrative? So yeah, I think next week has a, we're trying to navigate right now, and
oh my God,
is the 50 basis point cut because he feels good about inflation, or is it worrisome?
That's almost like a nuke over there.
And the U.S. consumer. And the market seems to be going a little back and forth and teetering on what is the interpretation.
Well, that's 4 years ago. Let me see.
Jerome Powell. Is he really worried? Is he that worried in the labor market? Or is this just a celebratory cut? It's kind of tricky right now. And at these valuations, it gets a little more tricky.
Well, we're going to get more clarity. I think that's the key next week is, are his concerns coming to fruition here moving forward, because that is what they're concerned about, not so much inflation anymore. All right, guys, let's take a quick break here. When we come back, we're going to talk Netflix. The streaming stock hit an all-time high in yesterday's session, continues to outperform its peers in that segment. Fast Market's coming right back.
Man, they ain't got no video on it. We might go higher if we break 57.45 on the SPX. And the SPY. I'm not sure about the SPY yet. We'd have to break the VWAP.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
I got SPX at 90.
This lets me adjust the bass, add more guitar, maybe some
I'll set
drums.
another stop just in case.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Spy I don't know about.
Have a choice in how you invest with Schwab.
It's a lot of red.
Welcome back to Fast Market here on the Schwab Network. We're talking Netflix. Shares are up about 44% so far this year, hitting an all-time high yesterday in yesterday's session, $725. Kev, last earnings report, the stock dipped a little bit and kind of was trending a little bit lower, maybe overall market movement there, but then shot right back up. I mean, this has been a consistent winner over the last couple of years.
Even Reed Hastings, their CEO,
Damn, Netflix.
came out after the fact and said, "Well, we should have done this ad-supported tier much earlier because it has been a massive winner for them.
Right.
So much so that the CEO, questions himself live."
Look at that big gap up on Baba. I mean,
International expansion.
that is kind
There
of
was a lot of talk.
overstated.
There was this moment where we said, the U.S. is pretty saturated with Netflix. Well, ad-supported tier has brought in a new level. I mean, 8 million subs from last quarter, up to 277 million, and now international. And this thing continues to grow. And they are, like NVIDIA, they are the clear winner in
Better
streaming.
get stopped out again on
The
SPX.
stock wasn't volatile, 700 to 175, back to 700, but they are the clear winners.
Yeah, Joe, Kevin mentioned those subscriber numbers. When I was, doing a little bit of digging on this company before we came on, 277 million, that's worldwide. It just seems like their moat is so much bigger than that, the prospects for growth, especially internationally, even though we might be saturated here, that just provides that backdrop for, hey, it's at a rich valuation, but maybe it should be.
Yeah, I mean, that's all understandable. And I think if you kind of look at expectations for the next quarter, expecting those subs to increase around 282, 283 in terms of million subscribers. So a decent amount of growth. And if you look at, the growth that you saw year over year leading to last quarter, that was 16%. You annualize that and you're looking at a company that's trading about 44 times. It's a little rich, but it's rich, I think, relative to the last couple of years. But if you go back to the real growth expansion years, kind of leading in through COVID, it's not, I wouldn't say it's overly expensive. I think it's just, over the last 3 years is where those comps, when you're looking at those multiples, that's where it seems a little bit higher. I found a real interesting idea from the Barclays analyst that came out today and said, they really suggest, and I think that they expect that Netflix is really going to be trying to push more and more people towards the lower ad tier. Not only that, Barclays even suggested coming up with a free service where it's all ad-driven revenue. And you mentioned, Reed Hastings looking at that and saying, why didn't we do that earlier? It just creates different revenue stream and kind of casts a wider.
Better get stopped out here.
In terms of new subs that are coming into the business, especially internationally, and I think that could be a real boon for the company going forward. And that's something that as a company they're looking to kind of push more and more people into that ad-supported tier because it helps grow that ad inventory and create a new growth revenue driver.
Yellow.
One of the things that came out of that article, though, from the Barclays analyst is said that they might need to kind of start relying on some content differentiators, which is interesting to me.
Oh, I am.
As a subscriber myself, boy, do I really want to think, if I do this side, I only get this amount of content. If I do this side, I get this amount. That's an interesting model. So we'll see kind of how that plays out, but. Overall, this company's been hitting on all cylinders for many years now, and as you mentioned, they're the behemoth in the space.
Yeah, and Kev, real quick here before we get to Joe's example trade, Live sports is becoming big. They're going to have the Tyson fight in November, football on Christmas Day, and then they got the WWE partnership that starts in 2025. But do you feel like they've got to get more into it?
Well, here's what it is. Things that are live are turning out to be much less risky than these movies that may or may hit. And Amazon Prime Video, they've become a real competitor to them in them going for sports and them understanding in this evolution of Netflix is going to be live in sports. And if you don't think sports is coming to Netflix, just watch. All these live things are blowing up in terms of the viewership and the popularity. So I think the evolution towards live program is just getting started.
Yeah, and ESPN going solo next year, I think it's going to be a boom for them. The bad thing about the streaming Thursday night football game was the fact that the Cowboys actually won that game. We're not Cowboy fans here in Chicago. Joe, you've got an example.
Are we Giants fans?
No, we're not either.
Yeah, okay, hold on.
But I think we hate the Cowboys. We don't hate the Giants as much. Maybe that's my thought here on that one. But Joe, you got an example trade for us here with the stock now about $24, $23 off its all-time highs that we hit just yesterday.
Yeah, this is the danger of sending my trade into you guys about an hour and a half before the show. The trade was looking to sell the October 11th expiration, so basically 1 week before earnings, trying to keep out of the earnings cycle and some of the binary movement that's associated with that. But it's the 11th expiration, 727.5 by 732.5. Say that 3 times fast. Call vertical at $1.40. It's probably down to $1.10 or $1 now, just because the stock has pulled back. And it's not an indictment on the stock by any means. It's just more of a, as the stock has rallied, it's lost some of its momentum from a technical standpoint. So, what I was looking at is, it's still trading above all its moving averages, but it does look to be maybe consolidating within a bit of a longer term trend. You've got a declining RSI that's showing maybe some of that momentum is waning. And then another indicator,
Israel conducts massive strike targeting Hezbollah in Beirut.
Be giving way to some consolidation as well. So it was really more of a short-term take advantage of the rally. If you think the rally might be running out of a little bit of steam, you still have a bit of an upside cushion from where the stock is currently right now. Problem is, I don't think you're going to get those prices given the pullback that we saw.
Yeah, and I think one of the keys when you look at a trade like this is you're avoiding that earnings event on the 17th of October also. But let's take a look at this one. October 11th weekly cycle, so 14 days to expiration, selling $5 wide short, neutral to bearish, call vertical, which would be above that all-time high we hit yesterday, selling the 727.5 call, buying the 732.5 call. Collecting, we've got $1.30 credit, as Joe mentioned, collecting about $1.10 right now. It's come in a little bit because the stock's moving down. But Kevin, you see that break even there, 728.80 on this if you collect $1.30. But even though the price is lower than what we've got up here because the market's moving, it actually improves your probability of finishing out of the money, which is what you want on an out of the money short call vertical.
So a couple things about a short call vertical. And think about it like in 2 ways. Number one, it's a short strategy. You can put this on with no underlying, no nothing, right? But if you're, let's say, long Netflix stock, and you wanted to sell short deltas but keep your upside, this is the way to do it.
Right.
If you sell a call, a covered call, you lose your upside. But if you sell a call vertical, you would lose the risk on the call vertical, but then your stock would continue on the upside. It's something to think about when you think about hedging a stock with a call versus a call vertical.
Yeah, and Joe, to Kevin's point here, I mean, these type of strategies that we talk about this show every day, every week, the fact that, hey, I can speculate that, hey, Netflix isn't going to hit another all-time high over the next 14 days, or I can use it as maybe a hedge on specific positions I might already
Every
have.
time we get close to a resistance, it kind of fails.
Kevin, nice point, my friend. In that
Could be number 3.
If you get that rip to the upside and it goes through your call strikes, you can start participating again in that move. because you're not capping the upside. You're basically capping it within that $5 range. So, yeah, that's
Bust a move.
this is a way you could play it on earnings. If you wanted to extend this week, you'd be collecting more than what you're
We
doing.
just busted a
what you're
move.
selling this spread for,
Now
just
let's
because
break
you
the
have
second
that,
one.
additional implied
And then the
volatility
third one's
side
going to be
into those earnings
the
options. But
63.
even with this spread alone, one thing I was looking at was kind of looking at the current implied volatility percentile rank, and it's still above 70. So
I gotta get.
what you're
I got
noticing
two.
right
I got
now
one
with
at
some of
90,
these
and I got some at
you're starting to see some of those
155.
call buyers kind of come back into the market, and they're starting to bid up a little bit of that skew, and it gives you the opportunity to sell some of these calls even outside of that earnings event.
I don't know if I should sell the 90s now.
Yeah, you brought up a good point, Joe, because when I was looking at that one earlier, I'm like, oh, you're selling a call vertical. The stock's moved up to all-time highs.
Big bounce, though.
Implied volatility levels are probably falling, but sometimes that reverse happens where you get this move to the upside the way that it is, and volatility starts actually increasing because call buyers are out there bidding up those calls that are at the money to out of the money also, so that skew kind of turns a little bit. But it allows you to collect more option premium. About a 76% probability
dropped
that
after
that
Anderson.
short 727.5 strike is going to be out of the money at expiration, which is what you want. You want those higher probabilities of success. And if you collect that $1.30, you got about.
There's a major resistance right here. If we can break these two moving averages,
Short call vertical there in net.
57.50.
Head trading derivative strategist at Charles Schwab for joining us. But coming up after the break, Megan Brantley.
It'll be
from
$5 more
Portfolio.
bucks.
She's gonna join us to
That'd
take
be
a look at
nice.
Sentiment data on Expedia. This stock has really underperformed, even though some of the other travel stocks have done pretty well as of late. Stick around. Fast Market's coming right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Neil, how's my favorite client?
Quick question, Carl. Can you offer me the same choices as Schwab?
Choices?
Yeah. At Schwab, I can get full-service wealth management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Schwab.
Have a choice in how you invest with Schwab.
SPY's trying to break.
Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Megan Brantley, VP of Research at Likefolio. Welcome back to the show. Happy Friday, Megan.
Thanks for having me, guys. Happy Friday.
Yeah, good to have you back here. Expedia, we're talking, it's down just over 1% so far this year. It's had a good run so far the month in September, but a lot of travel stocks have. You know, I always use Expedia to kind of maybe price out things. I don't ever really book through it, but they've got a lot of different entities that they own, whether it's Hotels.com and Vrbo and some of the others. What kind of data do you have on this one?
Whenever we look at Expedia, like you said, there are a ton of brands underneath its umbrella, but for this, the three, I would say, power brands that we focus on that tend to drive the most consumer mentions are Expedia, Vrbo or VRBO, whichever you prefer, and its Hotels.com banner. And whenever we look at these, this is a company that it has a new-ish CEO, right? And it's really trying to revitalize those brands that I just mentioned. And whenever we look at the digital traffic, we just aren't necessarily seeing signs that
566, 567.
Expedia at large seems to be underperforming other travel peers whenever we look at it versus an aggregator like a Booking.com. Whenever we look at it versus Airbnb, and whenever we look at it versus even hotel chains specifically. And what we see whenever we look at mentions is a lot of what you just talked about, how consumers might use Expedia to kind of price out or look at potential potential bookings and compare prices. But
got
then
ready, set,
a lot
go.
of them are opting to book directly with the chain itself, the airline itself, the car rental company itself, which doesn't necessarily help Expedia. So this is one
nice
of
to kind of get a head start on this bounce before the fat cats come back.
You want to see, okay, the stock is up, I think, 17% over the last 3 months. Does the data justify this? And we just don't see a justification here. In fact, whenever we look at these web visits on a month-over-month basis, when you start to break it down, how is September doing versus August? How is August doing versus July? We see a pretty significant deceleration. So a little bit of a weakening travel demand scenario following out or breaking out, at least in terms of how our data looks for Expedia specifically.
Megan, this company's gone through a lot of changes lately. Starting in 2020, they took all these different brands that seem to scatter, Expedia, Hotels.com, VRBO, they put them under one single technology platform, which gives you easy access to all three. Now that's taken a while, but they're there now, and so that is a big part of what seems to be firming up this stock's their performance. Not only that, they've been buying back a ton of stock. Their business-to-business strategy is starting to grow and show signs of forming. I think this company is on the verge of something. It's run a long way. It's already overbought, but they seem to be in a pretty good footing with some really good brands that people can use. Tom uses them to do his research. That's one way. But other people like VRBO, that competes with Airbnb, and Hotels.com gives you like all the price points. Don't you think that this company has set up the foundation for a pretty good future going forward with all these brands under one platform?
Yeah, we like the renewed focus. Another element that kind of ties in these brands is its One Key loyalty program. This is kind of another element it launched in July to allow consumers who book through either Expedia, Airbnb, or not Airbnb, VRBO, or
that's the 63, so you're at a resistance right now. I could get out here.
The loyalty points aren't fragmented across all of these different brands so that they really can perceive value. And I think that long term, that's certainly the play. You want to
I keep saying that,
consumers and give
that
them
120 level.
Build loyalty, build these perceived points to put use to,
I
future
want to break
trips
it.
and things like that. So I think this is definitely a step in the right direction. We do see signs of more consumers searching for and talking about that One Key loyalty program. So that is a bright spot moving forward for Expedia. But in terms of just overall digital traffic, how it's performing versus peers,
200 Sam.
And, web visits right now and overall happy visits right now, that turnaround isn't really taking hold quite yet, but the plan is certainly there, and the plan looks very positive.
The plan looks positive. Now, I always talk about Expedia in the same breath as Booking.com, right? And that stock's just off all-time highs for that stock. Is this maybe an execution thing? Because TD Cowen just downgraded the stock. They lifted the price up to where it's trading right now, but they put it to a hold from a buy. But this is all based on the consumer, and it looks like your data, Megan, kind of agrees with where the stock is compared to maybe the hotels and maybe Booking also.
Yeah, you're exactly right. Our data is in agreement there. And one of the biggest differences that we see whenever we look at Expedia versus a booking is whenever you look at both companies' international exposure. Expedia generated, I believe, about 63% of its revenue and sales via domestic travel here in the U.S. And when we look on a macro level of what is driving
Might sell
travel
5 here.
whereas the bright spot here, it's actually an international travel, and that benefits a booking, which has a much larger international exposure. So I think Expedia is doing the right things to expand its international exposure. If you were to look at its domestic to international ratio just 2 years ago, it was almost 70% domestic versus 63% now. So I think that it's definitely taking steps to get there, but for now it makes sense to us that booking would be overperforming, not just because of execution, but also because of the underlying travel trends that are driving the consumer right now.
Now, with earnings not until first week of November, if you guys had an earnings score here, it's up 7% so far this month. What would your earnings score be?
I think that right now, especially considering the recent stock move, our earnings score would lean bearish. We're also waiting to see the company reap the fruits of its labor in this turnaround story. A lot could change though between now and November, so we'll certainly be monitoring in real time to see if things kind of shore up in the meantime.
All right, great data, great stuff as always, Megan. Have a great weekend.
Thanks, guys. You too.
All right, that's Megan Brantley, VP of Research at Likefolio. Kevin, if you look at some of their data and some of the comments that she made, and then you look at the stock over the last year, it's choppy.
Yeah.
It moves back and forth. It goes on trends that reverse quickly. So it's been a choppy trade over the last year.
Yeah, 3 months up 21%. 3 years down 11%, down 12% now.
Yeah.
So yeah, it's had a rough period, but it's had a last good quarter, and I think that's why the one key loyalty program is important that Megan mentioned, but they went through this period of shifting platforms and that may have cost them some of their market share against bookings.com. So I think that's important. Now, as I think this stock looks like it wants to go, pretty solid news out. But I don't know because it's overbought.
It's gonna go somewhere.
Yeah, right. I don't know where it's going because it seems to have good news and a good story, but it's also overbought.
Right.
So
we got 3 white soldiers. 3 white soldiers we flattened out, and then we dipped. Had a big knife.
I went all the way up to October 25th, Tom. So this is a 3-week spread, and then next week, October 4th, and I did the double calendar. Only $5 in each direction, Tom, because that's the move for next week. So the 155 call calendar, the 145 put calendar, paying about, I had 355 up there. It's trading, it moves a little bit. It was just 340, now it's 370. So 355 is where it was trading when I looked at this time. And remember what this does. You can roll to the October 11th, October 18th, and then into the October 25th, however you want to do it. So you've got a chance for 3 rolls here. It's trading, like I said, about 355, collecting theta each day. You're long a couple deltas on this because the 155, I think, is a little bit closer. Is that what it is? Yeah. 155 is a little closer. Actually 145 something.
Yeah, it's equidistant almost, yeah.
So, but this is one that plays this. Implied volatility, 35th percentile. So right at the, approaching the lower third. So that seems like a green light for a calendar spread. So this one is a calendar spread, but I don't know where it's going.
Yep, and you don't have to pick because you're doing both sides of this. But let's break this one down. October 25th weekly cycle. That's 28 days to expiration. You're buying the 145 put, buying the 155 call.
Back at 90 cents again.
I'm selling those same strikes, 145 put, 155 call in the October 4th weekly cycle that expires in 7 days. Paying roughly about a 355 debit is what we got up here. The debit you pay on this type of double calendar position is your risk on it. So $355 per spread. Your break even's about 158 on the upside, 143 on the downside. Those can fluctuate based on implied volatility levels, because if implied volatility starts to rise, if the stock moves up or down, that's going to expand the price of this double calendar also. There you see those break evens. Now, it doesn't look like there's a lot of profitability on this, but as you get closer to expiration over the next 7 days, you have that ability to roll or adjust those short strikes to another weekly cycle on a week-by-week basis. if the market's open. And Kevin, I just priced out the double calendar roll from this week's September 27th that expired today to the October 4th, and it's over $1.25 for the rolls on just that 145 put and 155 call right now. So that's where you start creating credits, and that lowers your risk on it, increases potential profitability on that type of trade.
Lower the net debit, you lower the break-even price on these each time you do it, and you continue to collect theta in that front expiration. Yeah, it's a tradable product right now. Like I said, I might work at 2 individual trades, not all 4 sides at once, but certainly something that you look at. And volatility sets up right because you got about 18 Vega on this trade.
Yep, and you got some assignment risk on those short options over the next 7 days into their expiration, so keep that in mind. Maybe some trade management warranted on the double calendar position. All right, let's take a quick break. When we come back, take a look at United Airlines. Stocks up 35% this month. I said this month, as margins are improving with lower fuel prices. Crude oil getting hit this week. Fast Market's coming right back.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Fast Market here on the Schwab Network. Before we take a look at United Airlines, let's get a market update here. Stocks kind of weakening here throughout the session since we started the show. S&P 500 slightly negative. Dow Jones Industrial Average up over 230 points or 0.5%. That's come down a little bit. NASDAQ 100 now down 0.4%. But the Russell, which was up 1.4% to kick off the show, now up just 1%. So we've seen a little bit of weakness creeping in, but stocks are still up this week, except for, no, the Russell actually did turn positive too. So we'll continue to watch the market developments as the quarter ends on Monday's close. So keep that in mind. So maybe some volatility coming on Monday as maybe some fund managers reallocate funds and get out of products. So keep that in mind on Monday. So maybe some additional volatility. All right, it's time to bring in our next guest, and we're mixing it up this today on Friday to wrap up the week. We're going to bring in the chart master, and that's Rick Ducat. We're going to take a look at a chart on the stock that we're talking about in a few minutes here, Rick, and that's going to be United Airlines. We've seen a parabolic move so far in the month of September. I got to correct myself. We're only up 34% so far this month, but this has been quite a move here in United Airlines. What's the chart telling you, Rick?
Yeah, really strong price action recently, and like so many other stocks
'Cause oil is
that we're talking
down.
about today and this week, what we're seeing recently is acceleration of trend to the upside. We can see that there was a more, kind of modest, shorter term slope going upward in our chart here, but more recently we really took off. And today, the interesting thing that's happening is that we're breaking above our
look at
previous
Boeing.
best close, which was 55.09. You can see that green line up there near the top of the chart, and that is a strong breakout above this point.
Boeing's still having a strike.
We can also see that there's a lot of other things going on here. First of all, we can see that price has taken out all of its moving averages that we follow here. Our yellow 21-day, orange 63-day, purple 252-day.
Oh boy,
exponential
what to
moving
do?
averages, which are diverging farther apart from each other. The faster ones are outpacing the slower ones, which is a sign that the trend continues to improve to the upside here. So yesterday's big green candle, we're still moderately above that point here, even though we've got a red candle for today, but we are still making a little bit of upside progress here. So when we look at momentum, our RSI down at the bottom of the screen, we can see that our RSI matches kind of our price activity here with a green trend line going up from where it was briefly in the oversold area there below that threshold of 30. But like I said, a very rapid ascension here that we have taken out the 50 midline that separates bearish from bullish momentum. Now we are in the overbought area, which is above 70 here, which is a sign of strength typically in a trending market here. We are also, we made new highs relative to our previous highs yesterday. So things are shaping up to be, pretty much what the bulls would want to see. Now, the question is, where does a move like this start to slow down? Where do you look for resistance? Where do you look for it to kind of, top out? And one study you can use to try to assess some of these questions would be standard deviation channels. You can see we've got our straight blue line there in the middle of the chart. That's our linear regression line, which is a line of best fit based on closing prices. Then we have 1 and 2 standard deviations to the upside, which gives us those channels, that light yellow and then orange channel to the upside there. So you can see that we also, in addition to breaking above our previous high close, we've also broken above the +1 channel. Now, the +2 channel, 6107, gives us a potential resistance area to look out for, and our +1 channel to the downside is quite close to our previous best close. So around 55, 56 could be a supportive area. It would not be surprising if price were to revisit that point as a retest of old resistance that has since become support is a common situation in trading. And we do have another longer term chart we could take a look at in a moment if you guys want.
Rick, on September 12th, we got CPI data. And within that CPI data, it showed two things. It showed that airline fares were up 3.9%, and jet fuel was down 10.5%. Compare that data to what you see in the chart, because I have the RSI now in United up at around 83, 84 range. So is this a move that maybe we should have saw coming in September 12th and may have run its course, or do you see, based on technical analysis, higher prices?
Well, I think that our next chart would actually help answer that question here. I've got a 5-year weekly chart here. And to be sure, Kevin, what you're describing sounds quite bullish in terms of a fundamental outlook for just the broader industry here. But what I want to highlight is you can see that green line on our chart, 58.23. We took out the old highs back from July 2023. So we're making new highs. We are also making higher lows. You can see we've got that white trend line going up across the lows. We are still trending upward here. The next point to watch would be that red line there, which is the next high point. It's from a while ago. It's back from March 2021, 63.70, to help us, kind of gauge our previous price action here, to help inform how we might look for potential resistance in this name. So 58.23 would be support, 63.70 for resistance based on this longer term chart.
Yeah, RSI above 80, that's phenomenal. Anything above the 70 level is considered overbought on a technical basis, but now it's above 80 on this parabolic move. All right, great breakdown of the charts here for us, Rick. Appreciate it. That's Rick Ducat. He's a chart master here on the network. Kevin, I got one thing to say, crude oil down about 8% so far this month, and that right there lends directly into, if this, if demand for air travel remains robust like it is, that just helps your margins, right?
Yeah, and we got a 10.5% cut in jet fuel last CPI,
Right.
which means you may get another one this time. That's incredible because remember, energy is dominating the inflation data right now, and it looks like it's going to continue. And this news about crude oil and Saudi Arabia changing their strategy with crude oil from prices to market share could be catastrophic for crude prices.
Yeah, and then also Alaska Air and Allegiant earlier this month, they gave updates and they actually raised guidance. A lot of these airlines do mid-quarter updates there also. And revenue per average seat mile, that metric's supposed to start to improve because they're getting rid of some of their lower performing routes. And capacity, they said by the end of the 2024, they're actually going to cut capacity a little bit. So that also
And
helps.
airlines prices low.
She has too much bad news.
It's counterintuitive how you got to trade when it comes to capacity. Less capacity is better for the stock.
Not better for you and I, though.
No.
When we travel. All right, so let's get into an example trade. Based on that RSI overbought, I looked at a strategy that takes advantage of, hey, maybe this thing's a little bit extended. If that is your assumption, this type of strategy may work in that type of environment. I went out to the October 11th weekly cycle, so just 14 days to expiration, really short-term positioning because the stock reports earnings on the 15th. So I want to avoid that. But if you think maybe a pullback's warranted, and it doesn't have to be a massive pullback, but if you think one's coming, this strategy may take advantage of that. Buying the 60 strike put and 14 days out from expiration, and then selling the 56 put. So you're buying a $4 wide bearish put vertical here with that strike that you're buying slightly in the money here, and you're paying roughly about $1.50 debit is what we've got up there. Markets change all the time. They're dynamic, Kevin. It's trading closer to $1.75 now. But if you pay that $1.50 debit that we've got up there, that take your break even down to 58.5 to the downside here with the expectation.
I don't know, Randy. I don't think I see a reversal yet.
56 at expiration. But Kevin, this is a directional bearish trade.
I'm down red. I'm red for the day right now.
As far as trade management, because what if United goes down to 55, 56 over the next couple of days?
Still any spies. I don't know what to do about it.
Maybe manage it or maybe close it if the market's open.
We can talk as glowingly as we want about these names, just like we did yesterday about Costco. But as traders, you got to
could add a bunch of them, but I'm going to wait for the right time.
The stock is severely overbought on the upside, and you know what can happen. I mean, airlines
not too far out of the money. That's what gets me.
Game-changing news. So you have to be careful here up these levels.
Yeah, United Airlines was up 1.5% and hit over 3-year highs in today's session.
Yeah.
Why did it pull back? Well, take a look at crude oil. Crude oil was down earlier. It reversed a little bit higher.
And a little geopolitics seeping in there.
And maybe a little bit oversold levels in oil. So watch those crude oil markets for directional bias in a lot of these airlines. You've got to keep that in mind. You see there that break-even 58.5 to the downside here. But implied volatility is relatively low, so buying verticals might make sense. But if you think this is going to turn around and maybe creep lower over the next 2 weeks, this strategy takes advantage of that. So keep that in mind. But a good look at a bearish.
If I buy 20 calls right now at 63, I'd be
stock's overbought. All right, that's going to do it for Kevin and I today here on Fast Market. But stick
or
around
around
right
75.
Here on
Where would I
Next
be?
Gen Investing is coming up.
That makes sense. be at 75.
Election season, stay out of the muck and the mudslinging with Schwab Network's by the numbers coverage of the presidential cycle.
I could probably get out even if I did that at 63 right now.
Next week is going to be a crazy.
But I'll wait until 3 more minutes and see what happens here.
No hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job
as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I am very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Welcome to Next Gen Investing. I'm Diane King Hall here on the floor of the New York Stock Exchange. Jimmy Horn and Alex Coffey will be back with you next week. Joining me today with the hosting honors is the one and only Kevin Green. So we're going to dive into the market action that we are seeing today. We are seeing a little bit of cooling to the advances that we saw earlier in the market action. We've seen stocks gaining more ground this week initially in response to that PCE print, which just shows inflation is continuing to move in the direction that the Fed hopes it will move in. The Dow still holding on to a solid advance, as well as small caps, the Russell 2000. The Russell up by just shy of 1%, so not at the higher levels we saw earlier in the session, but still holding on to a strong day there. NASDAQ 100 under a little bit of pressure, down by 0.3%. S&P 500 flat at the moment. Kevin, as we kind of put a pin in this week and start to wind down, what are you thinking about the market action that we're seeing today and honestly for the week?
You know, this was a win, Diane. I mean, we kind of, questioned the fact that the market may be able to make all-time highs, and for the most part, it's been making...
Oh, 0 seconds. I never had that.
Day-by-day basis here. So we've been able to recover, and now we're kind of moving forward. Now, today, we are seeing kind of a little bit of a boring action, especially when you're looking at the S&P 500, which is, for the most part, flat on the session. But you are seeing some outperformance when it comes to the Russell and small caps that you kind of talked about earlier, or even the equal weight S&P 500. So the breadth in the market is there. It's really the large cap names that are kind of taking a beating here outside of Google. And really, when you're looking at the semiconductors, that's also becoming a little bit weak. Now, the SOX index is trying to bottom out. Maybe we do see a rally going on the close. But I think all in all, if we're able to hold these levels, this was a phenomenal week. It's setting us up for what we really need for next week. Next week, we're going to have jobs data. We know this time last month, when we started getting the jobs data, that's when we started seeing volatility creep into the market. So we have to brace for that. But as much, if we can advance as much as possible going into that potential turbulence, that'll give us a strong footing, at least to try to maintain this momentum to the upside.
Kevin, I got to ask, because I always love your perspective on, just kind of levels to watch out for. You talked about if we hold these levels, but Monday is also, key to think about. Yes, we have jobs at the end of the week, but Monday is the end of the quarter. What are you paying attention to with the levels on the S&P 500 as we wind down the quarter?
Well, the 5750 area is going to be the big area of resistance, and actually we're pretty much testing that right now. We got above it, and now we are fading right below it and trying to regain that level. The reason being is there's a lot of call selling activity that has actually taken place. So there's this wall, or we call it a gamma wall, that's sitting there. In the month options on Monday, it include this JP Morgan collar, which they have a very big fund, and they have a very big position of short calls on the S&P 500, sitting right at 5750. So until
had a couple
break above that level, I think it's going
letters here. I'm going to make sure I paid them. And I guess I did.
After we actually see those
taxes, of course.
That's going to alleviate some of that pressure, give us a little bit more.
Come on, Randy, let's bust a move here.
Looking at the mechanics of the market, and I think
I'm not sure to call it out yet,
really
but
kind of looking forward to that type of rotation taking place. But as you kind of talked about it, I mean, we're looking at a market that's been in really healthy shape. We were able to recover fairly quickly here, and if we can kind of get past next week's employment data, which may come in a little bit weak, maybe the narrative does not change because we have the China enthusiasm now creeping into the market. You had Micron earnings and things of that nature. So I think this is.
I'm not going to call out NVIDIA yet, but we definitely pulled back to support.
What's on your radar for next week, though, Diane, as we kind of
we got a couple of them. This channel down here is a buy.
I think you hit the nail on the head. I mean,
I'm about hitting my first resistance on the SPX.
You're kind of bookmarking the week.
We got to break the 200 for me to come out even.
By the end of the week, it really is about that jobs report, especially when we've heard the language from, or the cadence from the Fed recently changing to focusing more on the jobs picture, and seeing a little bit of bumpiness when it comes there. August sure was a little bit better than July, but there were still some mixed messages under the hood when you saw the revisions for the previous month. So I think you're right. I think that jobs report, KG,
okay, well, I'm feeling good about that.
The road ahead, and is there going to be where will we see further gains come from? Obviously, of course, the election as well. That's going to be a big, that's the uncertain piece of the equation. But let's go through the roadmap for the show today. Coming up on today's Next Gen show, we've got upvote, downvote. We'll take a look at some of the biggest movers in the market today. We'll be looking at Wynn Resorts, HPQ, and a couple others, and we'll chart and trade those upvotes. Our FOMO stock, we'll be looking at Costco after its latest quarterly numbers. Then the team from Crane Shares. We'll talk about that huge rally that Kevin just talked about in China stocks this week. It was a catalyst for the overall.
Boy, it hit right to my resistance and pulled back.
Jeff Pierce joins us to take a look at today's under 30 stock. We've got Intel in focus for
Damn
that.
it.
All right, let's get right to our upvote, downvote. We'll start out with Wynn Resorts. It's having a big week this week. It's been rallying this week. It's got a trade today from Morgan Stanley. They're boosting it to overweight from equal weight. What are you paying attention to when it comes to this? No, what's
I'm just a few cents away from my even on SPY.
Optimism when it comes to Macau, but when you're looking at this note, it's not only just the Macau situation as well as what's going to play out within China, but there are optimism when it comes
look
to
at that crap.
Las Vegas itself, and also the expansion in the UAE, which is going to be vital for the future of this company. We're going to be one of the first ones to actually have one of these major resorts there that will allow, potentially allow gambling. So they're on the frontier for right now. We are seeing a lot of momentum. Now we do see Morgan Stanley with an equal weight rating on the shares. They did increase that price.
They just sold them right there.
and that's up from $97 here. And they do believe that there's going to be some upside, around 25%. So the optimism is definitely there. I think there's actually tailwinds for this name and enthusiasm creeping back in because of the China story. And if you kind of think about it, Diane, we already have a model for this. I mean, in the United States, we also received some stimulus money. Now, it's not maybe to the number that we were seeing being reported for those in the lower income tiers in China, but we know exactly what happened to those dollars as soon as it got into the consumer's hands. They went out and spent money, and a lot of that spending went to the
to me
casino.
twice now.
It was actually a very favorable trade coming out of COVID. I think the market is really trying to calculate that's going to be the same type of reaction we might see within Wynn Resorts. Only time will tell. I would say though that we probably won't get an immediate impact from a dollars and cents standpoint from this earnings announcement, but maybe the commentary as they creep up towards earnings may indicate that they are seeing some positive flows there.
I think they are.
Yeah, I could see that. I mean, that certainly makes sense when we saw
That dropped
what
pretty
that
fast.
stimulus did here in the U.S., especially when it comes to experiences. So
If that's the right shoulder, I mean, that could be expected.
Playing out when it comes to Wynn. I mean, it's one of the best performers in the S&P 500 this week.
But it's
so
got
we'll
to
see how
hold.
that plays out. All right, next on our list, we've got HPQ in focus. It's under some pressure. It's been hit with a downgrade from Bank of America. They've downgraded it to a neutral. What are you paying attention to when it comes to that one, Kevin?
You know, there's always going to be this question out there regarding the PC market and consumer, personal electronic markets, and if we are seeing a bottom. Now, one thing to note, outside of HP, the Micron earnings kind of did indicate that maybe we are seeing a little bit of a bottom when it comes to the laptop and consumer PC markets. And if that's going to be the case, then that could be actually a tailwind when it comes to Hewlett-Packard. But it does appear that there's a little bit more skepticism when it comes to the refresh cycle, especially when you're looking at the AI being included in the PCs, which
Three big old crows.
For a super cycle occur there at some point in time here, they could be a direct beneficiary area of that. But also when you're looking at the earnings growth, where are you going to see that growth outside of the printing business, which has been remarkable for this company? We don't really think about printing as a leading edge of tech, but it's been the bread and butter for HP for so long. I think a lot of analysts are now
Yeah, I think it's about done with its spy.
And that's probably why we're seeing this
Take a $200 loss.
But it has been under pressure. It's still holding up for the most part. If you're looking at that daily chart that we have up there, we haven't seen a full-on breakdown yet. But that might be something that could be on the radar here soon if the market does not find another narrative for this name.
That's true. And I mean, look, B of A also said, you know, there are risks to their thesis with regard to what's behind their downgrade. They said, you know, obviously if there's a refresh cycle, a super cycle for PCs, there's that potentially poses a risk to their view on that stock. All right, let's pivot over to Best Buy. That one in focus today. It's getting some love from the bulge bracket banks. JP Morgan Chase adding it to its focus list. What are your thoughts on this one, Kevin?
Yeah, keeping the overweight rating on the shares at the $111 price target. Look, I mean, this stock...
15 minutes and the fat cat's come back, but I think it's too late.
A couple of months here, and you kind of had a little bit of an indication that maybe they would see some positive flows coming from their customers, just based on a lot of this macro data that we are seeing, especially if you're looking
Still
at
too early?
income, personal spending, and durable goods, which is really going to be a tailwind for them. And now they're able to capitalize. They've been able to right-size their business. Their model has really shifted to really rely.
Coin definitely did a good. Coin hit my resistance.
Booth to show these products, but really trying to drive those customers online to actually make those
191.59.
a little bit more competitive to some of these other names like a Target.
We're just shy of it.
Amazon that has a very big online presence. They've been able to do the work here.
It's what I had it in a way. I don't know why I had it on there.
Actually, optimistic when it comes to the consumer computing business. Once again, that super cycle, that refresh cycle could be a tailwind.
I couldn't tell you why. Probably that.
Around when you're looking at a longer time frame, it was kind of left for dead there, especially during the COVID era.
All right, Street seems to like it. We're seeing Best Buy rise, but just shy of 2%. All right, let's talk about, you mentioned Micron earlier. We've been watching this one all week, right, Kevin? Especially in the lead up to their results and in the aftermath of their results. Now, today, you had a lot of analysts yesterday resetting their numbers on this and resetting their price targets. Today, you've got Baird, though, lowering the price target they see on Micron. Getting a little bit of a haircut today for Micron, but what stands out to you about this?
You know, they call out the high bandwidth memory side of their business, and obviously that's the bright spot. That's what everybody really wants to see. That's what is actually being provided to NVIDIA for their GPU clusters out there. And so that's going to be a tailwind, and we did see a significant amount of healthy growth in that respect. But when you're talking about DRAM or even the NAND chips and that side of the business, there's still a little bit of skepticism that we are seeing a full flush of inventory out there, and that we might still see some pricing pressures taking place, which could eat into their margins. So even though we are seeing the rapid growth of high bandwidth memory, they don't believe that it's going to truly exceed or offset any type of margin pressures when it comes to DRAM in their core business, which is 60% of their overall revenues here. Today, the price action has been remarkable. I mean, there's a lot of volatility in this name. We saw a nice little move to the upside yesterday, but at the open, we saw about a $2, $2.50 drop. And so you're starting to see maybe the stock maybe getting challenged at these current levels. That $110 level has been an area of resistance in the past. We can see that on the chart. Maybe we do see a retracement back, maybe filling some of these gaps before it tries to push higher here. But once again, a little bit of skepticism when it comes to the core portion of their business, which I think a lot of analysts really want to see the hard data first before speculating that the PC market and the handset
Lulu's had a good day
when it comes to inventories.
All right, and the stock seems to be getting a little bit of push-pull right now. It's not quite at the lows that you talked about. It's off by just shy of 1% right now. So certainly some push-pull around those levels you were talking about, Kevin. All right, up next, it's time chart and trade. We'll trade our up votes. We've got WIN and HPQ.
Right back.
Kevin Green will do the honors, and chart master Rick Ducat will join us to go through the technicals. Next Gen Investing will be back after this break. Stay with us.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. Time now to chart and trade our upvoted stocks. That would be WIN Resorts, and HPQ. Kevin Green will have the trade, and the Duke of Data, Rick Ducat, goes through the technicals.
I'm about done for the day, I think.
Guys, let's start with breaking this all down. We'll start with you, Rick, with WIN. Talk to us about the trends that you're seeing.
Sure. I mean, you know, it's a big day for
Take a
China,
$200
Korean
loss on
stocks in
SPY. I
general
don't want
here.
to,
So
but
we're seeing some notable movement in this name during the past couple of weeks here. So when
give
we
it
look at
another
our
shot.
chart, we can see that
We
it's
got
been a very different
a few more
scenario
minutes.
recently here because
9
we
more
started
minutes.
up here with our yearly highs 110.38, sharp downtrend here, basically a straight shot from those highs all the way down to the lows near 71. So what, a 40-point drop in, you know, the course of like 2 quarters or so, 1.5 quarters or so. But we can see another common refrain. I've been saying it all day. We're seeing it all across various stocks as acceleration of trend to the upside. Modestly sloping purple trend line going upward here, breaking through our longer-term downward sloping trend line, then a steeper rise here, and now we've got our white trend line almost vertical, really. So a really strong price action here during this recent time span. We've taken out some important areas. We've surpassed our moving averages, yellow 21-day, orange 63-day, purple 252-day exponential moving averages here. And the purple 252-day, that's the most significant one. The longer the time frame you're looking at, the more important it is when price does breach it one way or the other. Strong close above this longer term time horizon moving average here, handily clearing it. However, we've still got some lifting to do. There's still some resistance overhead, but look at the volume. Volume spikes. Heavy volume during this rise. Volume spike, meaning volume at least 50% greater than the 50-day simple moving average of volume. So there's some conviction behind this move, Diane and Kevin.
And then
Some conviction behind the move.
About momentum, especially when you look at it kind of on a historic basis.
Oops, sorry, lost my charts here. Someone could help me out there. But when we look at you know, our chart here for win, we can see that what we've been doing recently, you know, this steep acceleration to the upside, what you'd want to see would be matching with RSI here, our measure of momentum here. And as soon as we get that back up, I'll speak more to that here. But we can see what you want to see with RSI would be a break above the previous price high, like so price making a new high, meanwhile RSI making a similar closing high as well. So thank you there. And we can see a similar situation here with the RSI accelerating to the upside, rising, crossing above that 50 midline, firmly in the overbought area now. So a strong movement in terms of the price action as well as momentum. And remember, RSI only goes from 0 to 100.
God, that thing's way oversold. Oh, that's Donald.
We're at almost, we're at 84 right now. So a very high reading on this momentum indicator. Not really any signs of slowing down at this point.
All right,
Yep.
I'm glad the charts came back. All right, let me ask you about one more thing that you'd be watching. Talk to us about the levels
More
of
drum on
support or
SPX.
resistance that you're paying attention to when it comes to win.
Of course. And when we look, you know, at the price action here, there's some notable areas nearby. And the one that stood out to me the most, 99. This red line here, that was a low point in terms of closing prices. We did make some intraday fluctuations beyond that level, but that was roughly where price wound up settling at the end of the days during this little stretch of time here. Then that was overhead resistance. We did not quite manage to clear above that after we did eventually break through it to the downside here. So this is a key area to watch to the upside, this $99 mark, this red line. There's also a volume node nearby, an area of heavy trading. Now, it's not really in comparison to these areas here, but it is a little bit of a spike here. That could be a congestion area to watch to the upside. And then eventually, you know, we'd be perhaps looking to get up here. There was another small gap there near like 104. That could be another area to watch. To the downside, purple 252-day EMA, as well as the low point that we reached on that day's candle there. So roughly between like 88.70 to 89.40 or so could be a supportive zone based on our lows and our moving average. So that could be one area to watch.
All right, so those are areas to watch. KG, time for you to take over. How would you trade win?
Well, you know, Rick is the best when it comes to charting here, and this is actually a trade setup that actually complements a lot of those technicals that Rick was just talking about. And this is actually trying to sell a call spread here. This is going to be a credit spread.
God, what a
Looking at the
fucking
October
bounce.
4th, so for next week, looking at selling the $100 strike, buying the 105 strike, doing this for a credit of 75 cents. Max loss on this trade is going to be the difference between the spread, which is going to be $5, minus the credit received. So the max loss is $425. Max gain is $75. That's a credit received with a break even of $100.75. Once again, looking at that area of resistance right there at around $100, if we're not going to be able to see a lot of volume to be able to break through, the stock may be able to.
I can't jump in that now.
And this is where this trade would actually max out when it comes to probability. We also cap out the risk to this trade as well. Now there is a significant amount of risk when we're kind of looking at the premium received, but we are capping that just in case we do get a break above that 104 level that Rick was just talking about in a continuation trade to the upside. So Diane, this is a very short-term trade, trying to once again match the technicals here by being able to try to capitalize on some of that resistance pressure.
All right, and let's pivot to the other stock in focus. We've got HPQ in focus. Win's been up, HPQ under some pressure. Rick, I'm going to send it back to you. What trends are you paying attention to here?
Sure, this has definitely been an interesting name to watch recently here. And when we do look at the chart, we can see that it's kind of a tale of two charts almost, because we have such a dramatic change in the middle of our time period that we're looking at here. So we've got this kind of, meandering sideways period where we had a pretty obvious range and then a sharp rally here, culminating with this huge spike on earnings here that took us into our 52-week highs of 39.52. From there, a downward channel formed here. Two downward sloping trend lines, both parallel to each other. We draw our conventional trend line going across the highs. If you duplicate it, you copy it, you put it along the lows, it can give you a place to look for potential support, and vice versa. It works to the upside too here. Not going to match up every single time, but often enough that it's worth noting here. So, like our last chart here, we can see that this rally has given us some movement beyond our moving averages here. We've got our yellow 21-day and orange 63-day clustered quite closely together. Usually that signifies that there's not really a clear trend direction here, which makes sense. We've kind of been zigzagging back and forth between our channel boundaries there here. So a push above those moving averages is a more positive sign. We are, unfortunately, experiencing what seems to have been a false breakout to the upside, though. You can see that yesterday we pushed upward. We couldn't quite take out those previous highs, though. Now we're faltering a little bit. We are below our short-term white trend line here that was going upward here. So definitely something to keep an eye on here. That's kind of a major development to see if we were to be able to muster our way back up above this trend line. Or
I'm down 200 on the SPY. I don't know if I want to sell it yet or not.
And what about momentum? What are you watching when it comes to momentum for HPQ?
Sure. Looking at momentum, we can see that
we got one more minute to find out.
Triangular shape here. We had a longer term downward sloping red trend line. You can use trend lines, support and resistance on RSI, similar to how you use it with price here.
If we start to turn, it should be now.
A competing trend line going upward off of this low point where the RSI was in the oversold area. So we had our green and red lines kind of converging toward each other, but the bullish activity did seem to win out here. We crossed above the 50 midline and we invalidated that red downward sloping line here as we pushed above the resistance that we were encountering here based on these old highs near like 36.17. However, we are faltering a little bit here. RSI is falling off. It does remain above that 50 midline, so still more geared toward the bullish side, even though the price action maybe is not exactly what the bulls would want to see today.
And then speaking of those levels that you're mentioning too, and some of the breakout but meeting some resistance now, what are the levels or support that you're paying attention to that would indicate kind of a continuation of, say, faltering or breaking out?
One really easy way to look for potential support and resistance is to look for the highs and lows relative to your current price action respectively here. So we can see that we had our little rally here. This was the next high point. That's about where we stopped yesterday. That's about where we closed near 36.87. That is another point that the bulls would want to take out if we can continue our move to the upside. Beyond that, we've got our best close of the year right there, 38.36. We were not able to push above that really, you know, with any conviction. We you know, that was our best close. The close is more important than the intraday highs. So that would be the next point that many traders would probably have their eyes on. To the downside, we've got our green line here. That was our best close that we experienced during this little rally here. So that would be a supportive area, 36.17. Beyond that, our cluster of moving averages right here. We came pretty close to the yellow 21-day EMA. 21 and 36, or excuse me, 21 and 63-day EMAs are at 35 and 34.73 respectively. So once again, a supportive zone between those two moving averages that could provide a foothold if price really starts to fall off here.
All right, Kevin, when you look at HPQ, can you take us through your example trade?
Yeah, I'm right there with Rick, especially yesterday's candle on the daily chart looking like a hanging man candle, basically a reversal and a lack of continuation. So thinking about the stock actually reversing to the downside here, I'm looking at a bear put spread, buying the October 18th, which is the October monthly, 36.32 put spread, buying the $36 strike price, selling the $32 strike price for a debit of 90 cents. So the max loss on this trade is going to be the debit paid $90. Next gain would be $310. That's if the stock is below $32 at the time of expiration, with a break-even point of around $35.10. Now, this stock would have to actually move in order for this trade to be profitable, but that's where you're also getting a little bit more time, and then kind of bringing that back to the technicals there. That $32 area has been an area of support that we tested on August 8th. Of this year, so looking at as a potential target for the spread. So once again, finding risk around a 3-to-1 risk-reward ratio for the spread. Give me a little bit of time, but you do need to have this move, Diane, in the right direction, which is going to be to the downside for the stock.
All right, great stuff. Thank you, Rick. And Kevin and I will be back with you after this break. But coming up, it's time for FOMO. We'll talk Costco. Pulling back after its latest results. Stay with us.
Costco.
Empower your portfolio with the Schwab Network.
I got a low support on this one, another $75 dip.
On any device for free. Schwab Network.
Per cost.
With Schwab investing themes, it's easy to invest in ideas you believe in.
On the weekly, hit the 21, we don't hold the 9.
Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear.
Tesla has 3 white soldiers too. 3 black crows, 3 white soldiers, 2, 3 again. So we could have found resistance on it.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Okay, Randy, we're getting down there to support levels.
Welcome back to Next Gen Investing. I'm Diane King Hall here at the New York Stock Exchange. Kevin Green joining me as well. Time now for FOMO. We are taking a look at Costco.
55.75s at 115.
Latest quarterly numbers. It was a mixed bag when you think about the numbers. Kevin, what stood out to you? Like, what were you paying attention to when you look at the earnings from Costco?
Well, I think the price action first and foremost is the big interesting thing for me here, Di. I mean, yes, they had a mixed report, but the stock's really only down like what 2%, so it wasn't that bad. Obviously, the bar was actually very high going into this print. But luckily, we also get the monthly sales data from them. So we did see a slight miss on the top line when you're looking at revenue, but we did actually see a beat on the bottom line here with the adjusted earnings per share coming in at $5.29.
And we dropped 57.06
And the other thing that I thought was actually very remarkable
on the SPX next week.
The continued growth when it comes to e-commerce. You saw around an 18.4% growth on a year-over-year basis. Now, granted, it's actually a little bit decelerating from what we saw last quarter, but at the end of the day, that's still remarkable for a company that's just really kind of breaking into the space, and it does appear that they might be taking some market share. Now, this company is very unique because they're able to control as much as they possibly can their supplier prices. They have that much influence on them, and so they can provide these very low prices in bulk, obviously, for their customers and have a little bit more stability. And I think the commentary about their strategy moving forward, looking at more consumer discretionary items, maybe to kind of bolster up their margins, if you will, is another strategy that they're probably going to be able to capitalize on. I mean, they brought to market gold bars, and they continue to sell out at record levels there. They have that leverage. What do you think about these earnings
Was she laughing?
when it comes to the Costco and maybe some of the price action after?
Yeah, I mean, look, I do think it's clear that the street is not willing to throw the baby out with the bathwater, and especially even when you look at the analyst commentary, they're still, seem to be overall like, yes, they're revising some price targets, but there's several price targets revised to the upside. So Costco looks like it's holding up despite, yes, they had a miss in terms of revenue, and even same-store sales was a little bit light, but it looks like, they will still continue to perform when it comes to the road ahead. You think about the price increase that they had recently, and they talked about that on their earnings call.
I'm going to get out of the
SPY.
SPY.
Is when you will see growth and the response from that number in 2025 through 2026. The CFO talked about that on the earnings call. One other thing I thought was interesting when you looked at their numbers and just when they talked more about what their consumer looks like, they talked about signups of younger customers, that they were seeing an increase in younger customers, people who are under 40 signing up. And they are trying to keep prices low. They're saying, though, that they're not having to cut prices for consumers. Now, they did, again, to me, it seemed like a very balanced call when you think about the earnings call, Kevin. They talked about the choosy consumer because we've been talking about that for some months now, where the consumer is making different kinds of choices, and Costco and Walmart have held up in the face of the choices that consumers are making. The CFO said, quote, there are signs that the consumer is being very choiceful in how they're spending their dollars. So I thought that stood out to me, and the shoppers are looking for bargains on things like TVs and home appliances. That makes sense for those big
I know if I sell this sucker,
Even in
it'll
the
bounce.
grand scheme of things, you're not seeing a lot of weakness, even for the big ticket items. When you think about what durable goods came in at this week, I mean, that was unchanged. It was expected to come in lower. So Costco, to me, it looks like,
Definitely pushing my limits.
We're not seeing as much pain in terms of the price action today. I mean, the stock is down off
Down
about,
45 cents.
And the analyst reaction.
Only got 5
to Costco
contracts. I could buy a
below
bunch.
maintaining their outperform rating, lifting their price target to $980 a share. Telsey has lifted the price target to $1,000 a share. Kevin, you and I talked about that earlier this week and what $1,000 a share would mean for Costco, right?
Mean a lot.
I mean, I was hoping that we saw a stock split yesterday. I think that would have provided a little bit more enthusiasm. But for now, they have not done that, and maybe they will not do that in the near term here. Diane, there's a couple of things when it comes to this name.
So I don't know about the stock split. They didn't treat it well with NVIDIA.
I mean, I would say Chipotle and Walmart are probably the only others that is able to have the stock appreciation when it comes to price, but they're able to back it up when it comes to the fundamentals. There's not a lot of companies that are able to do that. There's a lot of companies that can sell a story, but maybe aren't able to back it up when it comes to the fundamentals. Or there's other companies that just have macro headwinds where the investors themselves are just discounting the stock because they really don't believe that they can actually achieve some of the hurdles that
Wish it was a little bit cheaper. I'd be able to buy a ton of
a
it.
little bit different. You also have to think about the staples sector in general. There's not a lot of players that have the market growth like Costco has. I mean, outside of Walmart and maybe Target, Costco's taking market share from every other major grocer that is out there, and if that's going to continue here, I would suspect that investors are going to be still enthusiastic for this name. So, is it expensive from a dollar standpoint? Yes. Is it expensive from a multiple standpoint? Maybe, but there's not a lot of other staples out there that can actually provide you the growth and stability in cash like Costco can, and I think that's probably why the street has provided it a little bit more of a premium over the last couple of quarters here.
Yeah, that makes sense. I mean, it lines up with something that we saw from Oppenheimer today. They're saying, you know, Costco continues to deliver steady share gains globally. We expect strong momentum to persist for the balance of the year, driven by superior merchandising efforts and the company's unique value proposition. It's that value proposition that I think you're talking to in terms of one of the pieces of the puzzle for Costco. But I know you got an example trade. Kevin, you want to take us through your example trade for Costco?
Yeah, definitely. So if you're kind of looking at a one-year daily chart in this candle that's developing right now, we had a flush to the downside, but you are seeing buyers potentially stepping in, and that could actually indicate a hammer candle, which kind of shows a little bit of a reversal from the initial trend. And if that's going to be the case, Diane actually set up a bullish trade for this stock. Now it's going to be kind of a two-parter here that we're going to build into one. Looking at buying the $885, $900 call spread here. This is for October 4th, and then selling a put spread against this, selling the $845 put, buying the $815 put, doing this all for a debit of $5. So the max profit on this trade is actually going to be $1,000. The max loss is actually $3,500, and the reason being that call spread is only $15 wide, but that put
57.40 puts
wide. And the reason why I actually set up the put spread in the manner that I did is actually just to reduce the margin requirement. Instead of selling a put outright, which would have required around $85,000 to hold this trade, looking at buying that $815 put was.
I'm watching this here just in case we start to turn. I'm going to jump in back in this sucker.
Shrink it down to around $3,500 in order to hold this trade. Now, this trade is actually going to expire for next week, so still need a little bit more of a recovery to the upside. But this is one to be able to try to capitalize on a retracement move and maybe a continuation of the primary trend for this stock, which has been up.
The 57.50s.
Example trade on Costco. Up next, we've got China's big week after government stimulus. We're going to take a look at that. We'll discuss it with the team from Crane Shares. That'll be coming up on the other side of this break. Stay with us.
I don't think there's a possible rebound on these at all today. Mara pulled back today after it hit 18. Yeah.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access.
Now 140.
Equities markets are closed, all on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated
57.50s,
and trading specialists ready to help, however complex the strategy.
We'll give it another shot here.
Opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. I'm Diane King Hall here at the New York Stock Exchange. We got Kevin Green also doing the co-hosting honors today. We've got shares
57.50s at 170.
continuing their gains this week. We've got Alibaba continuing to add to its advanced JD.com as well. Joining us now for Insight, we've got Henry Green, investment strategist, Crane Shares. No relation to Kevin.
Break it.
Henry, thank you so much for joining us this afternoon. This is true. Kevin says maybe. You never know. Have to do it Ancestry.com, maybe. All right. Let's talk about just kind of set the stage, big picture with what occurred this week, and what do you make of what we're seeing in terms of the continuation of the advance, Henry?
Yeah, so we've been saying for a long time that China's government, including the central bank, of course, cannot afford to allow its economy and stock market to be in free fall. We've been saying that at some point, we don't know when, they will intervene in a significant way. They waited until the Federal Reserve in the US cut rates to do so, but they did so immediately after, and it's had quite a remarkable effect on Chinese equities. But honestly, not that remarkable, because these equities, to us at least, because these stocks have been trading at such low valuations. Some of these companies are trading at cash, at the level of cash they hold. And in general, the internet space, which has recently seen positive earnings, expectations growing, was trading at half the valuation average for listed US-based internet stocks. And so, that's captured by our KWeb ETF, and you're seeing the results of all of this stimulus announcement.
Are you out?
Which, we knew was coming, we just didn't know when, and it was right after the Federal Reserve.
So Henry, a real quick follow-up to the KWeb here. I would suspect, and maybe I'm wrong here, is this probably
we're at 225 now.
Inflows that you've seen going in.
Come on, baby.
Just because of all this hype, or is this more just the price appreciation of a lot of these equities rather than dollar flows going into the ETF in general?
Very good.
I don't know if this is the fastest, but this is, as far as I can remember, this is one of our biggest inflow weeks. So we've had about
I get $4 out of these.
As we've had inflow.
If we break to 63, now the 63 is going to be a resist. What is that?
How significant? You said you've been expecting this, and there have been calls for this.
That's 63.
How significant is this, and what are the broader implications when you think about China's economy and even here in the U.S.?
Yeah, I think the broader implications are that China is supporting its economy. I think that was very questionable as to whether and how much they would do so. I think the broader implication is that investors need to look at China. A lot of people have been sitting on the sidelines. People have been out of China for 2 years. It's been in almost nobody's portfolios. And now people are looking at it again. Performance attracts eyes.
There's been in a few portfolios.
So I think the broader implication is this rotation.
Not mine.
After the Fed cut, I think you're going to see an actual rotation that's been a long time coming, quite frankly, out of U.S. equities and into international markets and into emerging markets, including China.
Come on, keep going.
India, also out of Japan.
Break to 63. There we go.
In Japan, we expect more BOJ hikes. And so I think money will come out of there. Where is it going to go? It's going to go.
No, this could be an exit idea.
It's going to go into international stocks. It's going to go into cheap China. And this is something
we've
been advocating for our own clients for a long time. And it's nice to see that this looks like it's going to start happening.
So Henry, everybody's calling this the bazooka that's being used now. I mean, they've had other stimulus measures that just doesn't seem to be holding. What sectors do you think are going to be the biggest beneficiaries of a lot of the stimulus? Obviously, you have the KWeb, that's probably your most popular ETF that is out there, that's really focusing on the internet and technology here. But you also have some other ones for clean tech and healthcare for China. Which one do you think is going to see the most stickier flows or has the biggest opportunity based on the stimulus measures that have been announced for this week?
I think that KWeb, as you said, is our most popular ETF. I think it has the most immediate opportunity right now. I mean, it certainly has. We've seen that this week, and that's again because these stocks were so undervalued. Outside of the internet space, again, the internet space. If you look at China's economy, the internet in terms of earnings expectations across like the MSCI China Index, they're actually the best for the internet space. Other than the internet space, we think that in general growth stocks, I think mainland China listed. So we also have KSTAR, KSTR, and that tracks the STAR market, which is a board for small cap, pre-profitability stocks. And we think that could see more upside. As you saw, Hong Kong really reacted quite forcefully, and then it took the mainland a couple days to really react. So as you kind of see that feeding into mainland from offshore, again, because mainland Chinese investors see what's happening offshore, and they actually respond to that in their own markets. So we think that KSTAR and in general mainland
ETFs, like see SPY move up.
Stocks, excuse me.
We got 25 contracts there.
Strong gains that we've seen out offshore. So we also have KBA, which is the top 50 mainland listed large cap stocks.
All right, and then Henry, I want to ask you about what we're seeing with regard to these inflows and the gains that we're seeing in companies like Alibaba, JD, Pinduoduo.
Let me see here.
What does this tell you
Could
about
sell these here.
Investor confidence in kind of the overall recovery efforts? We had the monetary stimulus, and then there's fiscal stimulus announced. What does that tell you about the road ahead for investor confidence when it comes to China recovery efforts?
I think that we've made significant progress this week. I think there's still a road ahead. I think that we need
going
to see
up,
more,
magnificent.
Mainland investors actually putting money into the stock market. This has been something that's been a priority for the government.
240,
ever since the real estate
5.
Deleveraging, which began in 2022, and that's gonna happen slowly. But that's going to happen.
I'm up $75 contract.
We're also and then as I said, we also are going to want to see more international investors outside of China looking at China's markets and coming into the market. And we think we're actually already seeing that, and that's going to happen a bit more quickly. But the mainland, China, within China, mainland Chinese investors are heavily in real estate and right now in bonds. You've seen the bond market in China, just yields have been crushed because everybody's in safe investments, and we want to see them come into the stock market. And I think that's going to be kind of a mega trend over the next couple of weeks. But I think those are two.
All right. Henry Green of Crane Shares.
260.
With some insight on what
Keep going.
With the stocks rallying with reaction to China stimulus measures. Thank you, Henry. Have a great weekend.
Yeah, I gotta get out.
Next is under 30. We'll
They're dropping
Intel,
fast.
another chip maker looking to buy one of Intel's divisions. You want to stick with us for that?
Come on.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in.
I'll make you
Spot a trend in electric vehicles?
I'll make you
Have a passion for online gaming?
go.
Want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Let's hold the 63 and move up to the 200 by the end of the day.
Trading the trend. It's Fast Market. Ready for you.
295.
I'm Kevin Hicks. Catch me on Fast Market. Weekdays at noon.
Randy.
Schwab Network.
I love that there little bounce right there. That was impressive.
Welcome back to Next Gen Investing. I'm Diane King Hall here at the New York Stock Exchange. We've got Kevin Green hosting with me today. Time now for Under 30. We're discussing the latest on Intel. Joining us now for Insight, we've also got Jeff Pierce, Senior Manager of Derivatives Trading at Charles Schwab. Jeff, thanks so much for sticking with us this Friday afternoon. All right, Intel's in focus. We've got a Bloomberg report. What's going on here?
Yeah, more reports of companies interested in buying parts of the struggling Intel. Story out of Bloomberg that says a person with direct knowledge that ARM Holdings reportedly approached Intel about potentially buying their product division that sells chips for personal computers, servers, networking equipment, but was told that the business was not for sale. They source said that ARM did not express interest in Intel's manufacturing operations, but of course, if you've been following Intel, this is not the first offer we've heard about. There's been takeover reports as they struggle to really compete in this AI chip-driven market. Once one of the world's largest chip makers, Intel's really been failing to keep up. Most of the advanced AI programs we see now, of course, are tied to NVIDIA. Also Intel's attempt to really produce GPUs for gamers and creators that are impressing has failed as well. So, Qualcomm has reportedly also approached the company about a takeover, although it's not really clear how deep those discussions have gone. Investors are certainly waiting to see whether Intel can turn this story around or if we are going to see a deal made eventually.
Jeff, I want to get your thoughts. What do you think is happening here? Do you think there's going to be a deal coming out here, or do you think this is just kind of speculation and Intel's really trying to keep everything in-house and really trying to work on a turnaround strategy? What do you think?
I mean, all indications right now point to Intel not wanting a deal, right? We know that we've seen a lot of unsuccessful attempts for any of these companies that, a deal with Intel and Qualcomm would likely have to overcome a lot of antitrust concerns. We know the company is really trying to turn around their chip business. The CEO reiterated that their focus is on the foundry business. They're expected to spend $100 billion over the next 5 years with some possible outside investment. But also, you have to look at, the company is expecting to strike a deal with the U.S. government for about $8.5 billion in direct funding. If they were to strike a deal with another company, that could interrupt.
I don't know why we spend so much money on businesses. It just,
but investors, could persuade otherwise, or if we continue to see Intel struggle to not keep up with the names out there that are taking off. You think about NVIDIA and some of these other names, or even ARM.
it used to not be like this, man. They never threw this kind of money.
It's been a struggle, and they're going to have to turn around quickly. They've had a long runway, and I think investors are certainly
Billions?
a little bit fed up. We're seeing that in the stock price.
Yeah, you make.
I don't want to pay for it.
Especially when you think about so today the reaction seems to be pretty muted. It had been a little lower. Now it's turned flat, just slightly above the slightly.
It's not doing me no good.
Barely, actually, it just turned a little lower today.
So,
but Intel's really been pummeled year to date, and then when you look at it year over year, it's been doing terrible. What does the road ahead look like for Intel?
Well, here's the good part. They have had some chip releases that are getting, promising reviews, right? You look at their mobile chip, the Lunar Lake, designed by Intel, manufactured by Taiwan Semi right now, but getting praised for their battery life, computing performance. Next step for the company, launch the next gen, which is the Panther Lake. They're expected to manufacture that in their own pipeline, which could, of course, mean a better cost structure overall. And then, as we look towards the future, we're really seeing that data center and AI side of the business pick up. We saw it fall 3% to just over $3 billion, missing expectations in the last report. The outlook has been a struggle. So, you know, we know they're pumping money into the AI side of the business. Watching that develop, seeing them compete is what investors are looking for. It certainly seems like the company has the ability to do it, but right now they're struggling. I mean, operating loss of $2.8 billion in their foundry business. If we look at last quarter, that's not been good enough.
All right, definitely not good enough. Thank you, Jeff. That's Jeff Pierce, Senior Director of Derivatives Trading here at Schwab. All right, KG, final word on the market?
Right now we're flat for the S&P 500. Maybe we do see a little bit of a rally going into the close, but overall, the breadth is still there, and that's really what we should really care about here to be able to hold us for next week. So looking forward to a lot of the economic data, maybe some of the Fed speakers next week, Diane. And I appreciate being on the show with you. It was a lot of fun. I had a great time doing it.
Same, I enjoyed hosting with you. Thank you all for joining us here on Next Gen Investing.
Somebody leaving?
Stay with us here on the Schwab Network. That's the Watch List with Nicole Petalides. It's coming up next.
Nicole Tedelini's married.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not.
I don't know what kind of question that is. If that's
to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of the market will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Blake.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
$3.
It's controversial. The old guard is saying
$3.10.
off with their heads.
AI feels controversial on
Keep
it's
going.
going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can
Yeah.
go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
I got 11 more cents to go on the SPY to break even.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
I'm holding 5 contracts of the SPX.
Good afternoon.
I'm almost to my target.
I'm Nicole Pedalides. It's 2 p.m. Eastern time. Glad you're with us on this Friday. We're live from the New York Stock Exchange.
SPY's at 66. I need 9 more cents.
In fact, we set some records earlier today, but pulled back off those levels. We have a lot to discuss in today's show. It's day 4 of the UN General Assembly. That's been underway. It's been very busy here in New York.
Okay, I'm at my resistance.
The headlines so far, including advocacy for more nuclear power and escalating geopolitical tensions.
Oh God,
Also,
$3, not $4.
how Gen Z and millennials are utilizing AI in everyday life, including using technology to build their wealth. And our panel ready to talk all about the state of the consumer after fresh signs of easing inflation and growing optimism. In the meantime, here are the numbers for you. So the S&P 500 did hit a record high earlier today. It's sitting at 5746. We saw the Dow also hitting some record highs. Right now, the Dow is up 214 points. The NASDAQ tech has been down all day here. It's been a laggard. It's down about 0.25% at 20,061, and the Russell is higher by 0.86%. Oil and gold are mixed. While oil is gaining, gold pulls back $27. It's been near records, and has pulled back. But oil's at 67.75 the barrel. The VIX at 15.88. The dollar holding that 100 mark today, 100.18, and Bitcoin 66,410. So that being said, we got in our inflation prints, consumer prints. We're coming off the heels of the China stimulus. Much to discuss throughout this hour. For some of the biggest stories, let's talk to Kevin Hinks, host of Fast Market here on Schwab Network. And we are looking at the PCE, the sentiment. What are people's takeaways from some of these reports?
Hey, Nicole. Well, the first thing they're going to do is focus on the headline that the media will put out.
Come on, Spy. Give me
headline year over year, PCE dropped to 2.2%. Down from
I hit the 200 on the SPY too,
as
but
you can
damn.
think, dominated by lower energy prices. Now, what they won't tell you is that core PCE actually ticked up 0.1% from 2.6 to 2.7%. But they like the monthly numbers, and because Jerome Powell has us focusing now more on the labor market than on inflation, this number was pretty much accepted as in line and close enough and good progress. So the market went higher. Then geopolitical risks started to creep into the market. NVIDIA turned from higher on the day to down. We got a consumer sentiment number that was 70.1, a little higher than expected, with annual inflation expectations around 2.7%. So those numbers came in relatively in line to a little stronger. So all things considered, this is a market more mixed than up or down. You've got the NASDAQ down, about 1/3%. You've got the S&P pretty much unchanged on the day. And you got the Dow a little bit stronger. So all these things after a massive week in the market with big percentage winners out of not only some of our stocks, but China and all stocks linked to China. This has been a pretty good week for the markets, Nicole.
Yeah. How about we turn our attention? You mentioned the consumer. Costco, we're looking at that. The stock's been under a little bit of pressure. What were people's feelings about the report?
Well, Costco is a fabulous company, doing extremely well, putting up good numbers. The one problem might be that it had gone too far, too fast, and the valuations.
Iran's embassy in Beirut says Israel's strike in Beirut is a crime that deserves appropriate punishment.
That's a nice healthy beat. Revenues, a slight miss, 79.7 billion versus 79.75 billion, so just a slight miss there on revenue. Sales growth, 5.3% in the United States, 5.5% in China, 5.7% international. All these numbers were good, just not good enough to keep the stock unchanged or higher on the day. The stock has drifted down. Right now, I've got it down about 1.9% on the day, Nicole.
It's overpriced, guys.
Kevin Hinks, thank you so much. Great to see you, Kevin. Thank you. Now let's take a look at the bigger picture. Joy Yang is with us, head of product management, market vector indexes. And this week we have the UN General Assembly. It has been very busy here in New York, no doubt. And we're trying to gather some of the themes that have come out of these high-level meetings. It's good to see you.
Hi, Nika. How are you?
Good. So you sent us a few ideas and topics. I mean, I'll start with nuclear power. That's something they're talking about. How so?
Yeah, so we're in the middle of also climate
Still
week.
up 100%.
And
I mean, this thing got to go down a lot.
Gen Z usage. So we know that there's huge interest in AI, but we also know AI
Who
is
is
going to
this?
need a lot of data, and that's going to require a lot of data centers. So these are very energy-intensive projects, and we've seen like this shift towards how are we going to solve the problem for energy transition as well as energy consumption. So we've seen policy shifts towards nuclear because this is a very clean, cheap, and more importantly, reliable energy source. And we saw earlier on Monday some of the world's largest banks say they will fund energy projects around nuclear infrastructure, which is very, very costly. So, you know, we're looking at the companies that may benefit from this, and that's going to be nuclear power plants.
I think all the hostages are dead in Gaza. That's what I think. All of them. And Israel won't stop until the hostages are back. All they got to do is tell them they're dead, and the thing will be over with, I think, but they ain't going to do it. I think they're dead in a way. And that includes Americans too. I heard that was a huge explosion today. I don't know what they shut off. I'll find out tonight. Well, I think the run's over with. Might have to sell these at a loss. Because they'll be hard to recover, as SPY will. Somebody might get
behind their monetary fiscal policy, but whether or not that's going to turn or drive stock market up, that's, you know, that's still unpredictable.
Sure. You're also watching all the geopolitical tensions, and we've seen some heating up of some of these things that are happening abroad. What grabbed your attention this week?
Of course, we started the week with escalating tensions around the world, both in the Middle East and in Russia. And so I think this is creating more uncertainty and risk, and the markets don't like uncertainty. So people are looking at how do you
haven't bothered them a bit.
How do you kind of really think about
I don't get it.
diversifying your positions, and that's gold.
She says the market doesn't like uncertainty. Well, these wars have been going on for 3 years. It ain't bothered them a bit. Someone gets nuked, I don't even know if it'll bother it.
Because we think that, demand will still.
It can happen. I mean, this
Central
is
banks
serious
are still
stuff.
Buying gold. The retail investor is coming back, and these risks are not going away. So we're watching this space, and we think that many of these, gold miners are well positioned to take advantage of it.
Year to date, up almost 30%. The high this week, to your point, 27.08 and change. That was yesterday. So a big move there for gold, often viewed as a safe haven. Joy Yang, thank you for being here.
Thank you.
Always love having you on the show. Market Vector Indexes. Thank you, Joy Yang, Head of Product Management. Coming up, Options Corner. Tom White will stand by here. He's talking about unusual options activity seen from the day.
It's sad.
Investors are looking to trade.
None of this never should have happened if we didn't leave
Think about copper and how that's been running up.
The way we left Afghanistan was a shame. And it caused all this chaos. And Kamala has a close race with Trump, and there was no wars under Trump. This is, I don't know. I don't get it. Not at all. All my liberal friends are dead fast in identity politics, and all of them. All but maybe 2 or 3 people I know out of 400 or 500. But I used to hang out with the dead heart liberals. I mean, I played music with them for 15 years. I was a liberal once. I mean, I changed my mind.
Available anytime, anywhere, on any device, for free. Schwab Network.
It's like they don't even know what's going on. I'm about ready to sell these suckers here. I can't stand watching this.
Trading the trending names every day. I'm Tom
Those
White.
5750s are back at 170 again. Can we repeat?
Go at 12 p.m. Eastern on the Schwab Network.
Not now. We're under the 63. It can come back down and hit the right shoulder one more time.
Welcome back to the watch list. Time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. We welcome in Tom White, host of Fast Market here on Schwab Network. Good to see you, Tom. We were talking about gold at records, right? We just said 27.08 was the high here for gold this week, but Freeport-McMoRan has been running and copper prices on the rise, and you found a trade that was bullish, right?
Yeah, Freeport-McMoRan. It's used as that proxy for copper prices, and after that swoon that we saw just about a month and a half ago in copper, we've seen a resurgence in not only copper but silver hitting 11-year highs, and gold, as you mentioned, hitting all-time highs just the other day. Now, Freeport-McMoRan's basically a copper miner, but they do some gold mining also, and copper's up about 14% over the last couple of months, so that's lended some support. Stock is up 21% on the year. up 16% so far in the month of September. So it's had a good run also. And if you look at maybe some of the outliers that are affecting why copper is going higher, right? Interest rates have come down, that 10-year down below 3.8% after the 50 basis point cut from the Fed. And then the China stimulus, it really plays into this story on Freeport-McMoRan and why we've seen that explosion here to the upside so far this month because China is the #1 importer and user of copper at this point. So those
I can't see a real strong
different
rebound.
entities kind of playing into how we're seeing some of the metals play out here. And then just a couple weeks ago, we had UBS come out with a positive note on Freeport-McMoRan. So it seems like a lot of the sentiment's moving higher here as copper rebounds. A lot of industrial uses for that metal. But we did see some unusual option activity out in the December monthly cycle. So nearly 3 months till expiration on this one. Out in the December 65 strike calls. So these are far out of the money calls. So maybe a long shot here by this trader. They bought over 8,500 of those D65 calls. They paid an average debit of only 61 cents. Not a lot of option premium in those far out of the money calls. But that break even is 65.61 over the next 84 days.
Spy's back at the right shoulder.
7% above the current share price, Nicole. That'd be a new all-time high for Freeport-McMoRan. But if this momentum continues where we're still seeing growth, the Fed's in a rate cutting cycle, China's still adding stimulus, I think that's what this trader's kind of setting up for, that we're going to see some more gains here in Freeport.
Yeah, I mean, between what's going on with China and the rate cuts, as you noted here at home, those are nice tailwinds there for a name like Freeport-McMoRan. And then
I think the SPXs are done.
China bazooka
We're down to 130.
Tell me more about that story there in the trade.
Yeah, you mentioned some of the other Chinese stocks and how well they're doing so far this week. Baidu's up 22%.
They can come back down here.
Run, up another nearly 3% today.
57.39.66.
It seems like, you know, when they first released the first tranche of stimulus, they keep on adding on to it, really trying to spur economic growth in China. They want to get back to that 5% growth level. So that's a concern there for a lot of these Chinese stocks. Now, is it investable? Who knows? The momentum's with these Chinese stocks because valuation-wise, they were really low. And then, you know, is that stimulus the gift that keeps on giving?
They could easily come back down
we really
here.
Have to take a look at. Sorry about that. Had to wipe my eye there a little bit, maybe a little tear. But last quarter, if you saw some of the numbers here, EPS was above estimates, revenue came in above estimates. Now this is basically the Google Alphabet of China. They're delving more into the AI play also, so that might be a boost moving forward. But we did see some bullish activity in here, really short-term positioning in the October 4th weekly cycle. 110 strike calls, a trader bought over 6,000 of these. Average debit of about $2.30, so that break even of $112.30 over the next week. That's about 6.5% above the current share price. And from the reaction that we've seen this week and the movement that we've seen in the Chinese stocks, not too far-fetched to get another 6.5% move in a day or a week like this trade is. But really short-term positioning, somebody out there thinks that Baidu is going to continue to move to the upside.
Yeah, I mean, at the same time, I'm seeing some market chatter that Biden plans to ban Chinese tech in U.S. cars, and that may cut sales by almost 26,000. That's according to Reuters, citing the U.S. Commerce Department. So that's another, sort of Chinese-type story that we all continue to follow, I guess, into next week as well. Last but not least, Boeing, the workers' strike, that's still going. Now what?
Yeah, Boeing put on the table
I took my loss on the SPY.
30% pay increases and increasing some of their other pay add-ons there, including 401ks that the union rejected, but Boeing said it was their final offer.
I'm tempted to go ahead and scalp the 5750s again on the SPX.
They're starting to furloughs with a bunch of workers, some of their contributors to their manufacturing cycle are starting to furlough workers, including Spirit Aerosystems. So this isn't good for Boeing or any of their suppliers either. Up 1% today, but still down about 40% this year. So it's been under pressure. It's off about 10% so far this month. And deliveries were actually starting to improve the last quarter. Nicole, September was tracking really strong before the strike.
5750s at 110.
Now we're going to start talking about balance sheet, right? They got a lot of debt on their balance sheet. Their free cash flow is basically nil. They're on watch from some of the rating agencies. Does their debt go into junk status? Are they going to have to raise capital? So there's a lot of headwinds out there, but at the same time, they've got a massive backlog too. But maybe somebody thinking that we're going to see a resolution to this strike by the machinists here at Boeing, because saw some bullish activity out in the November monthly cycle on the 170 strike calls. A trader bought 4,500 of those for an average debit of about $4.80. So the break even for this trader, where he starts making money, 174.80 over the next 49 days. So you got a month and a half in this position. That break even is about 12% above the current share price here in Boeing. They did sell out of a long position that they had. The November 180 strike calls obviously hadn't worked out because the stock has pulled back sharply, but they're resetting their strike closer to at the money, buying these 170 strike calls with the expectations that, hey, the strike's going to get resolved and the stock's going to go back above 175.
Yeah, the low of the year was this week. I mean, it's so tough for shareholders. I mean, it did have a winning week, but so tough for shareholders, seeing it down about 40%.
They're at 145.
There's some optimism there, at least in one options trade. Thank you so much, Tom White. Great to see you. Appreciate it. Coming up, we will discuss Wednesday's Meta Connect event that happened. It's a new headset, prototype for fully augmented reality, smart glasses, and more. Let's find out what all this hype is about. We'll be right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your
Break it.
future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Knock, knock. Number one broker.
130.
Number one hitmaker.
Thanks for swinging by, Carl.
No problem. So,
125.
Lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
120. Come on, man. Break it.
Welcome back to the watch list. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Look at a few movers for you in the market right now. Bristol Myers Squibb rising after the Food and Drug Administration approved Cobenfy, an oral medication treatment for schizophrenia in adults. The FDA saying this drug takes the first new approach to schizophrenia treatment in decades, and patients will be able to get that medicine as soon as next month. EchoStar is moving higher today after Wall Street Journal reports saying its satellite TV unit, Dish, those together are in merger talks with DirecTV, a rival in the TV industry. So the deal would also include Dish's streaming brand Sling TV. The report suggests the deal could be finalized as soon as Monday. Terms of a potential deal were not mentioned in the report. Okay, it's time to dive into augmented reality space. Meta unveiling the new headset at the Meta Connect event earlier this week. There was a lot that went on, a briefcase, handcuffed, it was very secretive, the Orion. So a lot to talk about here with our guests. Sean Gorman's with us, PhD, CEO at Zebra XYZ. Thank you for being with us. What was your takeaway from the event?
Yeah, it was really impressive, the technology that Meta's put together, and the launch for Orion being specifically so. I think it's hard to overstate the amount of engineering and complexity and challenges that those teams have overcome to get to where they are. That said, there's a long ways to go between the demo and getting it into the hands of consumers. And I think that'll be the really interesting trajectory over the next couple of years and how that plays into Ray-Ban's Meta as kind of being the bridging consumer unit for that technology.
When we think about the Orion digital world and then the real world, how do they combine?
Yeah, I think that's going to be one of the bigger challenges. The mixed reality, virtual reality side of the business has been more challenged, and that's been the same for Apple as well as Meta.
I'm out.
Look at the number of units sold for the Meta Quest 3, it's around 500,000. The Apple Vision Pro, they're predicting might get to 400,000 with just 16,000 units tracking for Q3, according to analysts. But Ray-Ban's Meta, apparently is tracking to 2 million. And so I think the virtual world has struggled for form factor, social acceptance, whereas these more lightweight form factors are really getting consumer adoption. And I think it's going to be a lighter weight approach, a more pragmatic approach that ends up really happening. And we might not see a full bridging of these until much further in the future, potentially.
So the AR development, as you noted, is certainly advancing somewhat quickly to the consumer market. But you said there's still a lot to wait for as well. When are we going to start to see people using these glasses or headsets? Is it going to be this Christmas and next Christmas? At what point is this going to be sort of very commonplace?
Yeah, I think Meta was targeting a 2027 launch for the Orion glasses, but there's still a lot of challenges at driving down a price point to where those become commonplace. I think the number is kind of floating around. We're anywhere from $10,000 a unit currently to the waveguides themselves being $10,000 in these units. So they're getting it to a price point where it becomes commonplace. I think there's still a good bit of work to do, although it's very exciting to see how much progress has been made already. I think things like Ray-Bans, we're going to see those, much more commonly already. And I think, as Christmas hits, that's going to be a really popular gift item. I'd say, the mixed reality side of the really big, heavy headsets will probably remain flat. But, it kind of remains to be seen. I think a lot of that's driven by compelling content, compelling games, and price point.
You mentioned Meta, Snap, and Apple with many accomplishments in the world of augmented reality. Do you want to talk a little bit about the other two and sort of what stands out to you?
Yeah, I think it's really impressive what Snap announced, a little before what Meta did, especially when you consider the budgets between the two. The Snap team's really just operating at a fraction of what Meta's operating with. They've really accomplished quite a bit with their headset, from a technical engineering specification standpoint. Although I think you can arguably say that, Meta's learned some really important go-to-market lessons with Ray-Ban's
More drama
as far as, the engineering and technical acumen of these projects is really what's driving sales. It's, it's a pragmatic, lightweight approach that's stylish, has a useful form factor and a good price point. But definitely a big props to them. They got their headset out to developers, and it's accessible. That's still a step that Meta and Orion will be taking. So I think there's some really good wins, but also probably some lessons to be learned from what's happening across the more macroscopic economy with these devices. I think similarly for Apple, Apple really went hard on the mixed reality side. I think arguably the Apple Vision Pro sales have been probably disappointing, but the technology is amazing. Again, I think the real lesson learned across all of this is this lightweight form factor with Ray-Ban's Meta really driving adoption. and how do we begin to bridge between those two to find something that consumers are really going to want to go out there and buy in large volumes.
So when I think about this, I think about how these glasses will be used, right? You know, what would be some of the most obvious? I mean, whether it's a map or, you know, someone said watching a game. I mean, what are we really using these glasses for?
Yeah, I mean, the smart glasses right now are incredibly simple. You know, there's a camera in there that allows you to take videos and photos on demand with just a voice command against it. But then probably more critically is the audio and AI assistant that's hooked up to that. And I think the combination of the two with the stylish form factor
More drama.
driven by a popular brand like Ray-Bans has really driven that adoption. So, I mean, there's many times where
Look at that sell-off.
with the kids and I don't want to bring out the phone, but if I have glasses that can just capture that moment, that allows me to stay in that
This
space
might be a
more
good bounce
safely.
play.
And similarly with an AI assistant, if I can ask a quick question about something while I'm working or going about my day, I think that's incredibly helpful. I think we'll start to see
5740s.
early on with these is as we begin to look
5745s.
smart glasses. You know, right now they just are a camera with an AI assistant. The more sophisticated AR systems like Snap and Orion and Apple are doing, they're able to determine your location through a visual positioning system and understand what you're looking at and have immersive experience and discovery through that. So I think we'll start to see these glasses begin to get locationally enabled, which will then, to your example of a map, becomes really exciting, right? You can begin to understand where you are and how to navigate the world.
Yeah. And what would you say are the biggest headwinds at this moment to get this out in the way they hope? I mean, I always just worry about some of the simple things, like, you know, when the kids have the AirPods on, I really do wonder what's happening to their brain in between, or if someone's going to have these glasses, are they taping me as I'm walking? Things like, you know, the basics, right? But what do you believe could be the headwinds maybe on a larger scale? Or are these going to be issues?
Yeah, I think there'll definitely be issues. I mean, that was learned early on with Google Glasses, which was a breakthrough product way ahead of its time, but the social stigma of wearing them ended up kind of crippling that effort. But we're seeing that breakthrough with Ray-Bans Meta. You know, I think our sense of privacy has shifted a little bit. The thoughts of cameras being on all the time is a little bit more acceptable. But there's still a bridge.
180.
You know, there's still a lot of people that don't want a computer on their face. They're worried about privacy concerns. But we are seeing that shift, and I think that'll continue to go as society adopts these things, as the tech companies find the right balance between form factor, fashionability, practicality, battery life. It'll be an iterative process.
Them candles seem like they dropped a lot faster than a minute apiece, that's for sure.
At the New York Stock Exchange, you're always on camera, no matter where you are.
They didn't seem like 5 minutes,
We're sort of used to it
6
here,
minutes.
but I get it. Sean Gorman, great to see you. PhD, CEO at Zephyr.xyz. Thank you. And a lot of talk there after the Meta event this week. Big news. Thank you. We will dive in next to how Gen Z and millennials view AI and how they're utilizing that technology in their everyday lives, including their finances. Maybe we could all learn a little something. We'll dive into that.
Ah!
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rank.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides, live on the floor of the New York Stock Exchange on this Friday. 90 minutes left in the trading day. It's worth noting that earlier today, the S&P 500 new all-time high. The Dow Jones Industrial Average new all-time high, but they've since pulled back. I mean, really, I have to say tech has not been given it a go today. Tech has been the one real weak sector today. Materials also to the downside, but you can see that the NASDAQ is down 0.75% here on this Friday. Hewlett-Packard is under pressure. Nvidia is down 3.5%, just for some examples there. The S&P at 5730, but it is a winning week, and that's worth noting. All right, time to focus on Gen Z and millennials because they are adapting to AI technology and using it every day in their lives, in their finances, and more. So we want to learn more and hear more about this. Josh Pantoni's with us, CEO at Boosted.ai. You know, there's the baby boomers, and then there are the younger folks who sort of have grown up with technology and now with AI. What are we seeing, how they're using this?
Yeah, so we're a generative AI company focused on professional investment managers, and we went out and surveyed a large number of folks between 18 and 44, and then 44 plus, trying to understand a little bit about some of these trends and what the implications are for our client base. A lot of really interesting findings. People 18 to 44 are using AI as much as 68%. As much as 68% are using it once in a week. Less than half of that in the 45 to 54 category are using it. 62% of 18 to 44-year-olds say they trust AI. That number is below 32% for higher numbers. I guess the last kind of interesting thing on that note is a large portion of our respondents said the more they know about a stock, the more likely they are to trade on that stock. And so reading between the lines a little bit, I think you're seeing a lot of this demographic both using this technology to think about how to plan, how to perform their
Come on now, get back up there.
Expectations on their professional investment managers are actually increasing as a result of that.
So, I mean, when they are using this for finance, it's stock picking and balancing their personal income and such?
Yeah, ours was primarily focused on the investment and stock picking area. And so kind of on that note, you had something like 79% of respondents that stated they expected their wealth managers to be able to incorporate this into how they think about stocks. With as much as 35% saying that if their wealth manager was not using technology like this in their stock investing process, they may actually consider switching. So it was, for us, it was mostly to focus on how they're thinking about investing, and the trends were really interesting.
And how many of the finance managers are, because he said they prefer an advisor who's actually using both the traditional methods and AI, how many, is there any way to sort of survey how many of the finance, you know, basically your broker, how many of them are actually using AI or learning to use AI? Is that growing fast?
I'll say from our standpoint, we've seen, you know, that segment in our business as much as triple over the past few years. But it's still, I think, very, very early innings. I think there's a lot of room for that to grow. So no, I think there is a big demand shift here, where you've got a lot of younger, richer folks that, I guess basically the younger you are, the richer you are. the more likely you are to use AI. And as assets are transferring to that generation, I think there actually is a bit of a gap in how investment managers are thinking about trying to tackle different types of problems.
That where he gets stopped out.
70% of the 18 to 40-year-olds with 100,000 plus in personal income, it's important for them that their advisor is using AI. Why do they say that? I mean, do they feel like AI is going to make them more money? Has it been proven to do so?
Okay, I'm about ready to get out of here.
The key thing is, if you're using this technology to increase your own informational base, if you understand more about the stocks you're looking at and what's happening at more of a macro level, and you're turning to a wealth advisor to act as a professional and give you advice you can't get anywhere else, then the expectations on the quality of the advice you're going to receive and the kind of information they have is actually going to increase as well. So it's kind of, if this is part of my workflow, this is part of how I'm thinking about the world, I'm expecting people I work with to be thinking in a similar way or to be using similar kinds of technology, but probably a little bit better than what I as a consumer have access to.
Yeah. There were some concerns, 3 big concerns here. Do you want to go through some of the concerns people had when it came to AI?
Yeah, so this was really interesting too. Again, about 68% of young people said they trust AI. So it's 38% people 45 or older. So number one, there's just a huge trust gap between generations. I think the other thing that was really interesting though is the types of concerns that happened were very different. Both generations tended to be a little bit worried about job replacement, but the older generations were much more concerned about privacy and loss of personal information and things like that. Whereas the 18 to 44-year-old segment, that was not very much of a concern. Their primary concern was really just related to job loss and things like that.
Yeah, understood. Security concerns, even hacking. That is something I think that a lot of folks, and it's funny how the older folks are more concerned with their personal information. You know, why do you think that the younger folks
140.
don't see, I mean, you know, maybe they just don't hear as many stories about identities being stolen and hacked? I mean, how do you have this disparity? Are they just bigger risk takers, maybe?
I mean, I'm going to be a little more anecdotal here just speak as myself as a millennial, but, you know, much of our generation, we've grown up with both huge amounts of information being blasted at us and huge amounts of information being extracted from us. In fact, in many ways, this was the generation that first started using social media, first started engaging and interacting with, you know, different types of apps where you're putting personal information. So I think it's the fact that we kind of grew up with it that's become a lot more normalized. And I think the corollary to that is because we grew up with it, we also became, I think, more aware of some of the problems and how to get around some of those problems. Whereas I think that, you know, again, targeting some older generations, it's the first time you're starting to see this technology used in the same level of sort of prolific level to attack people in more soft ways than historically. So I think it's mostly just the sort of era in which we grew up.
Yeah, understood. Well, it's very good to see you. I'm glad you were with us. Josh Pantone, CEO of Boosted.ai.
165.
Thank you for all the details there. Appreciate it. Thank you. So, folks, we have some breaking news on NVIDIA. I had mentioned it at the top of the hours, at the latest. It's down 3.3% is my point here. So it's under a little pressure. It's at 119 and change. And the breaking news here, according to a Bloomberg report, is Beijing urging Chinese companies to pick local AI chips over that of NVIDIA's. So that's big news there that we're continuing to follow here. And as we take a look at the minute by minute on this name in particular, we have seen NVIDIA sort of fall off over the last few minutes or so. It had been trading above 120 and now is at dropped down to 119.26, but is creeping back here on the way back. So China is urging local companies to use other chips other than NVIDIA chips. Very interesting development. This as the U.S. has added tariffs on Chinese goods as well. So you have a lot that's been happening here on the back and forth. So there's the latest story on that. So we'll continue to follow that between now and the closing bell as more details sort of emerge on that. In the meantime, we're going to take a look at the consumer because we did get a little bit better than expected consumer sentiment news today, but how are they really feeling? Are they feeling more optimistic? In the months ahead, what we need to know in a lower rate environment as well. We'll be right back.
Neil, how's my favorite client?
Quick question, Carl. Can you offer me the same choices as Schwab?
Choices?
Yeah. At Schwab, I can get full service wealth management.
2:15.
And
I'm gonna get out here.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Schwab.
Have a choice in how you invest with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange.
Good job.
Where we bring you breaking news, experts, CEOs,
I hit my trend line, so I'm gonna get
and
out.
analysts. It's all available on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to the watch list. We got a few economic prints today that were in focus. Of course, the PCE, that's the preferred inflation gauge that the Fed likes to look at, and that seemed okay. A little bit of cooling, and so with that, that gives the green light to the Fed to continue lowering rates. The consumer sentiment print was a little bit stronger, but we still continue to hear from a lot of companies that they are concerned about a more cautious consumer here in the U.S. So let's get some insights, what it means for the markets and what companies and how consumer behavior affects the big picture. Eddie Yoon is with us, partner, Grayspace, co-founder, Category Pirates, and Sarah Henry, portfolio manager, Logan Capital Management. Thanks to you both. I'm glad you're here. Sarah, what stood out to you in some of the data we've received most recently?
Well, I think today's number, in contrast to the consumer confidence numbers last week, reflect the optimism that's coming from lower inflation and lower rates that have moved in anticipation of lower funding costs, and also the signaling from the Fed that they're going to be responding to softening trends in the labor market. The survey did note respondents to this survey saw declining borrowing costs in the coming year, and that's leading to an improved view of buying conditions. So consumers are to some extent looking through the valley into next year.
Eddie, some of your thoughts. Thank you for that, Sarah. Do you feel that consumers are turning a little optimistic? Does one print tell you something or not necessarily?
Yeah, no, I agree with Sarah. I think there's two types of consumers writ large. There's the consumer that still believes in the American dream of I'm going to have kids, get married, buy a home, buy cars, and those consumers, for them, the lower interest rates make a big difference. You're already seeing that in some of the auto manufacturers. Tesla, as an example, should report a positive year-over-year growth for Q3 U.S. auto sales, which would be the first quarter in 2024 they had that. In part, that's because they've been able to lower the interest rates for their loans in anticipation of the rate cuts that are coming. And so you have homeowners who may be willing to switch out as rates continue to drop. Note that 62% of homeowners have a mortgage that's lower than 4%, so it's still going to take a little bit of time to work through the system. So that's kind of consumer A, the traditional one. Consumer B is somebody who is like, you know what, I'm not sure that my definition of the American dream is exactly that. Maybe I don't want to get married, maybe I don't want to have kids, and therefore, do I actually need to buy a home and buy a car and all those types of things? And these are the consumer, tends to be more Gen Z and millennial, that are living for experiences and not particularly interested in saving for retirement, and that's kind of what we're seeing in the marketplace.
Yeah, and you actually, just to expand on that, originally we were talking about the older folks that were looking for homes and cars and some of the things that seem to be on our minds. At the same time, you have other folks, maybe younger folks, that are, you mentioned DraftKings, Roblox, and Live Nation. How does that fit in, Eddie?
Oh yeah, I mean, it's behavior that, as a parent, I'm not sure that I endorse, but I recognize it is what it is. I mean, DraftKings up 50%. Year over year, 70% of their users are 18 to 35, and gambling is one level above a way of enjoying sports entertainment. Roblox up 70%, year over year, and that's how Gen Z is growing up, learning to live in a digital world as native digitals. And Live Nation, boy, up 36% year over year. That's a massive signal that people are like, my retirement may not ever come. I may plan to work through it, so I'm going to YOLO and live now. And concerts and gaming and entertainment is the way it's going to be for me.
Yeah. You noted, Sarah, that consumers are discerning on how they spend, and that it could take time for some of these rate cuts to really kick in. And you were most concerned about the folks making under $50,000. You looked at a group 35 to 54, a steep drop in confidence. Tell me a little bit more about that. How does that play out?
Yeah, so I think the narrative, certainly around this quarter, has been a value-seeking consumer. And companies that have a more flexible P&L are going to be able to deal with that. And some of that, frankly, is going to come from some job cuts. So we saw in the last
See how it pulled back and hit that
General
support
Motors announcing it would
on that
temporarily
snake?
lay off 2/3 of workers at an assembly plant in Kansas. We have the port workers that are the specter of a strike. We're probably going to see some jobs.
Today was definitely a flush day.
This hurricane. So, all over the place.
Some of these puts went up
have
tremendously.
consumers putting pressure on companies to deliver value and lower prices, and that had to happen. That was what was supposed to happen when the Fed raised rates. So we are definitely at that point in the cycle, and these lower income consumers do have fewer levers to pull, not as exposed to real estate, not as exposed to the stock market. So, as we look into next year and we see the impact of lower rates, these groups and these issues should become more mitigated with the Fed looking ahead. So
Hardly a flush day. It seemed like one.
Are evident with companies more and more able to use AI and lots of data to deliver exactly what consumers want at the price points that they need.
Yeah. And look, I mean, we all know people have been digging
7 points is pretty big, I think.
Retirement accounts, plan on working longer. Eddie, you have some specific numbers on that, and that's not so great, right?
Yeah, no, I think the horizon has dramatically changed. I mean, Bankrate is saying that 31% of consumers have, quote, rated their retirement savings in 24 just to be able to keep up with their expenses, and that Transamerica says 55% of consumers just expect to keep working after they retire. I think the idea for a certain cohort of consumers is that the American dream, this idea of nest building, is out of reach for them, and so why even bother? And the horizon is going to be, if I can't retire, And why am I saving and delaying gratification when I can enjoy my life right now? And so I think that consumer's actually been the one that's been propping up the GDP right now, as other people have been traditionally more rate sensitive.
I wonder how they'll keep working after they retire. You know, that sort of seems like, I don't know exactly how they're going to do that, but I understand the idea of it, the concept of it. I'll give you the final thought here, Sarah, because the next
Yesterday was the same thing, I guess.
This is the recession that hasn't happened. There are some guests who come on and say we're in a recession. What do you say?
I think that, I think the companies, certainly the ones that we look at with long histories of rising dividends throughout business cycles, are well positioned. We like Colgate.
I hope so too. I hope he wins.
We think all of these companies are well positioned to use data to endure different types of economic environments. So I think, we could barbell Eddie's portfolio and mine and come up with a sort of a cohesive view on there's different spots for growth, and the companies that have built out their ability to use data will be the winners in this environment.
Yeah.
Yeah, great to see you both. Eddie Yoon,
Dow Jones up 177.
Logan Capital Management.
God, look at that.
Thank you both very much for being here. That's going to do it for us here on the watch list. I'm Nicole Petalidi. So glad you're with us. Download our free Schwab
370.
app. It's available
Son of a
in the Apple
bitch.
App Store. 24/7, schwabnetwork.com. Market on Close with Oliver Reddick next.
This election season, stay out of the muck and the mudslinging with Schwab Network's by the numbers coverage of the presidential cycle.
How could this election
Oh, well.
impact your financial future?
Next week is
Oh, I get the. That's a different one.
election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
No, it ain't either.
Stay
Come
informed.
on.
Stay ahead. Tune in to our
Oh, 120 to $4. 490.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to
I just
just
left
make money.
almost
With a history,
$3,000 on the table.
How did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set.
It's
It is
disgusting.
incredibly competitive. And so if you really want to put yourself out there and test yourself.
I sat here and watched that thing go down and sold for a loss.
How are you exploiting human weaknesses? Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sit
My call didn't do no good, but
staggering amounts of data.
it wouldn't have mattered.
Context is so important. I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional
SPY would have mattered.
pathways, as if you don't have
No, it wouldn't have. I got out at
I'm
51.
not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for
It wouldn't have
over
mattered.
10 years
Not
now.
the SPY.
And it's almost second nature to me.
Do you think that this is potentially a
Nor the
huge
SPX. I mean, I sold both them at a loss.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It
to
is
the
going
upside.
crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Oh well. Today was a good learning lesson for me, that's for sure. It wasn't easy today until the very end, and then bam, bam, bam. I sit here all day long and watch them things go down, down, down. And so my defense was wait until power hour and make it all back plus, which I did. I was down $970. Then at the end of the day, I end up being up $1,000, but not in the trades that I was in. Not in the trades I was in. Now I've been eating so much grease, my face is starting to feel greasy. Butter, beef, butter, and eggs. And liver. But I've never felt like I've had so much energy in my life in a long time, man. I was just moving this morning. I don't know, where is Randy? Great job, Yoko. Randy! I doubled down, but I still sold for a loss. They didn't move. They didn't move. Once they were too far out of the money, they just wouldn't move. So I got back in closer to in the money. You get so far out of the money, I mean, and then later in the day, I mean, it's Friday. I mean, they're still at 15, 20 cents, the 57.60s. I took a good loss on that one. I had 5 contracts, so I wasn't really that bad, but when your average was 155. And if I'd have bought at the end of the day the same contracts, I still would have lost if they didn't move. So I had to get closer to the money. And right now they're right under, just one notch out of the money, the ones that I did get. They were 3 notches out, and that's as far as I'll go. What I mean by that, they were right down here, and they moved up to there, and the 65s are still at that. So I mean, these things didn't move. They'll be 0 by the time the bell rings. And they were down here 3 notches out of the money. I mean, I didn't have a chance. No, Randy is here. I just made a ton of money, Randy. $2,000 in Power Hour. Not even Power Hour. I'm done. I don't want to ruin it. I'll be right back. Today I find out how much I owe the IRS for my trading. I'm not going to be happy. Oh well. 25%. I think it's 25%. I'll find out. I made more money this year than I have probably any year that I've traded. Last year was good, but this year was better. Until the last couple of months where it got kind of hard. Well, I got an LLC. I'm allowed 3,000 for a loss. I can mark off 3,000. And I've probably lost that much this year, but made it back. Well, probably more than that. I don't know. Hope my accountant doesn't charge. I know one guy that, man, they charged him out the ass to do his paperwork. Just to do the paperwork. It seemed like a big flush day. I think it was a big flush because I got so beat up in them 2 trades. Then they wouldn't recover. And I got out of them right before this big knife. I don't know why I sold it, but I did. I was up, I mean, not even, but I was close. Both times here, when I hit the 200, I should have just got out of them all and still took a smaller loss. It'd only been like 500 there. $394 if I remember right. Okay, I'll be right back. I don't know, just wore out today.
You was talking to us yesterday.
Ain't been much fun, have I?
Which is, they really want to push their products now. They've kind of opened up Pandora's box a little bit and then sort of tried to close it for 2 years. It didn't really work. The economy was just doing awful. So now they don't really have a choice to try and open it back up a little bit and throw some liquidity in, try and get the action going.
Remember when the pandemic hit and China circled the wagons and protected their own homeland, that opened up that really set the dominoes falling about everyone just moving their production and hedging their bets in China and moving production away. Now China's trying to get all that production back by all the stimulus and luring financial companies back. I don't know if it's going to work. Would you? I wouldn't have all my chips in a China basket.
Fair enough. All right, fair enough. Okay, so that was a big story this week. No question about it.
Yep.
But I think also we're getting some answers to the point that we were discussing this week too, which is on the back of economic data. If you're a stock bull, do you root for higher yields or lower yields? And I feel like today is a point in my box, which has been, I've been saying root for higher yields. Because yesterday and then today we got stopped out at 3.8 again, and we made a lower low in yields. I mean, bonds are rallying pretty good, and stock market's not able to run with it. And it's kind of twisted. Because a lot of times now when we're getting these light inflation prints and bonds are rallying, the stock market's not really loving it.
A strong U.S. economy with slightly rising yields is the strongest version of the U.S. economy.
I'm with you.
However, the second that strong yields go to spiking yields,
right,
stocks get uncertain and stocks get jumpy.
But that's,
I think there's. Well, let's face it, Oliver. We're walking tightropes all over the place.
Sure.
Interest rate cuts, is that because the economy is inflation is a good spot, or do you think the labor market needs it? I think Jerome Powell has told us we don't have to look at inflation anymore. Guess what that does for next week and the economic data we're going to get next week? Enormous week for these markets. Because when you say it's about the labor market, you're about to get 4 readings on the labor market in 4 days. That's going to be pivotal.
Yeah, totally. Next week, good bit of data.
Yeah.
For us to see if yields can continue this creep higher. Definitely some pushback on it today.
The calendar means the end of earnings season. So then we got about 2.5 weeks till the start of the next earnings season.
All right. Thanks, Kev. Yep. Appreciate the thoughts. China stocks, the big winner of the week. S&P going to sit near records, but pretty calm and basically going into the last 50 minutes. So let's talk some bonds. There's a little action there. Rallying in treasuries, dropping the yield. Karen Vera joins us from BlackRock, head of iShares U.S. fixed income strategy. Karen, welcome back to the show.
Hi, Oliver. Thanks for having me.
So tell me about your read on the bond market since the Fed cut last week. Looks like we've gotten mostly yields higher, mostly a bearish steepening in the curve. What's that tell you?
So we're seeing a lot of investors who are still waiting on the sidelines to really get back into bonds in a meaningful way, with cash yields still remaining pretty high. We're seeing some people slowly starting to walk out those duration numbers. So AGG, our aggregate ETF, has been really popular, $15 billion into it year to date. And our favorite positioning right now is really making sure that you're having access to that belly of the curve. That's where we think you'll be most rewarded. And that's where we see people at 3 to 7 year sweet spot as a way to not get too much exposure to the long end, but at the same time, moving that duration out, locking in some of those yields today.
So which part of the duration spectrum, when you say you want to be in the middle, which one are you more avoiding, the short or the long? Is it that the duration risk is still there, or that there's just too much surprise factor maybe on what the Fed's going to do?
Yeah, I think we see that 75 basis point cut is pretty much priced in right now. If we end up getting some higher inflation data, that could slow it down. If we end up seeing the jobs data coming in where people expect, we'll probably really solidify that 75 basis points in. So I think so many people are already overexposed to ultra short exposures that they should think about getting ahead of those actual cuts and start moving out. Probably one of the biggest ways people are doing that is also with bond laddering. Our I-bonds lineup has seen about $7 billion in year to date. Most of that is between corporates and treasuries. And I think people are using that as treasury funds that really get exposure to the 3 to 7 year part of the curve, the 7 to 10. Those have absolutely been the most popular way to play it right now. So I think people who are just sitting in those ultra short exposures, we're already starting to see money market yields come down a bit. If you think about the way a money market fund is structured, it needs to keep a certain amount of liquidity within 7 business days. And some of those, as those bonds are starting to mature, they're repricing it lower. So we're starting to see yields move down on money market funds. But we do not see a lot of money move back into bonds in a big way until those yields really come down. So those portfolios will turn over and we'll start to see some money move out of money market funds.
Now, when that money does come out, how risk on does it go, or how stepwise is the process of seeing that filter into the market? Does it go into something in between, or does it just go pure risk if stocks are at highs? Now that kind of goes outside the fixed income bucket, but what's the mindset when folks are taking it out of the money market funds?
Yeah, we see two different mindsets. So some people are wanting to shoot for income. They're looking for risk on, seeing positive flows in categories like high yield, even emerging market debt, where we see other global central banks also easing, which is positive for liquidity there. So I think some of those income-seeking exposures are definitely popular right now, with people trying to add as much value as they can in bonds. Conversely, I think bonds are still a great hedge for the stock market. When we saw the first week of September is probably a great case study for this. S&P 500 down about 4% that week on the back of some jobs concern data, but bonds, as measured by the aggregate index, were up about 1.3.
XOM up again today.
At the highs
or up
of the
today.
stock market, their next move might be to diversify into some bonds just to add some buffer there.
Got it. As that's happening, your guys' fixed income business has gone past $1 trillion in assets across the world. So that's a lot of movement going around.
Huh, Tesla got back up there.
So $1 trillion into iShares bond ETFs. I think so many investors are now recognizing the efficiency of the wrapper, the fact that it's transparent, you can trade it, low cost, and you can really be precise with those fixed income allocations. And then this year, we've really seen the rise of actively managed exposures where you can get the same benefits of the wrapper, but at the same time get some active insights from active portfolio managers. So I think our BlackRock Flexible Income Fund, BINC, has just crossed also $5 billion as people are looking for Rick Reeder's PM team to manage some of those riskier asset classes.
BINC up almost 3% on the year, so you've gotten quite a nice little bonus there. If you've replaced your duration or your treasury trade with that, it's been a pretty nice steady climb there. What's been kind of the secret sauce or the main winner that's been driving that performance, Karen?
I think the fact that it is flexible, we had a pretty big exposure to investment grade corporate bonds in the portfolio. Then as spreads were tightened, we were able to rotate out of that and get into some other categories that still maintained yield. Think collateralized loan obligations, some more high yield bonds. And so I think it's just been a way that, when we see the opportunities, the fund is able to change positioning and keep up with the relative value of different parts of the market. So we're seeing people bolt this on alongside some of their core and core plus exposures as a way to just add some income while trying to avoid some drawdown risk in the market.
Okay. Thinking about the future, the rest of this year, and pricing out what the Fed does, the role that plays, Karen, after they did the 50 basis points, is the thought process that our terminal rate should come up a little bit if that's going to help the economy, or you more take the side that it's a signaling method that they're going to be pretty aggressive and that we should prepare for more of the same, big chunky cuts?
I think at least the November cut is probably likely to be more chunky. About almost 50 basis points is being priced in right now, so there's a little bit of uncertainty if they just do 25. But they want to move that back down into more accommodative territory. So if they do 50 and then 25 at the December meeting, that puts us in about a 4% range. Long term, they still want to get the Fed funds target rate down to about 2.8%. But when you really take a look at the dot plot, there's so much dispersion in the Fed governor's views that it really is going to be data dependent. But I think they want to get that Fed funds target rate down. They're trying to engineer the soft landing. And even the unemployment rate next week, 4.2 is the last print. The Summer of Economic Projections indicated labor market could increase the unemployment rate up to 4.4. So I think next week will be really telling to see if it hangs in there or if it goes beyond their target.
Okay. So thinking about economic data, I would guess then going forward, if economic data firms up, then we do get yields to continue their creep. Is there any potential for reflationary regimes? How low did those odds drop with today's inflation data and generally the trend, Karen? Can we put that risk aside? I mean, I know you mentioned about the duration elements that, you're aware of it, you're thinking about it, but, if we had to quantify it, how certain are we that the worst, inflation is behind us and we're not going to have another big run-up?
I think it's solidly moving in the right direction with today's core PE CE print at 2.7. So what we tend to see is the data is lagging, so that number's coming down in the right direction. But I think with mortgage rates still high, that puts pressure on housing. We'll see how oil does. That puts pressure on energy prices that can transmit throughout the economy. So I don't think we're out of the woods yet, but I do think if inflation kind of gets back down in that 2.5% range that they're expecting, the Fed funds rate, even at 4.5% to 4% is still a little bit too high. So I think they want to converge those two levels on top of each other.
Okay. Great stuff. Karen, thanks for the rundown of what you guys see in the money flows. A lot of money moving around, so we appreciate the insight.
Thank you.
Absolutely. $1 trillion in the fixed income category at BlackRock. Karen Vera, head of iShares U.S. Fixed Income, coming up. Let's talk some stock picks as we get into some fun ways to trade, as well as some levered ETFs that are pretty popular. By the way, haven't really talked much about the weight loss stuff in the last couple weeks because it's been so Fed focused, but a little bit of air has come out with Eli Lilly down another 3%. We'll talk about ways to buy the dip for those interested.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Welcome back to Market on Close. Let's talk some ETFs with Sylvia Jablonski, the CEO and Chief Investment Officer at Defiance ETFs. Sylvia, good to see you again. Welcome back.
Oliver, great to be here. Good to see you too.
Let's talk some funds. Let's talk some levered funds because you've got some fun ones. And let's go for something that's up today since we got strength in crypto and Bitcoin. MSTR, MicroStrategy, up 5%. I think you guys are getting some pretty nice flows on your levered fund, right?
Yeah, it sure looks like it. So, the fund's been out for a few weeks now, and it's over 300 million in assets.
Wow.
Actually nearing 400 million in assets as we sit here. But I think crypto has obviously become wildly popular in markets. It was popular when it was just something that you combine in a digital wallet, and then you had these ETFs come out and billions of dollars flowing into that, whether they were levered or single name. And we were kind of looking at this and thinking, MicroStrategy is a crypto play, right? MicroStrategy is almost Bitcoin. If you look back historically, sometimes it's trading to the tune of 2x, 3x, 6x, Bitcoin. And, we know the story there, right? They have billions of dollars on the balance sheet of crypto exposure. So, what do I want? My whatever $1,000, $2,000 of my own exposure, or to buy a company that has billions of dollars of exposure if I have high conviction. And so now lever that up, you've had a lot of interest in this product for that reason. It's just a great proxy for crypto.
It's pretty amazing that folks, I'm not amazing, I'm not surprised. This is kind of what you use this category for, in my opinion, basically pure speculation. But the fact that you then want to get leverage on something that's already like a very high beta version, I guess it makes sense. Why not go for the most, bang for your buck if we're going to go into that category of kind of like high beta trades?
Yeah, and especially if you're a tactical trader, right? And you're looking at this thing every day. So that's one thing that we always like to say as well, right? These aren't meant to just kind of be forgotten about. It's not a set it and forget it product. They're for active traders that look at their position every single day and make a decision for the next day in terms of like what volatility will be, what the trend will be. But yeah, in terms of like short-term tactical trading, I mean, I think it's a great way to get exposure to crypto in the short term. So it's worked out quite well.
Yeah, rock and rolling. All right, MSTX. You said you're getting to almost 400 million since it launched in August?
Yep.
Wow.
Just about that. We're about 20 million shy of that, but I mean, I can just tell you that we were getting a press release ready to announce that it hit 300 million, and then, in the last couple of days, you get another 40-50 million in. So it's moving quite a lot.
It's like doing better than the whole Ethereum suite of ETFs. I guess maybe only like the Bitcoin ETF, something crypto related in public markets and stocks that's done so well.
Yeah, and I wondered, I hadn't thought about it this way before, but I think, the ETF kind of solved the problem of institutions not being able to buy crypto and holding digital wallets and managing that whole side of it. There was this convenience factor. But then I thought about it even more, even if you have Bitcoin in an ETF, a lot of institutions are going to take their time before they actually approve and do the due diligence and say, yes, advisors, you can use this stuff. But MicroStrategy is kind of like a plain old stock that trades on the exchange, right? And so I think that there's more comfort on the institutional side with buying a semiconductor company that has crypto exposure than there is buying crypto. And I think that's got to be, a major reason as well as in terms.
Well.
And just the last few weeks seems like we've been talking at least here with the macro and the Fed and the China and all the AI stuff. It's like kind of the obesity trades kind of drifted to the back a little bit.
Yeah, and I think, that whole thing will turn around when we're back in the next earnings season again, and everyone's talking about, Zepbound and Ozempic and Wegovy and all these other drugs. But this is a stock that it's a good story anyway. Even prior to Zepbound, I mean, they have awesome revenues on Mounjaro. They've been consistently beating earnings. They pay a nice dividend. I think the macro story is just good right now for these pharma companies, right? You have an aging baby boomer population. They're defensive in nature. When the market's, wonky, they tend to hold up, right? And again, like, people love their dividend. And so I think now enter the weight loss phenomenon, and the take up of that has just been insane, really. And a lot of the analysts on this stock have it priced over $1,000. So it's kind of trading well below that. And so if you leverage this one actually has less volatility. So we tend to see, again, tactical product, and it's important to understand that leveraging range-bound volatile markets can lead to substantial losses. But in trending markets with low volatility, if you kind of get that off of one of these dips, the levered ETF anyway can get you some decent amount of outperformance there for a short tactical trade.
All right. Same thing, LLYX. Oh, I think it's interesting that you guys also have Broadcom in the mix, which is kind of a fun one that maybe goes a little underappreciated in the AI trade, but has been battling to get to a high basically since the summer. What kind of interest are you seeing in taking leverage here? Because this seems like a little different. Where like Eli Lilly, MicroStrategy kind of naturally are swingy and higher beta, whereas Broadcom's been a little bit more kind of stuck. So it's like, if you want to go for leverage here, maybe that's a way to boost, kind of the slower returns we've gotten so far.
Yeah, and that's a great way to look at it. That's the way we thought about it too. We thought that of the semiconductor stocks anyway, it tends to be on, kind of like the safer,
right,
market cap type of play. And they're involved in everything, right? They're part of 6G, they're part of Broadcom, they're part of data centers, major player in the AI build out, but they kind of do different things than NVIDIA does. And so they can compete as AI grows. And, I think we know the story there, right? In the next 10, 20 years, we're expecting 35% or so compound annual growth rate in AI, and you take your top players, and so that's why we put that one into the market. We just thought it would be super interesting as people start to think about, well, what else besides NVIDIA?
Yeah, the other ones are kind of like, all right, this thing moves a lot. I really want to get extra. And then Broadcom is like, this thing needs a little gas, a little push. So that's a fun way to kind of literally lever it up. And if it breaks out, then obviously get a little extra bang for your buck. Love it. Thanks for the update, Sylvia. Always appreciate it.
Thanks, Oliver. Have a great weekend. Thank you.
And congrats on the big MSTR flows. That's huge. Getting to 400 million, less than like 2 months. Sylvia Jablonski, CEO, Chief Investment Officer of Defiance ETFs. All right. When we come back, options, flows, and levels. Thinking about next week, in addition to, of course, the next half hour. KG up next.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full...
It's not, I don't think it's actually connected to my LLC. I do my LLC in my business, and then my regular taxes go under my real name. But I think it's 25%. I thought about doing it because I think I could call it a business if I wanted to. I work full time doing it, trading stocks. I'm sitting here 8 hours a day. And then I look at them on the weekend. I don't know, I might ask her this time around. But I know my personal taxes is affiliated with my LLC, but I get a W-2 form now. When I didn't have a W-2 form, my taxes was 49%. So I had to do something. I switched it. I can't remember what year it was. 2015 maybe. I turned it into an LLC. So one year I couldn't believe the taxes I had to pay 1 year. I said, I ain't doing this no more. During the Obama years, I didn't mind being but I did some homework, and now I can write everything off and that I have an LLC. I haven't been audited yet, thank God. Knock on wood. I've been audited twice during the Clinton years because I had a business then too. I was a picture frame gallery. And Bill Clinton did the same thing Biden did, increase the IRS. Said the same thing. We're not going after the small people. They end up going after me, and I was making 60 grand a year. $1994. And then I opened this business up that I got now in 2004. 1991 was when I opened up. I had that business for about 4 years. And I got audited twice, and I said, I can't do this anymore, man. And then the same thing's happening here, I think, with Biden. I've been getting letters and shit. If I'm late, they'll penalize me a month. If I'm a month late. And paying my quarterlies. So I called today just to find out if I was caught up. With the unemployment in a way. Because I had 2 letters sitting around here and I said, oh boy, I hope I don't know these. It's all messed up. They got new people working at the IRS. You don't have to have a really, I guess you do if you're into the accounting part. You have to have a fairly good education, but you make good money, but it's a tough job. You got to learn. I noticed one thing. I do cleaning for the IRS, so I know I listen to them talk, and they can right now they can go anywhere they want because of all the money that they're getting. They can move around. They go to meetings and stay a week or 2 and then come back, and it's like a mini vacation. They get 11 holidays, and a lot of them are like 3-day weekends. So most of them land on a Friday or a Monday. Let's say a holiday was on Sunday, they'd take Monday off. And they're picky as hell right now. They hired a guy just to go around and test the water at all the shops, all the businesses. He just goes around and tests the water, makes $60,000 a year. Flies, gets to fly there, get to fly here. They were real tight before. They got a big pay increase. 20% pay increase this year. If you work for the government, you more or less got it made. I got one girl fired though. This chick, I'd go in there and clean, and I was so intimidated. She was like a sergeant in the Army, so she was big and hated men. And I missed her trash every once in a while, and I took her keys one time, didn't know it, put them in my pocket. She hated me, so I come in there one day and I missed her trash, and she come up to me and took that trash and threw it down on my feet. And I called her a bitch. I said, "You're nothing but a bitch." Well, she stomped off. And the guy from the IRS called me up and he said, "Jim, let me ask you a question. Did you think about grabbing her and punching her?" I said, "What?" "No." He was trying to get something out of me. I said, "No, I mean, she's just mean." I don't know, I never thought about that. I just was disgusted. I called her a bitch. I said I held it back for almost a year. And finally I couldn't take it anymore. And then about 2 weeks later, she got fired. And it's hard to fire anybody when you work for the government. Well, I don't think I was the only one that complained, though. But she was definitely, I mean, she could probably whip me. 240, 50 pounder. Just big. Not fat, but I mean, a little overweight, but just. Can't believe these 575s did that to me. Oh no, I'm fine. I keep thinking I got out at a cheaper price. We're back here to the right shoulder one more time, so it's probably going to bounce. What time is it? Yeah, it's too late to even think about it. I don't know what that's all about. I got some guy named here. I did a chart today. I'm going to type this in. So this morning I put this chart in here and I give my supports. And we knifed, we went on down. So I typed in, I think we are a little frothy today. And this Jedi trader comes in here and says, what you think doesn't matter, only what the market thinks matters. You're not a trader if you can't predict. I mean, you're going in here blind if you don't have some kind of idea how you feel being in the now. That's part of my strategy. Chart patterns, moving averages, and being in the now. So what I think does matter, when I come in here and I sit at this desk and I try to talk, ideas and stuff, I feel like blocking this dude. I should type it in or you're about to get blocked. I don't follow this dick lick anyway. Hot Rod's got 15 followers and he follows 36. He better not be following me. I will block him. Better slap him. Every time I come in here and I spend the weekend and I study, and then I try to sit here in the morning and I listen to it all morning when I'm at work. So I come up with some kind of conclusion how the market's going to be that day. And I do believe we're a little frothy into the election. He smarts off one more time, I'll get it. I'll smack him around a little bit. I don't like people like that. I'm gonna block him in a way. What time he do this? 3:45 a.m. Blocked. That hit me in the wrong spot. Blocked.
Decisive change in tone by policymakers. We had, multiple agencies involved. We had a live press conference, pledges not only about current rate cuts but also future rate cuts. Monetary stimulus really dominated the announcements, but fiscal support has had, they mentioned some things, but there wasn't a lot of details, a little bit more general in nature. And the reason that is important is because, lower rates alone is unlikely to fix what ails China's economy, which is weak confidence. If you're not, a lower rate isn't going to make you want to borrow if your confidence is weak. So, confidence could get a boost from this gain in the stock market and lower mortgage payments. And we know Chinese stocks are still inexpensively valued, just 10 times next 12 months earnings. And, in the past, when we've had policy changes, the stocks have rallied from, 20 to 60%. We've already had 20%, so, maybe a little caution is warranted. For staying power, we really need to see more details on how Beijing plans to stop the decline in the housing market. And consumers are going to want to see more hopes of improvement in job prospects and incomes. And so we're going to be watching, evidence of follow-through in the timing, scale, and duration of support. Probably within the next few weeks, we're going to need that for the rally not to fizzle out.
The thought prior to this was that rate cuts didn't strike us as kind of the obvious solution to China's problems, given that the rest of the world's kind of dealing with inflation problems and having to battle it. China's been in a kind of a more structural kind of slowdown. Why do you think they decided to go this route? Everybody else doing it, why not?
3 more minutes.
Housing market support back in May, and there was a lot of hopes around that, but there really wasn't a lot of money behind it, and the source for the way that the transmission mechanism was going to work was through local governments spending money, and local governments, their budgets, their ability to spend is weakened. So that wasn't really going to work. So we kind of need to see more details and follow through for the rally to last.
Okay. And in terms of the demand quotient, does this really change in your mind the activity in China and the need for basic commodities, inputs? Is there an inflationary implication, or are they coming off such a low level that that's going to be a muted impact? Do you think about that, Michelle, and whether or not it's going to spur real demand?
Yeah, the way that China has in the past put stimulus to work is by the government spending on infrastructure. That seems to be their default way of going about stimulus, and so it's possible to see that again. So there could be some demand for commodities. I'm not sure that there's going to be perhaps as much as the market seems to be pricing in. As far as consumers, consumer confidence is still very weak. It's really been hurt by kind of the scarring from zero COVID policies and the lack of a social safety net for consumers. They, during the lockdowns of 2022, they lost income, lost jobs, and they're still a little hesitant to spend. So we'll see how that unfolds for their economy.
All right. Blast of stimulus and a huge rally as a result. Thanks for helping us break it down, Michelle. Big story for the week. Very helpful. Michelle Gibley, Director of International Research at Charles Schwab. 90 seconds till the bell. Wrap it up for the week. We'll see you on the other side. Talking some discussion with our closers panel. Be right back.
Do.
Trading at Schwab is now powered by Ameritrade.
One more
Giving
minute.
traders even more ways to sharpen their skills with tailored
Well, less than that.
Get an expanding library filled with new online videos, webcasts.
Well, let's have a little recap here of what happened this week. Definitely frothy week. We had a real good week. Well, not frothy, I mean a good bounce. And we'll go to the SPY. So we kind of laid low this week, I think, with the SPY. Kind of consolidated. Hey, what am I doing? What was that? Kind of had a sideways a lot of other stocks popped. Definitely. We had a real good pre-market run here, and most of the days we pulled back. We just kind of flat all week long. Then we had that big pre-market run. We shorted that, but it all hung out there at the 63. Now this is on the 1 hour time frame, so we'll probably come down here and hit the 200 next week and bounce off of it. But I want to illustrate here in the weekly, not the weekly, but the daily. The weekly, we held above the last week, so that's good. And we have 3 white soldiers. Every time we have 3 white soldiers, we have a little pullback. Not every time, but 3 black crows, 3 black crows. We could have another one back to the 21 and then just start all over again. But this month's been, was a pretty rough month at the beginning. We had that, and then the last 3 weeks were green. But if you look at the daily, you can see that something was going on a little different here because we had small little bitty days. Each one of these represent a day. And they weren't nothing like these candles here. So we can bounce off the 9 next week, or we come down and hit the 21 or the 63 in that order. Or we go ahead and break resistance all-time highs. SPX. These are the dailies. We had a nice little pop off of it. And then we consolidated each pop. So we could come back and hit the 9 and bounce off the 9 again. We did create a new high. But we're going to see what happens this weekend with World War III if somebody doesn't get nuked. I'm still worried about that. I don't think Iran wants to get into it because they don't have the defense system to get bombarded. But eventually they're going to end up blowing Israel off the map. So we need Trump in there to bring peace. They kept ratting on about Trump going to take us to war, and he had peace. 4 years of no wars. He got rid of ISIS within a couple of months. It don't take much. Just have some serious talks instead of being, appeasing and sending them money. And every time we send them money, this is the kind of backlash we get. Iran's rich right now with oil. And we're producing more oil than we ever have. So nothing makes sense. I don't mind the oil being produced. So we'll come in Monday and see how the market feels. And I'll determine how I feel then, if we're going to pull back, hear the weekend news. Plus, we're getting real close to that election. And it is the end of the month coming up, so people might have just want to be clearing out their accounts and repositioning. They keep China. We got starting to move. We'll have to consolidate that huge run. That was a big run in China this week. And they think they're just following the United States because we're cutting rates now, but things were cheap. Baba made above 100 now. And they keep talking about small caps. Tommy Lee said that small caps were going to bounce, and they dipped. And then today they had a good little run. So I'm going to get out of here and enjoy the rest of my time off, watch some videos, go for a walk. And this market's kind of stressing me out here at these all-time highs. I'm not used to trading like this. I like catching support and then buying at support. But every time we break a new high, I'm just going. The only thing I can think of is shorting the market. And that's what's been working. I mean, the market's been dipping on these. Every time we break out, it pulls back. It was vice versa. When we pulled back, we break to the upside. So I wish everybody a great weekend. And be good. Hit the like button.